I think the size and scale which we've seen from the DMT and APs of the world, I personally think that a combination of trust and the stack, could mean that, we're going to create a category which could be far bigger, than either of these two things. I think that's the point which I would want to sort of make.
Thank you, Ganesh. Anand, do you have? Contrary view?
No contrary view. Actually, this is all alignment. And actually, you will remember, Sunil, we started our journey with a focus on retailer Sashakti-karan. We wanted to put the coronation of financial inclusion, that Taj on his back, and we realized uski backbone rupture ho rahi hai. The DMart of the big basket of the world had already come in 5 years ago when we were leaving the bank. And we realized for him to do our job, we need to ensure that his backbone is resurrected and strengthened. And hence we worked on our own version of ONDC 5 years ago, for which we bagged a patent last year. We already have demonstrated, tested, taking the high end of technology to the bottom of the pyramid. Through these million-plus retailers, we have experimented even partnerships with e-commerce companies like Amazon, ITC, Big Basket, Apollo Pharmacy. This thing works. The fact that their credibility has risen to a very high standard, people trust them. And I would say that retailing ke maine badal jayenge. The shelf will have no meaning now because it's the trust of the retailer that he will stand there. And it is about the moment where one asks, kya milega? Sab kuch milega. That trust is what will bring everything from Ammi Jaan ke godam se leke aapko banking ka trust sachetized, sab kuch mil raha hoga. And ONDC is a framework which enables, Sanjeev said it right, that can my million retailers help the next 10 million retailers next door to ride on to this? Not everyone will be as conducive. Not everyone, for everyone will it be viable. But everyone has an opportunity to rise onto the same platter, Sunil.
Thank you. Mahesh.
I have a small experience in this space. We tried the near shop. That means try to connect all the nearby neighboring shops, and then people should be able to get something. And when the ONDC came in, we obviously followed that, and we went back to the shops and we said, okay, why don't you join this ONDC framework? The biggest challenge that came up is the cash and the GST. That means the guy who is doing a small shop of, let's say, 10 lakh or 20 lakh per annum, the ONDC required the GST registration to onboard. And we couldn't onboard even the city of the Bangalore. We were looking at the small kirana only. We were not going to the very specific like restaurants and others. And we found it very difficult to get them. So we said, okay, let's create a marketplace. You don't worry about the GST. We will get an intermediary who will carry out your work, actually, and plus the return of the material. Because e-commerce requires that freedom that the customer can return the material if he doesn't want. And the ONDC protocol required the 10% money to be retained before. So the sellers were not willing to accept that. So these are the two problems which led to the marketplace coming in. So what we believe that the ONDC protocol guys, the government, will look at these two things, and instead of emerging another brokerage in between, that is a marketplace, right? It should perhaps allow that also to exist, and these two problems solved. I'm sure that what Anand is saying and what all others are saying, this is a new big thing like OKIN protocol. That your digital landing protocol. This is the next big thing in my opinion.
Thank you. I think for this subject, I must ask Shashi and Ganesh also. So Ganesh.
I had a different view on this. So remember, we are taking a bank to a BC. We are not taking a BC to a bank. Yeah, it's a complicated stuff. So I think we got to be a bit guarded here. Multi-skill, multitasking, good to talk, but you got to understand the limited skill of a BC while taking all these products. And we have seen, some of these products like lending, or the insurance for that matter. The after-sales service, in lending you have collection, on insurance you have claims. It's pretty laborious. You can't sell a dream there, so we got to be a little guarded while giving all these products. So that's what from my experience.
Yeah, I agree. So there's one more thing. See, I think we should, when we call about BC agents, I want to reservedly say that, all the loan officers that are running around in the country, including the MFI and loan officers, should be counted, technically as business correspondents. They are corresponding business on behalf of banks or lenders or financial institutions at the doorstep of customers, and these are moving agents. They go to the customer's household, literally. And that is a much better service than someone sitting in a shop and expecting to come to find them. I think let's not just count only the fixed agents as agents. Moving agents are also agents. That's point number one. Point number two, the trust factor is much more than someone who is actually visiting your house and doing a service, and that to a credit service. Because credit is what is valued more by customers, because that is the most needed service, perceivably so. I know other services are even more needed, but from a customer perspective, credit makes sense. Now layering that on ONDC kind of a product on the top of it. While Ganesh's caution is quite valid, I see most of the customers we deal with are also sellers. They're not just buyers. And especially from a lending perspective, we lend for small businesses. Generally they are supposed to consume it for some income generation activity, and they sell something. And now this can be a revolution to help them actually come on an ecosystem where they can actually sell their produce. It can be a farmer, it can be a small shopkeeper, and then try and take benefit of a larger market that is probably beyond their village. That is one aspect of it. This also gives them access to better credit opportunities, because now they are digitizing their sales, which also gives better visibility of their business, hence better access to credit. That is the second part of it. So sell better, borrow better, and then when you borrow and you sell and you're visible, you also pay better, because then there is that aspect of credit scores, and then, of course, ability to pay also goes up because now their markets have expanded and they're much larger. So theoretically speaking, this loop of sell better, borrow better, and pay better can propel the economy, in my opinion. That's where ONDC helps in this particular segment more than buying, in my mind. Because buying can be done today also. Amazon delivers a product in a village also today. There are hardly any pin codes that are left out by Amazon or Flipkart. But the thing is, they don't necessarily buy from these people. Hence, the goods are coming from towns to villages. Rather, the lot of produce happens in villages, which can also be sold back in towns, which actually is the biggest missing link, which I think ONDC fills with the help of these assisted, both fixed and moving agents. This can be made possible with all due respect to the caution that Ganesh really posed. Thank you.
Yeah, absolutely, Shashi. I fully agree with you, and I think jury is still out. The fundamental question around customer experience, after sales service, etc., will be questions which will be there and will not be solved overnight. But yes, the fact that somebody has option to sell, which was not existing earlier, and has equal opportunity. When I was working for Motorola, it was called an equal opportunity employer. So here we are talking about an equal opportunity selling opportunity available to this. So clearly it is very, very powerful. So UPI, account aggregator, ONDC are the three very disruptive innovation, all coming from different stacks. And I am personally very bullish about it. Of course, we will have those challenges. The last one which I want to talk about is the fact that when we talk about neobank or digital bank, again, we are talking about the first 150 million customer. They have all kinds of cards, they have all kinds of bank accounts, they can do everything, they can do wealth management, etc. What about the next 300 million? So the question to the panelist is that, can BC, which is called for the last 4-5 years through a regulatory guidance, that it's a banking outlet, can BC be the first step to neo-banking for the next 300 million? And this I will ask first from Ganesh.
If you define a neobank as something which, as a platform, where consumers can, in a fully digital manner, have complete control of all their financial transactions they want to do in a fully safe and secure manner, I think that's what a BC agent or a BC platform offers today. Whether it is opening a bank account or buying an insurance product or a cash deposit or cash withdrawal, which are serious financial services transactions, or whether it is, booking a ticket, or booking a train ticket or a flight ticket or a bus ticket, by telling the BC, saying, listen, I want to go from place A to place B, can you give me what the best options are? Okay, fine, please book this ticket. This is the cash, and I immediately get an SMS with the details of the ticket. I think, all of these are things which happen even today. I think the objective really with which all of us will need to sort of do is to how do we A, standardize the experience which customers have, and B, how do we make sure that we do it at scale? We anyway do it at scale for things like DMT and AEPS. The question really is how do we, for example, on things like utility payments, how do we make sure that a customer doesn't need to walk across to the utility branch? Today, for example, for us, more than 70% of the utility bill payments we do in the offline space happen in Tier 5 and Tier 6 markets, which is villages with less than 5,000 population. Now, the question really is how do we make sure that we do it at scale for all of us and not just in a particular market and industry? I think the moment we sort of get there, I genuinely believe that that moment would have arrived, Sunil.
Thank you, Ganesh. I'll just have one more from Sanjeev on neo-banking, and then I'll put it to question answer.
No, so I agree. I think on the concept of the only piece that I think I definitely want to add is when I look at neo-banking and I look at a rural consumer, I think the opportunity is keep offering ability to offer all banking financial services to that consumer from different banking partners or financial service partners, which also means I continue to say an open architecture and these banking outlets, how can they be seen as extended arms of banks, financial services, right? I think that is where is the larger opportunity in my mind. And I think that is where I think there's a lot of work needs to be done on how we collaborate with all banks, financial services, how these outlets are seen as extended arms for everyone. Because that's the only way you can get the next 300 million or 500 million into the formal banking and financial services. So that's my answer. There is an opportunity. There's a big opportunity here.
Thank you. One more from Shashi.
Just in a lighter note, Neo is a bit abused word, I believe. Neo, in my mind, is no employees on rolls. But you can have others, do the services for you, like BC agents. They are also physical points. When they say Neo, it's 100% digital. I think that's a bit utopian for the customer base that we're talking about. Assistance is still a critical piece. So let's not, believe Neo is, Neo means new in simple terms. So people kind of tend to believe that everything can happen in the cloud. But I think we need to recognize that not having employees on rolls doesn't mean that it's 100% digital. It is actually a touch point that is created by somebody like BC.
Yeah,
So.
yeah, thank you, Shashi, for coining a new term for neo-banking. I would say that, one of the service that potentially can be a very big game changer is that today you have UPI onboarding requires ATM card or debit card. And if you use biometric to authorize UPI, that would probably add more customers than what the first 150 million have added. And if you do that, and then now feature phone is on UPI, so you pretty much have covered everybody without needing the debit card or ATM card for authentication. So this is something that is clearly possible to do, and Neobank, BC as Neobank, can help that to onboard UPI across the entire 922 million bank accounts. So for this great discussion, I'll now open up the session for Q&A. Anybody who wants to have a question may raise his hand. And yeah, so first Vivek.
So, my question is mix and match. So we discussed APS DMT, what next?
Please take a mic, please.
So the question is, we discussed the APS DMT, what next? And the UPI, the number of transactions is increasing day by day. See, if the UPI is increasing day by day, it means consumer himself or herself is using the B2C platform. If the UPI numbers are increasing, what will be the scope of BC model in next 5 to 10 years? Because this question is coming in many discussions with us. See, I know few of the answers, but I need expert advice so that I can increase my knowledge.
So who can answer? Sanjeev?
Okay, so multiple layers of answers to this question, but question is, what is the horizon you want to see? Okay, we're talking of, so if even, let's go one by one. First question that comes to it, rural will also go digital, right? So how do you support an assisted services model in an environment where the world is going to go digital? The question is, how soon can it go? And how big is that segment? Right? So for example, if you go deeper into this, we talk of 46 crore Jan-Dhan accounts. Question is, how many of them use UPI? According to our analysis, not more than 5 crore. So today, 5 crore consumers use UPI in rural. Now, what is the segment which is still exposed, and why is the adoption not happening? So I think the journey, there are two things that's going to happen. One is, yes, we got to be prepared for rural going digital, and it is going to happen. Second, I still feel that there will be services like today that Urban India does. Not all products and services have gone completely digital. Right? There are services which you need assistance, and I think that both models, according to me, will coexist, and there'll be different segments of consumers who will also coexist over the next 5 to 10 years. So that's my answer, Vivek.
Can I add a couple of things?
Yeah,
I think over the last 5 to 7 years, there have been two big disruptions which have tried to remove cash from the economy. One was demonetization, second was COVID. Despite all of that today, cash in circulation as a percentage of GDP, it's at an all-time high. Sorry?
September last year, 21 was high since independence.
Yeah, so I think there's 29 lakh crores of cash in circulation. So I don't see any issue on the BC or the fact that BCs need to deal with cash, because as humans, I think we are more comfortable with cash. Although of course digital is growing at much faster rates, but fact is that in the last 7 years, cash in circulation as a percentage of GDP is an all-time high, and that itself is an indicator that the future is really, really bright.
Thank you, Ganesh. I have time for only one more question. Ajay, please.
Hi, morning.
Just take it.
Morning. My name is Ajay. How we see it actually basically is actually distribution as a service, right? We don't see it as a BC. We don't see it as a DMA or a DSA, right? And when we skin it further, we realize that, there are different species. Retail is different, right? And we make multiple visits. A retailer really doesn't have time to actually talk to a customer because he'll always have 5 people standing in front of, his counter. And if I talk him, would you do a banking for me? He says, no, I would have employed somebody. Possibly my son, when he, passes out, I'll employ him for a banking. Now, the industry has been split on acquiring, one. Second, KYC, BS, BDA and all, $20 account payout. Now, if we really have to, create a distribution, I see, I think what I need advice from this August panel is on 2 things. One, how do you see capacity building, right? Because in case we have to upsell, right, a funded account, which would require customer to maintain $10,000 from the same set, right? How do you see that, playing out in next 5 years, right? To how do you shift from basic acquiring to, other value-added services, VAS, I would say that, right? So in case if we see distribution as a service, and I want to actually, go out in the market, what is it that we, at a very, broad level, do we see this industry to evolve next 5 years?
Great question. Anand?
Yeah. So it will be like 2 kilo आलू, 1 kilo प्याज, 500 रुपए कैश देना भैया. Banking के लिए अलग लाइन नहीं लगेगी, अलग टाइम नहीं होगा अजय. It's the same interaction. The merger of the grocery list is what will enable and is enabling a retailer. 1 महीने का OTT देना भैया, बाइक का इंश्योरेंस भी साथ में. So the grocery list has now expanded in distribution as a service. The retailer very clearly sees that banking has brought in extra footfall into his counter. How does he harness that extra footfall where someone has come to only withdraw cash is also ending up buying the grocery? The retailers who earn as meager as 250 rupees a month end up gaining 50 new customers whom he sells his other products to, and then builds his own Bharosa score, and then is eligible for borrowing from the partner bank. So it's a तासीर बदल रही है retailing की, ये ध्यान रखिएगा.
If I can add one quick challenging point to what he mentioned answering you, I think 5 to 10 years from now, BCs will see a PCO moment. We will see an extinction of BC agents as they are today, unless we rediscover the whole model. So I think it is not right to think that there will always be cash. There will always be people walking into an outlet to draw. I don't know how many of us go really to the ATM these days. So I have not been to ATM for a long time now. So that will happen to a BC agent as well. This is my personal prediction, and we need to be prepared to upgrade these BC agents, that's the upskilling point you mentioned, to become better advisors than better transaction agents. That's my prediction. I wish this is wrong, but I think in 10 years now, now we don't see any PCO booths today. We may not see BC outlets the way they are today. So
yeah, Sashi, just
challenging all of my peers and myself that we should be prepared for that moment.
One second, just to add what Shashi was saying, we haven't done any transactions in my BC business. I don't understand what these guys were talking about transactions. So I'm a BC for last 8 years, the first commercial BC probably, and we are lending focused, liability focused, insurance focused. We don't understand transaction. I never done it. We have still survived, right?
So yeah, so that's India. So you have different categories of BCs, different business model. Even I would say, I'll just give an example and I'll take 30 seconds. You go to a petrol pump, you don't need to, the petrol pump owner does not need to sell petrol because it's selling. So cash in, cash out, AEPS is like petrol. But the moment you go for lubricants, he needs to do selling, solicitation, time. So insurance, all other services require soliciting. So there is going to be a similar model on BC that not one size fit all. There will not be every BC doing every service. So there will be, I mean, obviously, the moment you have 2 million BCs doing insurance, we have a problem because there is not going to work on that. But clearly, you will have a very large number of BCs capable and skilled or super skilled with training for that particular model. So I must, with this, thank all my panel speakers. Great discussion, great difference of opinions, and great new coin, neobank. And I would be happy to take more questions offline later on, and these speakers are available. Thank you very much for all your time.
Thank you, Sunil.
Thank you to each of our panelists and our moderator here, and thank you, audience, for joining in today's session. I'd once again thanking all our panelists here. We request you to gather together for a group picture, post which we shall move forward for the proceedings. And I request everybody to please mind your steps. All right. Thank you, everybody. Check. Well, once again, I request you all to have your kindest attention, please. A lot of networking that is happening right away is definitely welcome. But however, we want to move forward towards our next panel discussion in the day at Global Fintech Fest 2022. May I please request our audience to settle down, and we can quickly and swiftly move towards our next panel discussion. So I'm going to give you a quick minute to settle down before we actually begin. Well, yes, we would request our audience to take your seat, please. We are ready to move on here at the Global Fintech Fest, where we have our theme partner, WhatsApp, co-powered by Amazon Pay. Spend management partner, we have Encash in association with Perfios. Payments partner, Cash Free Payments, and CEO's dinner partner, HSBC. Well, up next, ladies and gentlemen, we again are moving ahead with yet another panel discussion. And the topic that will be discussed is deliberating fintech, delivering faster, cheaper, and secure real-time payments across the globe. And to moderate this panel discussion, may I please request Mr. Anubhav Sharma, Deputy Chief Partnership Business Development and Marketing, NPCI International Payments Limited, NIPL, to kindly step up on stage. Please help me welcome him with a huge round of applause. Yay, yes. And also, amongst our panelists, we would request Ms. Barbara Dreyer, Director, National Payment System, Bank of Nambia, to join us with our esteemed panelists. We'd also request Ms. Diksha Kaushal, Director, Financial Services and Banking Partnerships, Google Pay, who's joined us today. And we request Mr. Jorge Zaccaro, co-founder Minka INK, to step up on stage, alongside Mr. Sherkaran Naidu, Head Stakeholder Engagements, BankServe Africa. Looking forward to yet another insightful session coming up right next. And may I please request Mr. Moderator Anubhav Sharma to take it over from here.
Thank you. I think we'll still wait for some people to come in. But, we were just having a pre-discussion, and we had an interesting discussion. We were beginning to figure out the traffic, because three of the panelists here are from overseas, and we had an interesting discussion on how the traffic here in India is different and how the payments are going to be different. Taking that cue, before we begin, may I request Barbara to introduce herself, and then going to the left before we begin. Barbara.
Thank you, Anubhav. My name is Barbara Dreyer. I am the director responsible for the national payment system at the Central Bank of Namibia, which is basically the equivalent of the Reserve Bank of India here. Thank you.
Hi, my name is Diksha Kaushal. I look after banking and financial services partnerships for Google Pay in India.
Hi, I'm Jorge Zaccaro from Minka. I'm a software engineer and economist, and Minka is building real-time payments infrastructure for Latin America.
Hi, I'm Shegar Nadu, Head of Stakeholder Engagements at BankServe Africa. BankServe Africa is in South Africa, and we're essentially the equivalent of NPCI. I say that tongue-in-cheek because we know that we're obviously aspiring to emulate them. Thank you.
Thank you, panelists. And just to take it forward, a couple of statements from my side on why this topic is important today. The world today is moving to cross-border payments in a big and effective way. There are real-time payment systems which are growing across the world. And it's only prudent that we now look at extending it to cross-border on a real-time payment mechanism. And the reason we are now looking at deliberating on this specific topic with the panelists here is to see how the regulators, the most loved technology companies, the networks, and also the technology rail providers can come together to provide for an efficient cross-border real-time payment systems. And with that as a background, Barbara, if I can start with you, one of the most important things that's shaping up in the G20 countries, it's become a priority to look at the cross-border payment systems. So given that the G20 has a focus on enabling real-time, low-cost cross-border payment systems, kindly help enlighten us with a regulatory perspective on how do you see it in terms of the assessments, the challenges, and the way forward.
Thank you, Anubhav. I think when it comes to payment systems, and especially cross-border payment systems, everybody would potentially agree with me that it is very complex. It's complex in the sense that we have an ecosystem that has various stakeholders involved. There are different time zones, a variety of participants and jurisdictions, each one with their own regulations. Now, to bring all of these together for efficient and effective cross-border payments, it's definitely no walk in the park. So that in itself basically leads to, especially when we look at cross-border payments, to a lot of high cost that is involved. We have low speed. These transactions take long to be effected. There's also limited access as well as limited transparency. Now, how do we ensure that we can overcome these hurdles and frictions that are involved in these type of things? So taking it from a G20 perspective, they have really come up with a very good document that speaks to roadblocks after identifying some of these challenges that we all can relate to. And these building blocks speak to issues around how best can we, both public sector and private sector, get together and rally behind a common vision and targets based on our own jurisdictional realities, based on our own regional realities, because there is going to be no one size fit all. So we have to get together to work through those intricacies in terms of ensuring we can come up with something. Then, of course, regulatory alignment is something that is very important. And in this regard, if I can just look at it from a Southern African perspective, of course, we are also looking at harmonizing. How best can we harmonize our regulations? In Southern Africa, there has been quite a lot of work to work through some model laws in terms of trying to work towards that harmonization. We cannot just throw out another building block is looking at the existing payment infrastructures and arrangements. Obviously, you cannot just throw it away and then make space for the new things. You need to see what can be done with the current arrangements. So that is also a building block emanating from the G20, the data and infrastructure, as well as what are some of the new payment infrastructures. So whilst these building blocks, each one have their own pathways, if you address some of them, others, they are also quite interdependent. So from those building blocks, it is now incumbent upon different stakeholders to take it from there and to make it their own. And then from a regulatory perspective, of course, this is something that is high on our agenda also, to ensure efficient, near real-time or real-time and faster cross-border payments where the cost is significantly reduced. Those of you who are familiar with the Southern Africa corridor, you will know that remittances from World Bank studies, you will know that remittances are one of the most expensive to our corridor. So there is definitely a huge objective for especially the central banks to look into that and to ensure that the cost, we can bring down the cost of cross-border payments to our jurisdictions. So that is really the context and what we are working towards in terms of ensuring how best we can address some of these challenges. Thank you, Anubhav.
Absolutely. Yeah. Barbara, I think you bring about some very important points, the harmonization of the payments, and I think it all goes back to having some efficient railroads on payments within the country before you can kind of logically extend it. And I think then I can jump on to Mr. Naidu. You represent Banks of Africa. It's been around for 50 years. You've been operating within the SADC region. I mean, it would be opportune for me to ask you, because you run the platform there and you are soon to go live with the real-time payment platform within the South Africa region. If you could give a brief on how your experience has been as you go live, maybe we can build from there. Shergren.
Thank you, Anubhav. So Banks of Africa, as Anubhav's indicated, has been around for 50 years. We're the payment clearinghouse system operator that services the national payment system domestically. We are also the regional clearing settlement operator for the SADC region in terms of a payment stream they called TCIB, which is newly established. I'm going to focus for this portion of the question, just listening to Anubhav's question around the Rapid Payments Program, which is a domestic real-time payments initiative that we've been working with the industry to establishing. That being said, though, South Africa has actually had real-time payments, which predates this initiative. It goes as far back as 2006, 2007. We instituted a real-time payment system called RTC. RTC was one of the world's first real-time payment systems. However, the uptake for RTC was unfortunately not as well as it was inadequate. Let's just call a spade a spade. The pricing wasn't great. There were branding issues in the sense that different banks branded their own real-time payments offering according to their own marketing campaigns. Fraud and risk management concerns because of the fact that it was real-time, all of which culminated in the increased pricing. And there was a realization by the regulator and the industry that we needed to modernize the national payment system, modernize our clearings, our credit push payment streams, and that's where the RPP initiative was launched. It actually emanated out of a visit to, firstly, there was a global research that was undertaken in 2017 between Banks of Africa and the Payments Association of South Africa. There were 11 countries that were explored, and as part of that, it was really about 11 different countries globally that were engaged in some way or form around modernization of their payment systems. India, of course, was right at the top of that list, and the outcome of that resulted in a research paper in which it indicated that modernization was not just restricted to implementation of ISO 20022 standards, that there were a whole myriad of other factors that also had to be incorporated, a whole myriad of other scopes and considerations that also need to be taken into consideration, and which then led to it dovetailed into the Vision 2025, which was the South African Reserve Bank's vision for the modernization of the national payment system. And as part of that whole process, the industry then galvanized and worked together towards this. We undertook a global study tour in 2019. It was coordinated between Banks of Africa, the Payments Association of South Africa, as well as PwC, in which there were role players across the ecosystem from banks, fintechs, regulators, and the study tour came through to Southeast Asia. It came through to India, Singapore, Thailand, and China. And the outcomes of that study tour resulted in the actual work that went into the development of the RPP program, which really, once again, it was a multi-stakeholder driven program which had myriad of different factors in terms of the design of the process, came up with a South African case for change for developing of this real-time payment system. And ultimately, we then appointed a technology service provider. We appointed TCS, also from India. So as you can see, India plays a big role in the serving as a blueprint for what we've been trying to accomplish in South Africa. We currently in the stage where now we've signed up banks. The banks have been going through all of the testing and working towards market acceptance testing. We will be going live in March of next year. The brand's name is going to be launched into the market as PayShop. Shop is a vernacular colloquialism in South Africa, which means everything is shop shop. And so that's the way that it's going to be marketed. And we're really anticipating that this is going to have a meaningful impact in South Africa towards displacement of cash. Yeah, Anubhav, I don't know if that I've tried to sum it up.
No, it does. Shrex, and I think one important point that I picked up is modernization. You're looking at bottoms-up approach, creating that entire technology stack. And maybe, that brings me to Jorge. He is the co-founder from Minka. They run the private ACH in Colombia. Jorge, now we're talking about, building the technology stack again for an efficient domestic payments and then logically extending to cross-border, because we believe that an efficient domestic payments can logically extend into the cross-border payments. Would you want to give us some perspective on the clearing that you do, the efficacy that it brings about in the payments ecosystem, and maybe logically extend it for the audience in terms of building the cross-border payments rail which can be as efficient?
Yeah, sure. So basically what we did in Colombia was to help the clearinghouse called ACH, Automated Clearinghouse, to move from the paradigm of sending files every 4 hours from Monday to Friday to the paradigm of sending transactions as they happen throughout the week, right? So that involved like helping them to think about like money on the internet as something that is like flowing as information is, and you don't have to describe that in a big file. You can send transactions as they happen. So the efficiency part comes from this basic change of, yeah, let's accumulate stuff and then send it every 4 hours to, as soon as you have it, just send it over. Of course, that was not possible 50 years ago when these technologies were built. So we're not criticizing the file-based approach, but we're taking into account that we moved to a different world. We already have the internet. Communications are flowing in real time, and if money is information, it should flow as fast as any other message. WhatsApp is one of the sponsors of the conference, right? And any user of the application would be surprised if we have to batch the messages and they can be only sent every 4 hours, like it used to be with physical letters. So we're just helping them to move from this file-based approach that was the best thing that we could build 50 years ago to the real-time message-based communications that we can do today on the internet.
Thanks, Jorge. And I think one of the growing schools of thought today, and you spoke about standardization, right, is that standardization has to be essentially on two counts. One is about the technology, and second is about the user interfaces and the convenience. And that brings me to Diksha. Diksha, you represent Google. It's the most loved technology company. You are actually playing a very important role in India on the Google Pay. At a click of a button, you can transfer money. It's a very intuitive interface that we have, and congratulations. Building on the thoughts that the panelists have had, Diksha, what are your thoughts in kind of believing that a standardized user interface within the domestic framework should remain constant and standard if you have to build, real-time cross-border rails and bring in some efficiency, not just tech stack, but also the user interfaces? Your thoughts around this, Diksha?
Thanks, Anubhav. And, I'll start with two anecdotes, and these are over just the last 1 week. For those of us who are old enough to have children going over to colleges, you know this is college season when children are going abroad to study. And a friend's son called me a few days back saying that, my card is not working. And how do I open an account now? I'm very far away from home. I need to get documents to open an account, then get my card going, and I need to find a way to make some payments. We figured some things out, but it did take some amount of heavy lifting. And there was someone who called me just yesterday, and he was saying that, in India, it's so simple to make payments today. It's so intuitive. He just knows when he opens the app, any app, thanks to NPCI, most of them are standardized. You know what the icon looks like. You know where to press the button, how to do the QR. And it's so simple. He doesn't need to think about payments anymore. Payments at its heart is a friction. And the less the friction is, the better it is. So I think the contrast between what we experience oftentimes on the domestic side versus what it becomes when we go international, it's true for all of us, whether we're trying to buy currency, trying to make our cards work overseas. And what has worked for us in India being an example of how digital payments has happened in domestic markets, is that it's interoperable, it's standardized, and it gives predictability to the end user. And we do believe that replicating this as we look at payment rails across the world would definitely help in terms of user adoption, which is a big one, because when we get these highways built, we also want adoption to come in. So yeah, Anubhav, I would say that building on some of those standards, which might require for us to have conversations across multiple bodies in the ecosystem. So the other learning from UPI was that it brought the ecosystem together. So whether it would be maybe central banks across, or it would be payment participants across, getting those standards interoperable across markets is something that would be very helpful.
Thank you, Diksha. And I think one of the important aspects that then comes about is the regulatory framework. And I think Shargran made a brief reference to TCIB. Now, I'm not sure if the audience here are aware the transactions cleared on immediate basis is actually a scheme which is operating within the SADC region. Barbara, you are a participant as a regulator in that scheme. It would be prudent and opportune, I believe, for you to give a brief on the regulatory perspectives on an existing real-time, low-value, low-cost, settlement within the SADC region. I think that's a good build for us to take it forward and extend it to the cross-border, across continents, maybe.
Yes, indeed. So when it comes to the TCIB, which is, as Anubhav has highlighted, transactions cleared on an immediate basis, this was as a result of a public policy objective that emanated back in 2016 from the SADC Council of Ministers, with the objective of looking after financial inclusion and access on a cross-border basis. So of course, as central bank regulators, we were then tasked to look at what is it that can be done within the region as part of integrating the payment systems across the region. Now, that I've already spoken a little bit about the complexities around it, but we have come a long way, and where we are at today is, of course, from a regulator perspective, is around the harmonization, of course, standardization, which has been spoken about, as well as ensuring and see how can we put rules, standards, and arrangements in place that can manage risk, because after all, what we are looking at is, in as much as all of these good things need to happen for the customer to have that seamless experience, there is a lot of risk that you want to ensure you manage appropriately so that your financial system remains stable. So as a result of that, of course, Banks of Africa, they are our scheme manager, and they are tasked with, of course, putting all these rails in place and making sure that everything runs smoothly for the customer experience with the support of the central banks within the region. Now, where we are at today, I think we've passed the pilot stage, and we are now in a stage where we are onboarding, where a number of participants, both banks and non-banks in the region. It is going a little bit slower than we expected, but there is, of course, still a lot of work that needs to be done to ensure that we can have that capability off the ground, especially from a participation point of view. But I think there are good lessons to be learned in terms of really when you get different stakeholders around the table, and getting those stakeholders to work in tandem within jurisdictions, because you also have, in as much as we talk Southern Africa as a regional bloc, there are different currencies also in place, different currencies, and different jurisdictions need to therefore see how do we transact with different currencies if you don't have a single currency. So those add certain complexities also. So we are working towards having that scheme as a multi-currency scheme to ensure that we can then provide with this real-time and cheaper low-cost capability for transactions to flow within our region.
Thank you, Barbara. And I think, would it then be safe to assume that there is an alignment in the sub-Sahara African region coming about in the inter-country real-time cross-border payments? And you briefly mentioned Banks of Africa is the scheme manager. Shagun, would you want to briefly touch upon your experience on managing the scheme while Barbara has given a perspective broadly on the regulatory framework? It'll be good to hear on how you're managing that clearing and the scheme on the SADC region for TCIB.
Thanks, Anubhav. So I think that Barbara had mentioned in her initial address that the SADC corridors are amongst the most expensive in the world. It's approximately 4.2% higher than the global average. So I'm absolutely in support of Barbara's point there. Just so you're aware of the cost implications that are being experienced in the SADC corridors. When we were appointed as the regional clearinghouse system operator, it actually dated back to 2013. And that was for a low-value payment system which actually never really got off the ground. It was an electronic funds transfer system. And then the industry and the regulators realized that they should actually try to move into more real-time, and that's where TCIB came about in 2016, or the concept for TCIB came about in 2016. TCIB got launched in 2021. To Barbara's point, though, it was much slower than had been anticipated. We've currently got 2 live participants, one from Namibia and one from Zimbabwe. So that corridor has now been established. And there are 7 other corridors, countries that are in the process of being targeted and going live, which includes South Africa. Unfortunately, South Africa in itself has been a bit late to the party because of the fact that a number of the domestic banks would prefer the existing correspondent banking relationships. And so it's really been a process of trying to encourage them and demonstrate to them that the system has been built robustly, that there are adequate rules and controls in place to be able to allow them to migrate onto the system. We now have one bank in South Africa that is going to be going live, and we anticipate that that will actually allow the other banks to also then start following suit. To Barbara's point, there are a number of different factors that would have come into play in serving as friction. The regulatory harmonization was certainly one of the key elements there. There has been a program to develop a model law, and unfortunately, it's just not gone as fast as one would have liked. Something else that requires some element of regulatory coordination would be the fact that for each, you're looking at 16 different countries within the region. So each role player, each participant that wants to, or each entity that wants to participate would have to get the go-ahead from their own regulatory authority to be able to participate. So this requires them to be able to, whether it be banks and non-banks. So something else to be mindful of is that TCIB actually has got banks and non-banks participating in this, which for all intents and purposes, those non-banks would be your fintechs. Now, in a South African context, and so for a second, just suspend the TCIB consideration. I'm going to take us back to RPP, the real-time payments system PayShap that I spoke about initially. In the South African context, notwithstanding that the system had been designed with the banks, with the fintechs and so forth. However, when it comes to direct participation, given our existing regulatory framework, it is only banks that are able to participate directly in RPP. So any non-bank would have to actually then work with a bank to be able to do so. We are currently in the process of undergoing regulatory reforms, and as part of those regulatory reforms, it is anticipated that there will be non-bank direct participation as well. So as you can tell in the TCIB existence, it's actually a step ahead than we are domestically in South Africa, because they've actually got non-banks that are able to participate as well, albeit requiring the approval of the regulators for each of those countries. Just getting back to, I wanted to, and the reason I'm going to juxtapose between the RPP system and what we're trying to build there versus the TCIB is that in due course, there will be a convergence of those systems. So we are really trying to build an efficient system in South Africa. And one of the things that we're experiencing in South Africa is that there's still, notwithstanding that we have got a fairly advanced payment system, 9 out of 10 payments in South Africa are still made with cash. And one of the things that we're trying to do with RPP is to be able to displace at least 10% of that. And we anticipate that that displacement would result in about 450 billion rands coming through the national payment system. And if that 450 billion rand comes through the national payment system, it could actually then be utilized and flow through the economy. We consider ourselves as a systemically important financial market infrastructure. We have got a public interest objective as well to support the regulator in achieving public interest. And seeing as we view ourselves as I certainly use this analogy, I can't say we, but I certainly do, as an integral valve that allows the lifeblood to flow through the vascular and arterial system. I always use this, it's quite a graphic description, but I always view payments as being the lifeblood of the economy. And if the payments are going to be able to flow seamlessly and efficiently through the lifeblood, through the economy, through the body, it will result in the health of the body, and it will improve the health of the body. So South Africa currently, as with the rest of the world, we are all experiencing issues, high inflation, our inflation currently at 7.8%. Economy is quite stagnant, and we believe that an efficient, robust payment system with real-time payments that allows money to flow through the system will actually result in an uptick in the economy as well. A lot of South Africans also have, particularly, even though there's been we've got approximately 70 to 80% in terms of bank accounts. However, most people in the country, particularly those that are recipients of grant payments, they only use that bank account as a postbox. They get money in once, they withdraw it all, and then they use the rest in cash. So we're trying to encourage them to be able to, once RPP goes live, and once PayShop, the brand, actually becomes ubiquitous in the market, we want to encourage and instill a sense of trust that people will start to use these digitized ways of paying, and to be able to then result in less cash in the system, potentially less crimes, and hopefully it will have a positive uptick. And we see this, so to your question was about efficiency, how an efficient payment system can also then flow from a regional cross-border. Similarly, those are the similar types of considerations from a TCIB consideration.
Impressive. And I don't know how many people here are aware, South Africa, I believe, has done away with the checks completely. So you're getting digitized in a big way. And you briefly spoke about, Shagrin, with regard to the banks and the non-banks participation. And therefore, before I go to Jorge, I'll quickly jump onto Diksha and then Barbara. On your thoughts, Diksha, on what are the possible enabling provisions that you see for the love techs, the big techs, the fintechs to evolve for a very seamless integration and participation in not just the domestic play, but also cross-border play. Once you have the thoughts, maybe I'll jump to Barbara on a regulatory perspective on how that can be enabled. Then I'll go to Jorge. Diksha, please.
I was telling someone that oftentimes to build for the future, it's helpful to look back into history and see if there's some lessons to be learned. And when we look back at what's happened over the last 5 years, Google Pay just finished 5 years on September 18 in India. The story that is panned out in terms of digitization of payments in India, 3 things hold for us. The first one, it's interoperable. The fact that the trinity of Jan Dhan accounts, mobile, and what is happening in terms of all the banks participating, whether it was a particular bank, a particular mobile phone, or a particular type of account, irrespective of what each of those brought in, users were able to dip into digital payments on UPI. The second one was an ecosystem approach, i.e. regulators, clearing bodies, banks, fintechs, other types of participants, all of us came together not only to play our own individual roles, but also in terms of finding a joint vision on how we want to run it. Something as simple as if a fraud was identified on one sort of platform, the pace at which it goes across in terms of the ecosystem for us to have lessons learned and to make our payments safer for our users is incredibly fast in the ecosystem today. And which brings me to the last one, which is a partnership approach. They say if you want to go further, go together. And in payments in journey that we've been, it's held so true. So I think, Anubhav, to your point, therefore, some of these bits in terms of interoperability, common standards like we were discussing, in terms of having an ecosystem-wide approach, not only in the design, but in the ongoing running of processes. And lastly, a truly partnership platform-based approach is something we feel not only held good for digital payments, but will be equally helpful for international as well.
Barbara, your thoughts around this? I think Diksha has brought about very effective points in terms of the partnerships, in terms of the open frameworks that we're looking at. How do you see the regulatory framework evolving to kind of accommodate these SaaS originating from the ecosystem?
Yes. So there's something that she said earlier that I really liked and resonated actually, which I want to latch on to say, anyone, whether you are a regulator or a user of payment services, the last thing that you need to think about is, how am I going to make this payment? Should I use card? Should I use EFT? Should I use UPI? Should I use what? That shouldn't even be on. All that you need to think about is how much I need to pay. So that is really how seamless things would be. Now, in order for that to happen, different players come up into this ecosystem and these platforms. So from a regulatory perspective, of course, we are also equally going through some transformations internally to look at not just our internal processes, but how do we need to think about regulation differently, given these different type of players that are now coming, especially onto the payments ecosystem. Many of these players are not your traditionally, or your traditional players like your banks that are used to being regulated. Fintechs are not used to regulation. So how do we ensure that we understand each other? Because we have a risk mindset as regulators generally, that's what we do. But we need to equally be open to innovation, because how do we ensure that there's interoperability, that there's all these new seamless payments happening cross-border, cheaper and so on. The fintechs bring a certain level of agility to the payments ecosystem. So what we are looking at is, of course, you would have seen and heard of the sandboxes. A lot of the regulators across the globe are looking at introducing and have already introduced sandboxes, incubators, innovation hubs, you name it, to try and understand what is it that a fintech is bringing to the table. How do we understand the risks and the opportunities that are there? How do we develop our regulations then based on the understanding that we get through this? Because ultimately, what we are working towards is to ensure that there remains trust in your national payment system and in payment systems globally. Because if you send money, whether it is here from India to the US, to Namibia, to wherever, that sender need to have trust that that money is going to get there and be used for the intended purpose. It's not going to end up anywhere else. And that is what us as regulators are trying to establish, whether it is at a domestic front, a regional front, or globally. And therefore, those partnerships become so important and so critical. So from an enabling environment, those are the key things that we are looking at from setting the scene and to ensure that we can look at all of this. Now, we obviously also work with the principle of same business, same risk, same rules. That principle, but we try and advance that principle to also understand that, you know, in as much as we are looking at that principle, you still need to ensure that you fully understand what is it that this business is trying to achieve within this ecosystem, and therefore deal with it in accordance. It's not going to be an issue of, okay, because you are a fintech, you are going to be very lightly regulated necessarily. It is about the potential risk, the potential benefit, and whatnot that you can potentially introduce to the ecosystem, and accordingly we then set regulations and enable those type of players then also within this ecosystem to bring the necessary benefits that we require from a public policy objective point of view. Thank you.
Thank you, Barbara. I think you make a very important point. You know, if I can summarize, you're saying we need to enable the technology, the big techs, the fintechs under effective regulatory framework. You know, that's a very promising statement for future. And you spoke about the tech stack, the network perspective. I want to jump onto Jorge again. You know, you're a young tech wizard, Jorge, and I think the audience would want to know there are some challenges which are obviously coming across in terms of seamless cross-border payments. And that has got so much to do with the different standards that the countries use within the domestic payments. Some are on ISO, some have a proprietary messaging standard. Now, when you're talking about an effective, low-cost, cross-border, real-time payment system, how do you, from a technology enablement perspective, see all of these stacking together and seamless integrations to provide for these kinds of rails, Jorge?
Sure. So I will get back on a few points before I address your question. Because what Barbara just said about regulation caught my attention in the sense that, like, I'm going to make an analogy if you allow me.
Please.
There's two ways to make cross-border payments. One is like you make a transaction from one country that arrives at the other. But the other one is that you physically go to another country and then swipe your bank account from your original country, right? In both cases, money is crossing borders, and Minka's philosophy is that money must flow. So to your question, like, what is this fintech trying to do? In our case, is we're trying to break the barriers that is preventing money from flowing. Information must flow is one of the values that unites us through the internet. And of course, there are different like jurisdictions and different positions on how much information must flow. So the same will apply regarding how much money must flow. But regardless of the technology that we built, I think the regulatory alignment must come from the value alignment, deciding how important it is for us to let information flow, to let money flow, and then define the cross-border payments in terms of that. So the analogy that I was going to make is the regulation is like when you need a visa to go to a country. So I just came from the UK, but I'm Colombian. I'm in the UK with a tourist visa, and I came to India on an electronic travel authorization visa, right? And I've decided to visit different countries depending on how easy it is to get a visa. In this case, it was very easy to get a visa for India. It used to be more difficult before, and even though I was living in China for 3 years, pretty close compared to Colombia, I never came before because it was more difficult than it is right now. So regulators could think about money flows in the same way. Like, what do we want to attract? What are the values that we believe in, right? and eventually determine different or better policies to make it easier for money to flow across borders, whether it's a payment coming from a different person to a local business, or that person getting an electronic visa and traveling directly to the country to spend it. Now, to your question about standards, I started commenting on money as information, and the technology we're building is a messaging platform, like WhatsApp for money or something like that. And at the end of the day, you can translate regulatory alignment and all this value alignment to a common language. So when you say protocol in technology, you're talking about a language for two different systems to talk to each other. So pretty much in the same way that we're using English to speak across cultures, we have to define those common languages at a regulatory level and then at a technical level to be able to express and send those messages that we're sending at a platform basic. So what are we trying to do when we send money? We're promising to pay. Most money these days is a promise to pay, an IOU, right? So that regulatory alignment needs to be translated to a common language to say, this is what we want to allow, this is what we do not want to allow, these are the visas that we want to grant, these are the money flows that we want to grant, and eventually translate to a protocol at a technology level so that we can say, yes, these messages should flow through the border, and these other messages need more regulation or whatever.
No, thank you. I think you have broadened the spectrum in terms of the thoughts that we were looking at, and great analogy there. I think there are a couple of points which remain untouched, and in the interest of the time, I'll quickly jump on to Diksha, and then maybe to Barbara. One of the points, Diksha, that we spoke about, and it's a part of the discussion theme. How do you believe the most loved techs, the large techs, can actually play an instrumental role in bringing down the costs of the payments in cross-border? That's one. And Barbara, then maybe you could give a brief advice on the compliance parts of it, right? We spoke about the detailed on the cross-border, but I think it's a regulatory requirement for the money flowing overseas. The enablement, if you could briefly touch upon the compliance checks, the KYC, ML requirements, I think then we would like to close with some of the thoughts. But Diksha, over to you for how do we look at love text to bring down the costs?
I think if you look in terms of just the way payments have evolved, we've had instances where when cash is paid, actually the merchant for the collection of their cash has anywhere cost of between 1% to 3%. Similarly, when you look at some of the other digital payments tools, the market has been paying MDRs, different MDRs in different countries, but if you were to take the example of India, anywhere about 1.5%, right? UPI in India is free. If it, even a few were to be charged, I think that would look to be very, very high. I guess if you were to translate that similarly, all of us, whether as users or as banks or as fintech players, we know that cross-border involves a lot of cost in terms of transferring money. We've had, those dollars chipped off when we've sent a wire or received a wire. And if we were to reimagine in terms of what would a cheaper, cross-border payments world look like, part of that solve will need to come through in terms of, what Jorge was speaking on, having a common set of languages, because right now, a lot of that cost comes from translating to one language used in the US to, let's say, used in Europe when, the money is flowing through, then coming into India. So multiple hops, multiple languages, cost of translation of language, and then, of course, in terms of how do you build security and trust, because you don't know each of those parties as easily as you do in a domestic world or if you're face-to-face. What can we do in terms of, technology players to play our role? As I said earlier, we truly believe in the power of partnerships and of platforms, of how the ecosystem can come together. So just as how we're working with NPCI right now, some of us would know that there is, a foray out to say how can UPI enable Indians traveling overseas. If they're going and they got a similar visa, and they've traveled, let's say, to a Singapore or to another country, and they wanted to pay through their same favorite UPI app at a merchant, how can we enable that? That's one step forward in terms of, how we enable that on our apps. And similarly, I'm sure, as these partnerships go along, it's food for thought for us to think in terms of how can we enable similar user experience across the board.
So Barbara, a couple of minutes on the compliance checks, and in the interest of time, then maybe we'll close with one statement across 30 seconds each. Before that, maybe on the compliance side, I think that's important.
All right. So I'm sure everybody, when they look at regulators and they engage regulators, the first thing that comes to mind is the cost of compliance. We are very aware of the cost of compliance. It's one of those things that's a necessary evil, but we have to deal with it. But we as regulators, we are also looking at how can we assist in bringing down the cost of compliance. And in that regard, of course, SupTech and RegTech plays a very important role for us also to see how best that can happen. The other thing that is also very important is around the harmonization of these frameworks, how we do KYC, how we comply with AML, CFT regulations. Those need to be aligned so that what is done in Namibia shouldn't be very different from what is done in Zimbabwe or in South Africa and so on, because that in itself also increases the cost of compliance. So we are also equally looking at how best we need to harmonize some of those compliance aspects. But it is necessary for them to happen. KYC, e-KYC registries, those are things that we are looking at ensuring that these things happen so that even on a cross-border basis, information can be shared so that it makes easier the onboarding of clients to still make sure that those transactions, as they flow, whether they flow domestically or cross-border, that there is still, it's a trusted transaction. The message that goes along with that, as you're rightfully saying, it's a lot of message flows, so that what goes into that message, that it is actually information that can be trusted, it's correct information in order to ensure that there is no undue activities or illegal activities that are happening with regard to the flow of funds, even on a cross-border basis. So those are the kind of things that are important for us, especially when we start talking interoperability, cross-border interoperability of payment systems, and standardization. So those are all part and parcel of trying to work towards making sure that we can all tick those compliance boxes at the least cost-effective or at the most cost-effective manner. Thank you.
Thanks, Barbara. And I think we have dwelled upon multiple aspects, broadly touching upon delivering the faster, cheaper, and secure real-time payments across the globe. The last couple of minutes, may I request, beginning from you, Shergren, to leave one specific thought that audience can take away on this aspect, which can kind of invoke some, unique, intuitive thoughts around how this could, going into the future, become a reality, and then followed by Jorge and, Diksha, and then Barbara. Shergren.
Thanks, Anubhav. I'm not sure if this counts as a pearl of wisdom, but I would suggest that one would need to be clear about what it is that they're trying to address. So what is it? What is the problem statement or the use case that you're trying to resolve? And then be clear about it when you're engaging with your constituency and your constituencies and your stakeholders with whom you're going to be engaging to be able to address that. Because technology can solve everything. We know it's technology pretty much can do anything. It's really about the ecosystem beyond the technology, the individuals, the human beings. That's where the complexity really lies. And being able to get them across the line and being able to put across a compelling case for change.
Technology can solve everything. Jorge, I saw you smile. What are your thoughts? One thought that you want to leave on the table for you to take back home.
Yeah, I mean, of course, I'm a programmer, so I agree with that. But what I wanted to comment on is more on what I was saying before and what we exchanged on languages and regulation. So to summarize, on our side, money is information. Money is a form of language. And what we want to figure out, not just at a regulatory level, but a social level, what do we want to say? And what should we be allowed to say? If money is language, there's some sort of free speech attached to it. But it doesn't mean that we should be able to say anything, because in the same way that there are fake news on the internet, there will be fake money, and we have to make sure that we're keeping our economies in a healthy state. So basically, at the end of the day, once we figure out that language, the whole point of having internet money is to improve human communication and to make all those translations so that we can talk to each other and say something like, hey, I like your product, I want to buy it. or I like your business, I want to invest in it, regardless of whether I'm doing it at a national level or cross-border.
Money is language is a powerful thought. Thank you, Jorge. Diksha, over to you.
You know, our world often starts with how the consumer thinks and ends with that. So I'll just give the consumer view on this. I wish that, you know, the future of cross-border payments can be simple and secure. And so any user, when they think about cross-border payments, they don't think of complexity. They just think, oh, it was so simple.
Solving complexity. Thank you, Diksha. Barbara.
She's almost taken the words out of my mouth, because I was thinking of human behavior still dictates at the end of the day. Technology, it's necessary, it makes things easier for us, but in the end, human behavior is the one that dictates what is it that needs to happen also. And therefore, with any human behavior, there are risks involved. So we need to also take that component in mind as we are doing things faster and more efficient. Thank you.
Thanks, Barbara, and I think we're just about out of time. I do not know if that leaves time for us to have a couple of questions coming in, but on behalf of the audience here, thank you, Barbara, Diksha, Jorge, and Shergan for such an interesting and engaging discussion. I hope you have a great session going ahead in the day as well. Thank you, everyone.
Well, some real thought-provoking and also enabling ourselves towards simple solutions making and delivering faster, cheaper, and secure real-time payments across the globe. Give it up, guys, for the panelists here. And Mr. Anubhav for moderating this session so well. Up next, we'll also move forward with an in-person session coming up right next. So I'm going to give you a quick minute to settle down the ones who would like to remain for the next session.
Thank you.
You're welcome. Thank you.
Thank you. You look vaguely familiar.
Thank you.
Thank you very much.
All right, ladies and gentlemen, moving forward, once again, may I please request everybody to kindly settle down, take your seat as we move forward. In today's schedule, we have an in-person session, a very interesting one coming up right next to talk about how WhatsApp Business Platform can drive financial services. And may I please request our audience to please settle down. A lot of networking can happen over the breaks that are scheduled forward in the day. As of now, without any further ado, we would like to address our next session. I'm Drashti. Hi. Prachi's around here. She must be addressing somebody. Yeah, she's right there. The first person. You're welcome. Well, hello and welcome back to Global Fintech Fest 2022-23, presented by NPCI, PCI, and FCC in association with Department of Economic Affairs and IFSCA. This is your host Drashti, welcoming you all back. Well, thank you for your kind patience. We just wanted to make sure that, our upcoming session is a hassle-free experiment. All right, up next we have an in-person session, rightly discussing an interesting topic, how WhatsApp business platform can drive financial services, and who better than the strategic line manager, BFSI Vertical, WhatsApp business platform himself, Mr. Gaurav Agrawal, and his oratory skills are going to make this experience even better. Put your hands together for Mr. Gaurav coming up right next.
Hi everyone, good afternoon. Everybody can hear me clearly? Okay, awesome. First of all, welcome. I lead the FSI vertical for the WhatsApp business platform. It's been a 14-month journey for me. Super interesting working with some of the larger banking groups in India. And I'm going to take this opportunity today to showcase how the WhatsApp business platform can really help consumers and businesses come together to leverage and capitalize on the financial services that are out there. I'll be happy to take questions towards the end of the session. What I will do is, just to get everybody thinking about the WhatsApp business platform, I'll just quickly play an introductory video, which will give you an idea of what the WhatsApp business platform is, what that experience really brings to the table, and how it is slightly different from the WhatsApp consumer app we all use to message our friends, families, and colleagues. Could you just present the screen? Could you bring up the screen? Okay. Can you bring up the deck? ऑडियो नहीं प्ले हो रहा है. I really wanted all of you all to just see this video before we move on to the next slide. What I really request all of you is to just don your hats as consumers when you're interacting with any business during the course of your day. And you won't even realize that each day, right from morning till the day or till the time you go to bed, you may be interacting with several businesses. And that could be a local kirana store to order your groceries. It could be a Book My Show to book your movie ticket, or it could be planning a holiday, or going onto your mobile banking app to know your balance or to know about your last 5 transactions as an example, right? So we are experiencing and connecting with businesses every single day. And from WhatsApp's vision standpoint, when we look at the 400 million plus daily active users in India, the experience that we have as consumers when we interact with our friends, families, and colleagues, our endeavor at WhatsApp is, can that same experience, this very same 450 million audience get when they are interacting with businesses as well? And that's what the WhatsApp business platform is, a set of APIs which allow at scale for businesses to communicate with their customer base over WhatsApp. And what really can you drive, right? It could be efficiency in terms of having a very compelling digital journey on WhatsApp, which is reducing your cost. It could be improving the customer experience itself and hence gaining more revenue and market share. Or it could be a very, very innovative solution which simply just builds a very resilient trust with your customer base as against any of your peers in the industry. And why is that really important? Continuing to think of it as consumers when you interact with businesses, think about the experience you get today. Whenever you have to touch any business, you have to communicate with them through the medium they have given you. What WhatsApp is proposing to the businesses is, why don't you come onto the medium where your consumers already are and then start offering your services, right? It could be that we today communicate with businesses through, let's say, a call center number. How is that experience like, right? We may be waiting several minutes before an agent can even come on the call. We start explaining the problem that we have. Somewhere the call drops. I start the exercise all over again, waiting for the IVRS, going through the very, very difficult IVRS menu to finally find that dial 9 is when you can only touch an agent. And then you get a new agent and you repeat your story again. Versus an email response. Today, how many of us really interact with businesses over emails? You may get an automated email saying we will respond to your query, but not the best of experiences. What did businesses do over the last 10, 15 years? They started building a very, very robust web page or a website where they installed a web chat. Have any of you tried chatting with a bot on a website? The experience isn't that bad. It'll actually give you what you need. But now imagine the situation if the browser shuts down. You start your chat again, you have to restart the entire conversation. There is no persistence in that chat. There is no history in that chat. And that too, each website will give you a different chat experience. And finally, if you think of the websites and the mobile apps as consumers we are consuming today, think about this. You may today be banking with, let's say, more than one bank. I myself bank with HDFC, and my parents used to bank with Saraswat Bank. So they forcefully have my account in that bank also. I happen to have the mobile banking app of both HDFC and Saraswat Bank. The interesting thing is that even an FD booking journey will be far different on both the applications. Which means it is again me entering into the business's environment to figure out the customer experience they chose to give me. And that is where the WhatsApp business platform really comes in to say that on the same consumer app today that we are used to, which is simple, reliable, can businesses have a very simple chat interface to communicate with their customer base to provide all kinds of services? And what could those services really mean? We move across, come to the messaging era, and then the opportunity presents in terms of building very, very native journeys on WhatsApp to be able to, let's say, buy financial products right there. It could be for any financial services vertical. It could be banking, it could be an NBFC, it could be general insurance, life insurance, it could be securities, it could be mutual funds. think about any financial service. Can you have that journey to purchase natively built on WhatsApp? The answer today is yes, you can. Can you continue servicing your existing customer base and upsell and cross-sell to them? Yes, you absolutely can. And the interesting thing is that while each of these pillars are available to you, don't think of them in silos. So what do I mean by that? Let's say you are running a campaign today and you could be using any digital medium for doing that. It could be an email, it could be an SMS, it could be any other channel that you may be consuming. It could be a push campaign. It could be that, hey, we've launched a new credit card. Here is a quick voucher if you sign up for the card today. Not very personalized. Not everybody may want a credit card. And hence, it's a standalone campaign in that sense. But if you start combining that with the entire customer lifecycle journey, can you then throw in a push campaign while he's engaging with you? So imagine a situation where I've called a call center. Let's say, so over here I'm going to don my consumer hat a lot more than the WhatsApp business platform hat. But let's say if I were to experience today finding out about my term insurance, and I have one with HDFC Life, what would that experience be like? I may call a call center, go through their IVRS, finally speak to an agent and say that, hey, I want my policy document, for which I actually didn't need an agent. I could have found that myself if I knew where to go and find it. If on the call center itself, the first IVRS button would be dial 1 to terminate the call and chat with us on WhatsApp. The call terminates, the business saves the cost of the call right there. The bot pings me on WhatsApp saying, hey, how can I help you? I simply send them a voice note saying, I want my policy document, and I get the PDF file right there within seconds. Now, while I've been serviced, you take a quick CSAT score check right there that am I satisfied with the experience, and then push me an upsell campaign right there saying that, hey, by the way, we've launched this new product, are you interested? Rather than doing a standalone campaign. So you can combine all of these. It could be a notification saying that my term insurance renewal is coming up. And then you push me a campaign saying that, hey, would you like to add on a few more items in this insurance to make the policy more robust? So you can use any of these avenues to constantly engage with your customer base throughout the life cycle, right from pre-acquisition, helping him understand what your product portfolio is, to acquiring him, to then servicing him, upsell, cross-sell, loyalty, all happening through one interface, and always that one brand, one display name with that green tick, always ready to communicate with you 24/7. So if I want to know my policy document details on a Sunday night at 11 p.m., I don't have to wait till Monday morning 10 a.m. to call a call center and get that detail. That's what the experience can be when you imagine offering financial services on WhatsApp for your existing customer base as well as your potential customer base. The beauty is that it's not just ends there, it's on a very, very super powerful platform as well. And you may have experienced this with a few businesses where earlier when you would ping a bot on WhatsApp, they would communicate saying that, hey, type 1, type 2, type 3, or type 13 for a very, very long menu. And then they would keep making you tap and type and type and type. Rather, the experience today is a tab-based experience. And I'll show you how that experience looks like, which means I can communicate with the bot just by tapping the screen rather than typing anything. So the experience becomes far easier. So we are removing more and more friction and making it far easier for this consumer base to interact with the business. It could be catalogs. If you saw the keynote that Bobby presented an hour back, he spoke about the JioMart experience going live on WhatsApp, right? That's a native catalog which WhatsApp is offering. It's right now will be GA for all businesses somewhere towards the end of the year. But I'll show you how that experience can really be from a financial services perspective as well. And then vernacular and voice support. Think about it that you don't even need to ensure that you're only communicating with your base in English. You can simply ask them their language of choice and start communicating with them in that language. There are about 12, 13 vernacular languages in which WhatsApp already allows you to communicate with your peers. The same capability is possible when communicating with a business as well. And then always using rich media to ensure that your engagement is of the highest quality. It's not a pure vanilla text-based communication that you're doing with your users, but it is video files, it is images, PDFs, voice notes, and whatnot to really make that experience very, very engaging. So I spoke about the the button experience, and that's there on the first screen over here. This is something called as a list message, where when you ping hi to a business, the menu opens up as an option to choose by a click of a radio button, rather than typing the option that you wanted, 1, 2, 3, 4, 5, 6. Similarly, on the second screen, any campaign or any communication you want to have with your user base, you can communicate through buttons. So in the second screen, you can see that for each response, a customer can respond back to you with a quick 3 buttons, right? It could be, in the case of an upsell, saying interested, not interested, or remind me later. Very simple reply buttons to engage your audience. Finally, the catalog experience, which I spoke about, and I'll show it in the context of what it would mean for a financial services example as well. And this is the rich experience. While of course the rich media always was there, right? We are used to it as in our consumer world when we are sending friends and families photos and videos and files. All of that exists in the business world as well, which means you can use that to really deeply engage the customer base over WhatsApp. What that really results in is a single persistent thread of your business being on your consumer's WhatsApp chat always. So all that I have to do is, if I've chatted with you in the past, I just search you and I start communicating with you. And right from the acquisition journey to any self-serve queries, to any upsell, cross-sell campaigns, to anything that I am engaging on the business is a persistent chat that remains in my chat history forever. So I can even go back to the past. I don't have to go and after 3 months again find my policy document. I'll just go into the chat, go into the files, and I have my policy document with me always. So the entire customer journey hence can reside within WhatsApp other than the entry point. What does that mean? From an entry point, if you want to acquire a customer, you today can't just say that, okay, I'll acquire 450 million mobile numbers from somewhere and start pinging them on WhatsApp. That's not going to be a great experience. You're probably going to get blocked because all consumers have this awesome capability. As soon as you get an unsolicited message from anybody, be it a business or even a peer mobile number, you have the option to block and report. So businesses can't just start pinging any business, any user, but you can start placing and targeting your users on other platforms. What could that other platform be? Let's say if you want to target opening of new digital savings account and your audience is, let's say, millennials in tier 2 city, you maybe target those users on a Facebook or an Instagram with an ad that says that, hey, we give 8% or 10% interest rate. I would love to join that bank. Get 10% as FD rates and click on this ad to chat with us on WhatsApp to know more. That ad brings you onto WhatsApp. He then asks some basic queries to say, okay, what all services do you have on offer? And then say, I'm interested in buying. And as soon as that user has started chatting with you on WhatsApp, you've got his mobile number. So it's a lead right there for you. And then you build the remaining journey on WhatsApp itself to even acquire him right there. And hence you can now imagine your entire customer life cycle can happen over WhatsApp, which was not the case 1 year ago. Exactly 1 year ago, in fact, on 15th of September of last year is when WhatsApp started allowing businesses to proactively engage with their customers on WhatsApp, which now means that it is not just a self-service platform that it was for the last 3 years, but now is a complete lifecycle management solution to say that we drive all engagement through one digital platform alone. I'm going to skip a few slides because it just basically says that you can either proactively ping a user through a business-initiated message, or the users can ping you as a user-initiated message and start engagement with you. It works both ways. I'm going to skip and come on to the use cases so that we can spend some time there, and I'll then open it up to Q&A as well so that you can ask your questions. So I'm going to skip a few of these slides. Now imagine this scenario. I've opened an account with a bank. However, nothing much can happen till I actually fund the account. That's actually problem statement 1 for any financial services company to say, okay, now we have an account, let's fund it. which means on WhatsApp, can I just nudge the user saying that it's been 24 hours since you opened an account with us? Would you like to fund your account now? He clicks on add funds. You ask him what is that amount. He says, I'll fund with 10,000 rupees. I confirm that, and you give them a payment link to add that amount into the account. There are some creative solutions out there which you can leverage to even provide a native UPI experience on WhatsApp itself, which means that all the UPI apps that are installed on my phone will pop up over here like a radio button option. I choose the one of my choice. Let's say I pick GPay in this case. I enter the UPI pins and my transaction is done and my account is funded. Now the beauty is that you need not do this only in English. If your user base is there happy talking to you in Hindi, the same journey can be replicated in Hindi, and you don't need a chatbot for this. Why? Because it's pretty much a tree-based, decision tree-based journey that you're going through. So you don't really need a chatbot to understand anything, which means you can go live with this instantly. Now your question would be that, hey, I don't know if my user wants to chat with me in English, Hindi, or for that matter, in Tamil. Why not just ask the users? The first question you can ask is that, hey, what is your language of choice? And then you continue the conversation in that. So which means that I have opened an account with you. I have given you my language preference as Tamil. And you quickly ping me saying that, hey, your account has been opened for 24 hours. Would you like to fund it? This entire journey happening in the language of my choice and reducing the friction point further. Think of another scenario. I spoke about this, that use contextual moments to really promote, right? Rather than randomly sending a promotional message. And we as consumers may have also received a few, in our own space, but it's very, very important that you design that experience so that it appears that you are really giving a personalized experience rather than a push for a generic campaign, right? Imagine a situation where, let's say I have a debit card or a credit card with a bank, and I have not transacted using that card. I think there's some new RBI regulation which says that you have to deactivate the card, after a certain time, which is a very good notification trigger to say that, hey, your card is about to be deactivated, or you have not activated e-commerce capability on your debit card. Would you like to do that now? So you nudge the user on WhatsApp saying that, would you like to activate? He clicks on activate, and then you push him certain commerce shopping offers right there because he has just activated e-commerce on his debit card. What a great time to contextually use that moment to say that, hey, here are some offers. I say that, yes, I'm interested. And then you give me a menu to say, what kind of an offer are you interested in? Rather than saying, you've just activated your card, here is a shopping offer from, let's say, Flipkart. Because that's, again, something that you're not asking me. So then I say that, okay, yes, I'm interested in purchasing an electronics item. I further go into the electronics category to say that, hey, I'm interested in a washing machine. And I give you more details that I'm interested in a fully automatic washing machine, and then comes the catalog where in the third window you can see, when I click on view washing machine, the native catalog of WhatsApp opens up, which is live today, and you can do this experience. It has a limitation of only 30 products as of today. But soon the JioMart experience where all the SKUs are there will also come in. But from a financial services standpoint, 30 is actually a fairly big number because I've already told you I'm interested in fully automatic washing machines. So now you only display 4 or 5 of your select models which you have a tie-up with whoever your OEM is. And then you say that you can also purchase this, by the way, on an EMI, and you close the transaction right there. So it started off with a very simple goal that you had in your organization to say, I want to increase the number of activations of my e-commerce on debit card, all the way in that same chat also making him use that debit card right there. And that's what I meant by saying use a contextual moment to really get a consumer to give you more business. You'll see a lot of this. I've just used a mock called Downtown Bank. So you'll see a lot of, just using of that generic logo. But think about this. It does not have to be that all your journeys have to be designed on WhatsApp. Right? There could be some very complex journeys which you have really mastered on your mobile app. And you believe that a simple redirection will also help, which means that while I am going through the menu, you can end that chat by saying that, hey, by the way, here is a download now link for our mobile application. So you are in parallel complementing your mobile app along with some very easy journeys being on WhatsApp as well, because not necessarily just by me downloading the app will I be an active user of the app. But you actually at least get to that stage of app downloads in a very, very simple nudge, which I may choose to ignore, but it doesn't cost you because WhatsApp charges businesses by a conversation. So we charge by a 24-hour window. So for that last message that you sent, it's not like you paid an extra SMS cost, right? It's in that chat itself. So you just keep nudging the user towards the behavior you may want to drive, or bring in all your journeys into WhatsApp itself. Similarly, I can just imagine now any mobile banking journey, for example, where I were to just know my account summary, the entire menu that exists in all the mobile apps can be simply built here, where I go through saying in my accounts, I'm interested in an account summary, I want the transaction details, the bank tells me I have 2 accounts with me, I choose that I want to know about my savings account, and in the last window, I get a quick summary of what my account summary is. Similarly, from an engagement standpoint, it's very, very easy to even educate your customer base. Right? Today, you may be getting so many communications saying, hey, don't share your PIN with anybody. Don't share your UPI PIN. Don't share your mobile banking password. If a call center agent calls you, don't give away the OTP. There's so much awareness that's being driven. If I'm engaging with your brand, why not just push that campaign to me on WhatsApp itself, saying that, hey, are you interested? Here is a quick safety tip. And then say that, are you interested in more? So the customer just keeps engaging more and more and more, and you throw all the security tips in one go. Or even better, convert that into a quiz experience, right? If you go to our WhatsApp physical booth, there are a lot of QR codes placed there. One of them is by NPCI. Their UPI Safety Shield bot went live a couple of months back. But if I scan that QR code, they educate me in terms of how to be UPI safe and not to be defrauded through UPI as a means of payment. And what they do is, instead of pushing me the security tips, they say, hey, take a quiz now. They push me 5 questions. If I answer them correctly, they push me a certificate saying that, hey, you are UPI aware, kind of a recognition, right? So the engagement is extremely high, and you can choose to drive it in the way you want. And the beauty is that you don't have to restrict yourself again to only a text-based campaign, which means I can actually push a voice note also of my security tip. Very, very easy, by the way, for a business, right? It's very cost efficient. You don't have to create very extensive videos with your content providers to say, I'm going to make a UPI safety video. I'm just going to create a quick 30-second clip of saying that, hey, do not share your UPI PIN when you want to receive funds, as an example, right? Very simple voice note, and push that voice note as well to your customer base. So you can use multiple mediums through which you can educate this base, and it works both ways. Which means I can also now send a voice note to a bank, or in the case which I shared earlier with HDFC Life, I just send them a simple voice note saying, mujhe mera policy document chahiye. And in fact, if time permits, I'll open my own WhatsApp and show you that chat also, because I've done it in live. I have a term insurance with them. All that I did is I sent them a voice note, mujhe mera policy document chahiye. And I got my PDF file. They took my CSAT and they pushed me a promotional message for some pension fund that they wanted to position to me. Awareness campaigns can be of many types from an engagement standpoint. Think about this scenario. If you want to, let's say, position financial services to our rural community or to our farmer network, very, very easy to say that, hey, there's a potential of a cyclone coming up, and we are just making you aware of that. So what you're doing over here is not necessarily soliciting business in every conversation, but also using that one channel to constantly engage with the user and adding value to what he would really, really appreciate coming from the business. It need not be only weather updates. It could also mean, let's say for a farmer in this case, a lot of banks today have these, or many NBFCs also have these PAPL kind of pre-approved personal loan offers, right? Just imagine if, as a farmer, he receives this saying that I have a pre-approved loan of 3 lakh rupees. And I say that, okay, I'm interested in this, and you ask me what amount, and the third window I say I'm interested in 1 lakh rupees, and then you give me options to say, if you were to repay this, what are your EMI options, right? You can pay it in 12 months, 24 months, or 36 months. And right there, the farmer has given you and applied for a 1 lakh loan, which is pre-approved through a simple conversation on WhatsApp. And you push him that application also right there, saying that, okay, you have chosen a 1 lakh rupee loan for 36 months at an EMI of 2916, which will result in whatever the total payback of 1 lakh 5,000 rupees as an example, and your transaction is done. So these are some of the examples that I wanted to show you. I know I've taken a lot of time. I'll take a pause here. If you have any questions, happy to take them. Okay, just could you pass on the mic?
Check, yeah. Maybe 2 years back, we all used to use different apps and different services for different things. Say push and notifications and emails for upsell and resell. Payments app for payments. WhatsApp for private messages. Now, when everything is under one roof, how do you manage that differentiation?
You're saying in terms of how that experience will look like on WhatsApp?
It's not about experience. It's about I am coming to WhatsApp to call my friend or for my parent, but I see a lot of pushes coming to me.
Right.
I don't want that.
Sure. So see, as a consumer right now, again putting on the consumer hat, there may be instances where you may get unsolicited communication from a particular business as well. But the beauty is that that consumer is empowered to block and report that number right away. That's one. So as soon as you block it, that chat goes away from your, once you open your WhatsApp, you will not find that chat anymore. Now, let's say that that particular communication was not great, so you don't want to block them, but you want to stay connected with them. That anyways that business chat will flow down somewhere in your chat history. And that's the only way. And that signal also gets sent to the business, by the way, which means that, let's say if users are blocking and reporting, that actually impacts the health of that business's WhatsApp number. So they will have to also be very, very careful. It's an experience that is getting developed. It'll keep improving. And you'll see that as consumers, you will then choose that, okay, these are the set of businesses I want to engage with on WhatsApp, and these are the set I don't want to engage. And that power will remain with the consumer.
It's not about whether I want or not want. It's about people have thoughts that, okay, I go to Google for X, I go to Amazon for Y, I come to WhatsApp for doing a chat.
Right.
Now I am seeing a lot of other things. It's not that whether I want or not. Is it a lot of crowd and is it not overwhelming to customers?
Right.
How do I say, I am not saying your downtime bank is doing bad. I'm saying it just at this point in time, I am not interested to engage.
Right.
I don't want to block and say that this doesn't make sense to me. I just want to say, no, this is not the platform. I want to engage with them.
Sure.
How do I, no, if customer wants that, okay, I am only using for personal, I am using it for business, or say I am okay to have pushes coming me. How do I set it up?
So before I hand it, even Arzan wants to take that question, but I'll just add one thing, that the communication that we are having more and more with businesses is to tell them that exact same point that you raised, right? Why not ask the user when do they want to engage with you? Why not, for example, let's say I'm interested in a financial product. Let's say I'm actually taking a new term insurance, right? I've just started my corporate career. Now I want to take a term insurance for myself. I'm getting married. I want to know, which means that I now at this point of time actually want to engage, let's say in this example, with HDFC Life. Now in this scenario, I may at Sunday 11 p.m. want to do that engagement and then say that I also need some additional help. Let's say the bot is not answering. And then the bot pushes me to say, hey, would you like to block an appointment for, let's say, next Saturday at 11 a.m.? And you then continue that conversation at that point. So a business actually has that choice to build that experience to also respect the time when you want to engage with them. So we are doing that education as well, and I think businesses will evolve and learn that. For example, even when doing, let's say, a campaign on credit cards, right? I may want to educate you as a business, but if I just ask you what kind of a credit card are you interested in, let's say you may be interested in dining rewards, Arzan may be interested in air miles rewards, someone else may be interested in movie tickets as a reward, you ask that query and maybe nudge them to that, rather than in your case, that unsolicited campaign, which is very generic in nature for a product I was not interested, that I would agree is a bad experience. But that's something that the businesses will need to learn, and it's a conversation we are driving every day, because use it as a two-way communication platform, take feedback, make it personalized, and ping them at a time they are keen to receive communication from you. All of those are possible. It is just that as we move forward in this journey, the businesses will start learning that and will adapt to the consumer's needs, because they will also, more than anything else, fear being blocked by you as a consumer. So just imagine if I'm a bank and I'm giving very important notifications to you, but I pushed 3 campaigns and you blocked me. I've lost you for life. Right? So the businesses will become smart about it, but to your point, I absolutely agree with you. It is something that the businesses will have to learn, and that experience should improve over the next few months. Arzan, if there's anything you want to add.
I just want to add that as a technology, there are certain self-governing mechanisms by which we inhibit businesses to just go overboard and abuse the platform. So for example, if you're a business and you want to use WhatsApp to target your customer base of say 10 million users, you will not be allowed to message, let's say, 1,000 unique phone numbers for 2 successive days without the quality rating of your message change from say green to amber, which means you have to have a very high hit rate in where people don't block you, which also means you are responsible to send messages to the numbers who are your customers and not any random number that you may have acquired through a database. If you do that successively for 2 successive days, you move to the next tier of 10,000 unique users for 2 successive days. That moves to 100,000. And then only if your quality rating doesn't deteriorate are you able to message an unlimited number of users. Now, let's say you're on an unlimited tier. You're messaging 100 million users a day. You're not getting flagged. Let's say tomorrow you get another database of another 100 million users in the country. Just because you're at an unlimited tier, you think you can just message them and you'll potentially acquire new customers. 99.9% your number will get flagged because you're sending messages to a consumer who may not be relevant to your business. They're not expecting a message from you and they don't even know you. So why would you do that? So as a business, you are also equally responsible to ensure that you're targeting the right audience. You adopt a set of strategies to ensure you're getting the right consumer on the platform, and then you keep him engaged across every stage of the business life cycle. If businesses don't respect that, they're bound to get blocked. So technology can only do so much. I think everything else depends on how the business wants to construct the entire experience.
It's a good feature, but think about me. I am actually chatting, might have a 30 apps. I might have Policy Bazaar, I might have Make My Trip, I'm doing Amazon, I'm doing Flipkart shopping. I am doing some 30 or 40 things in a day. I have independent apps for that. And I'm an eligible customer. I'm not going to block any of these services because I use them day to day. And they are sending me messages. But this is not the place I want them to send. How do I block? How do I say that? I don't want it a WhatsApp channel, but I want it in your channel. I'll come to you when I need you.
Absolutely.
I don't want you to come to me and push me your things because I am busy right now. How do I say that?
Absolutely. And we are having that conversation with businesses to say that they are, in fact, they're already doing that. You know what they're doing? They're building multiple data sets. I'll give you an example. So let's say I, as Downtown Bank, have 1 lakh customers. They will first approach you on WhatsApp and solicit that would you like to continue communication with us. Let's say out of 1 lakh, 80,000 have said that yes, I want to communicate with you. And then you follow it up to say that, hey, we have great offers for you. Time to time, are you also interested in getting some offers from us? And let's say 60,000 of those give you approval for that. So now you restrict yourself to say, I will only run campaigns with those 60,000, right? So it's up to the businesses to give the consumers the opportunity to give feedback that, hey, I want important communications to come on WhatsApp. I don't want promotional offers. Or even if I want promotional offers, I only want it on a Saturday as an example. So it's up to the business to design that. If businesses fail to design that, they are at the risk of being blocked. And that's a choice they will take. As a platform, as Azan said, that it has more benefits than these challenges. And hence the platform is open for businesses and consumers to decide what kind of experience they want over WhatsApp. Sorry, just take that question once.
Yeah. Just extending what she was mentioning about. See, it's a second phase of where I will block it. But first phase is where I'm receiving it.
Right.
Now look at today the kind of education institutes, classes, or whatever you call it. Yeah, like Baiju. Sorry to take that name. But they flush messages like anything.
Right.
Yep. And as you rightly said, yes, definitely data will be churned out and they will be blocked if it's not successful. But forget about others. Why I'm getting that message today? And it's not by you. It can be X, Y, Z, all those things.
Right.
So point is, she is talking about customer experience that I'm suffered. Okay, you will block that company and all that. It's secondary thing. Why? And take one. It's automobile. Yeah, we are getting day in day out messages from different vendors. So such kind of things happens.
Right.
Yeah? So okay.
See,
so I'll not get into this discussion. Sorry.
But I'll take
But
that. I'll just address that. See, at the end of the day, it's a platform which allows anybody to message you, right? And so it allows you also to do the same.
Yeah.
In this scenario, for this particular edtech, you can always approach them to ask that, hey, how did you get my number in the first place, right? See, at the end of the day, WhatsApp can't do that for you, right? But you can definitely go and question the business because they have decided to send you an unsolicited message.
Sorry to interrupt because actually my topic was different, but I just
Yeah.
The point here is, if I get 50 messages per day, the way we get SMS and sometimes credit card calls and those stuff,
Right.
how many of I will be going and why should I spend my time blocking those 50? I have to remove WhatsApp there because I can't go and doing it. Yeah.
Sure.
Okay. Sorry to say that.
Yeah,
Now,
fair
second,
feedback.
coming back to the actual question I wanted to ask. Okay.
Sure.
Sorry, not to continue further. Now you gave example about the insurance policy where I can say, hey, I want the insurance policy. That shows that integration is between WhatsApp and my back office systems and all those stuff.
Right.
Correct. Now, what level of security is expected? Because this, you can understand, if somebody's phone gets hacked and it starts, sending wrong requests to the systems, definitely WhatsApp will not block it because it is getting requests to get a policy document or we are talking right now just simply policy document. It can be customer database. It can be anything. So what kind of security we are expecting here?
So I will not address the fact that what happens if your phone gets hacked because I let's assume that seems to be a rare instance, right? The only situation in which someone will get hold of my WhatsApp access is if I've left my phone unlocked. And it's very likely that I've given my unlocked phone to some friend or family only. In the event that does happen, that check is with the business to authenticate that user, right? WhatsApp does not do that for the business. So what happens between a consumer and a business over WhatsApp as a platform, the chat itself is completely end-to-end encrypted, which means I'm not party to that chat. When I pinged HDFC Life to fetch my policy document, that was between me as a consumer and HDFC Life, where WhatsApp happened to be the platform which was end-to-end encrypted, where including WhatsApp, nobody can read what happened between me and the business. So the service is completely end-to-end encrypted, especially when it comes to financial services. This is an area of concern. There are several financial services already live on WhatsApp, and they do come to us asking for these security and compliance checks. It could also mean reporting to RBI itself to
or
say
multi-factor kind of something.
Exactly.
Like that,
so that is the onus is with the business. And as far as validating the fact that we are end-to-end authenticated and that we don't store any delivered messages, there are audit reports available that we furnish to businesses under NDA whenever asked to say that, hey, we are a secure platform and you can use that in any communication with any regulator or any internal InfoSec, compliance or legal team.
Okay, so stepping back. So there could be some kind of mechanism like multi-factor authentication or something. Is it established already or it is up to business to get
No, so today what could happen, for example, is you could send me an OTP on my registered mobile number and use that as one means of authentication.
Okay.
Let's say if you as a business want to bring in a second factor of authentication, you can always give a button action saying authenticate now, which redirects to a light web page where you take whatever authentication you want to and then say, okay, go back to the chat and continue the conversation. So as I said, it's up to the business to authenticate that user and ensure that the right interactions are happening, because WhatsApp itself is not party to any experience that is being designed between the consumers and the business.
Okay, makes sense. Thank you. Thank you.
Okay, sorry, I'll just take this once. Yeah.
Or is it a protocol?
No, it's a standard UI that we give to businesses because we want to ensure that as consumers, we have that simplicity in terms of the experience given to us, right? So you will, just like you chat with your friends, you will chat with the business. There is no additional experience that a business can design for themselves. If at all that changes in the future, we'll see.
but there's no designing from a developer perspective that he can come in to say, I'll design this experience. The login experience I specifically spoke on was a web page redirect where you're designing the experience on the web page, not on WhatsApp itself.
So let's say if there is either like multiple streams of commerce, right? Let's say video commerce or group buying, which you want to do over WhatsApp. So all these protocols are also designed already, or this is something for the startup?
It's a one-on-one private chat capability only, which means that as a business and a consumer, you can chat one-on-one, and only the chat and voice notes are available. Video APIs or voice APIs are not there. So for example, when I chat with you on WhatsApp as a consumer, I can make you a video call or I can make you a voice call. That's not available for when businesses are interacting with consumers, at least for now. So the only experience available is a controlled UI experience which WhatsApp gives to businesses to only chat and use the rich media that I shared earlier to communicate with the user base.
It's all link-based native flows.
So you could do a mix of both. It could be native flows where reply buttons are having the chat communication within WhatsApp, or link-based buttons which redirect to any web page experience that you as a business choose to design. That option is given to you whether you want to build a native journey in WhatsApp or redirect the user. The redirection is at your call in terms of whatever drop-offs that may happen. But if you want to reduce that, try to build a native journey within WhatsApp itself.
But I'm sure the experience is not like a web redirect, but could be a native redirect where like the screen is.
No, it is a web redirect
It's
only.
a web redirect.
It's a web redirect. There is no native
Unlike
experience.
the geo-commerce experience, which is the catalog within the WhatsApp, which is a native.
Yes, that's a native experience. There's no redirect happening.
Yeah.
This to us as consumers. In fact, you can try that. You can try the GeoMart experience yourself as a consumer, ping the business.
Yeah.
The catalog opens up in WhatsApp itself because that's a native capability we are building.
Correct.
Launched now with GeoMart, will be available to all businesses soon.
Okay, so once that's opened, then you have these native flows for businesses to.
Yeah, so I will differentiate that again. Native flows, this is also a native flow, which is happening as a to and fro communication within WhatsApp.
Correct.
Or you may choose to terminate that to say, if I'm interested in a 3 lakh loan, click now and a web page opens up and you take the user outside of WhatsApp. Or you give a option over there to say view catalog and you show him the catalog. So that's catalog is also one of the journeys that you can design on WhatsApp, but otherwise, more or less, it will be this conversational flow which will be most effective for you for any conversation with your customer.
But I'm assuming that the washing machine example which you showed is like TBD, like it's not yet live.
That is live today for any businesses if you have a catalog limited to 30 products.
Got it.
Yeah. Sorry, you had a question.
So I think it's kind of vector.
Okay, fair. Yeah, go at the corner there. Sorry, I'll come to you as well.
Hey, hi. A short question. I wanted to check if from a business side, right? So does WhatsApp provide any targeting capabilities in terms of profile, customer
Absolutely
profile?
not. Okay. The platform is completely end-to-end encrypted, and anything that you as a consumer do on WhatsApp is not shared with any business. So there are providers in the market who give you that option to open up the native UPI apps to make a payment. You will have to work with that service provider. Offline, I can connect you to a few service providers who give that capability.
But iOS, that's an issue.
Yeah, so there will be that additional hopover that will be there. It is again that service provider that will help you understand what exactly that experience is, but agree with you. The experience is more seamless in Android than on iPhone when it comes to payments.
So this service providers would be the payment gateways?
Yes. Yes.
Okay.
Yes.
Mohit here, maybe I'm without the mic. So, see, launching these chats is not new to the Facebook ecosystem, right? If we take a step back, right, maybe back few years, Facebook launched in Messenger the same Facebook chatbot, right?
Right.
It had this button, it had this catalog, it has option to pay, right? All of this stuff, right? And that Facebook Messenger was at its peak at that time, right? Comparatively to now, right?
Right.
But we know that it kind of didn't pick up as expected to what we are expecting from WhatsApp, right?
Sure.
And one of the learnings from that time was that somewhere users are more comfortable tapping buttons, not typing per se, right? And here still, right, what I see is that even in case of banks sector, the first message, right, you need to start with hi, right? And look at Indians, right, that hi button is not intuitive, right? Somewhere that user initiated messages still needs to be addressed to per se be able to have a tab button, right? So the larger question I have is that what are those learnings which are flowing in here, and why we believe as merchants, right, who have already tried Facebook Messenger in past, shall invest here and try this out?
Sure, I think that's an interesting feedback that you're giving. Like, let's say if I were to engage with a business, can there be a button right on top to say start the chat itself rather than pinging hi, which may not be a behavior I may be used to. But to counter that, I would rather say that give it some time, and this entire user base will become, that behavior change will happen, where they'll become comfortable with chatting with businesses on WhatsApp. And a lot more is coming in over the next 6 to 12 months, which I'm happy to get into a one-on-one discussion under NDA to say, how are we making this experience better and better with each passing quarter, which was not the case with WhatsApp earlier. What WhatsApp used to do, see, WhatsApp serves more than 2 billion customers globally, right? So any feature launch, it does very, very carefully, because the cohort of users, the sheer volume of different cohorts that are using WhatsApp is very, very vast. And hence that experience needs to be super, super simplified. That is taken care of, and these new features are being brought in such that that same experience you have when you're chatting with friends and families, you also start getting when you're chatting with businesses. So I would suggest that you wait for it, or we get into a roadmap discussion separately. As far as Facebook Messenger goes or Instagram Direct goes, that's a direction we will actually now start taking as learnings from WhatsApp and bringing it into Facebook Messenger and Instagram Direct. In fact, as time progresses, we will also now not just be a WhatsApp business platform, but we'll become a business messaging team to help businesses, saying that if they want to construct experiences across these three platforms, can we bring some amount of unification to improve that? It's in the roadmap again. So I'll just leave you with that thought. I completely appreciate your feedback around that, but just wait for it, and there's a lot more coming in, which will make it very easy for consumers to communicate with businesses on WhatsApp.
Sure, thanks.
You had a question?
So wanted to understand what kind of journey customer will walk through. So for example, let's say loans or insurance, we'll start with loan. So it's more of a lead generation where the customer can be getting a notification saying that you can get a loan of like what you showed. Or can it go to an extent and maybe customizable as well, where customer can also sign the agreement? And there are various things which you, I mean, we as a fintech develop a lot of apps, and rather than spending so much of money, WhatsApp will available with almost all the people. Yeah. So is it possible to customize that as well?
Absolutely. Absolutely. And there are many businesses already, including financial services companies, which are offering pre-approved loans and spot offers, be it for personal loans, business loans, home loans, as journeys on WhatsApp. So you could either do a pre-approved loan or even solicit a spot offer right there by, let's say, doing a quick credit score check with Sibyl, as an example. And those are journeys that I can show you offline, where I can actually apply for a business loan and get that disbursed in 24 hours. Because post the journey I complete, they then have some paperwork that they may still want to do. So they promise saying that the loan will be disbursed in maybe 10 minutes, but it actually takes 24 hours. But that still is an end-to-end journey designed within WhatsApp. There are, in fact, even some financial services institute like securities companies also have their native Demat account opening journeys also on WhatsApp, where the only place where they redirect is when they have to do an e-KYC for Aadhaar. I think you have to go to the Aadhaar portal for doing that final e-sign. That's the only time when the user is going out, but everything else from a journey opening is happening natively on WhatsApp, and you can design that experience basis the product that you are positioning.
Okay. And in terms of the other partnerships which are, so we have to work with the tie-ups which WhatsApp has, for example, let's say insurance or even let's say investments. So do you have to work with the partners which you have already onboarded, or can we choose our partner and then we can have an API arrangement?
So so the WhatsApp business platform provides its set of APIs to partners. They're called BSPs. There's an entire directory of BSPs available for you to choose from, who will then design those experiences for you on WhatsApp. So you will have to work through a partner. There is no direct integration with WhatsApp.
Okay, thanks. And so how do we get in touch with for understanding?
I can connect you, I can share the link with you offline. We can, otherwise even a quick Google search will give you the partner directory.
Okay, thanks.
You had a question.
A follow-up on what you were trying to show, the shopping experience on WhatsApp, right? So as I understand, the success of shopping experience on WhatsApp depends also on like how easy is it for a customer to make the decision that am I going to purchase or not, right? So when I'm taking like examples like grocery, right? It's a it's a low ticket item and can be purchased, but as compared to, let's say, a washing machine, right?
Sure.
Which is a high ticket item. Now, how do you design the experience in such a way that the drop-offs at that point does not happen due to the fact that, hey, I'm not sure if I want to buy it or not, right?
Sure.
Because I cannot have an elaborate menu or specifications as I can see on a Flipkart, or if that is possible, I'm not aware. Like, could you throw some light on it? Like,
So
how do
there
you
are-
address the
I
intent?
can point you to developer docs which extensively speak about what are the options available for you to play around with the catalog in terms of how much information you can give. It's all a design experience. When it comes to the buyer behavior, it depends on the product, and the business will know best that, okay, does this experience make sense in this environment or not. So we've enabled the catalog. The advanced version of the GeoMart experience also you'll see is absolutely end-to-end as an experience on any other e-commerce site, including the GeoMart app itself, because all SKUs are available in all shapes and forms, all categories are available, and all information for each product is also available, including a native search for that product as well. So there are multiple capabilities that are coming in to make this simple catalog of 30 products more robust. There are developer docs which will tell you what that experience can look like, and if it suits the nature of the product that you are trying to position, then you can bring it up. As we say, we are just bringing the platform to you. It's for the business to choose if it's going to add value to them for that particular product category or not.
Got it. Just a quick follow-up on this. So while you guys were working on GeoMart experience, right? I just wanted to ask you something. Like, me as a user, when I come to WhatsApp, my intention is to text someone or reply to someone's text, right? How does WhatsApp envision to change that mindset, right? Intent mindset, like, hey, now I want to order groceries, top of the mind WhatsApp comes, right?
Sure.
Order from GeoMart. I mean, is there some thoughts on that side?
We can again discuss that in NDA in terms of what's planned in the roadmap, but a lot of things will happen where we will do that education.
Got it. Thank you.
Hi, I have a quick question. Sorry, I just had a mic for a long time.
Just a quick time check also. Can I take 2 questions? This is the last 2 questions.
Yeah. So basically, just a quick one. Like all these templates are available for all kinds of businesses, like early stage startups as well.
Absolutely.
Okay. And to get into having these kind of access, like we should just contact our Gupshup partners or something.
Exactly. Gupshup being one of such partners, you can contact any partner and they will get you enabled. What happens is, for any business to come onto WhatsApp, there's a business verification process that WhatsApp does, so that we test your authenticity before we expose you to our consumer base. So you will have to go through that business verification, and once you are onboarded, you get that display name with a green tick, and you can then go live, and your partner will be able to do all of those things for you.
Got it, thanks.
Hi. All that what is seen right now is pretty much do it yourself. Like a consumer is actually giving the consent, is a one-to-one communication with the business which is happening.
Right.
Financial services are also rendered in the form of an assisted mode, where a business correspondent actually does all of that for the customer.
Yeah.
Is there any option available for in WhatsApp
Absolutely.
business?
There are 2 things that businesses have already started doing. One is that, let's say if I have queries which the bot is not able to take, you can have a live agent handover within WhatsApp itself. So now your call center agent, which was making 10 calls a day, can now chat with 10 customers in parallel, trying to address complex queries which the bot was unable to answer. And then he assists and nudges the user towards the buy journey and hands over the conversation back to the bot. So that kind of a live assisted buying experience can be designed by having the live agent handover. That's one. Second is, you could alternately launch a separate number specifically for your agent or your advisors to carry with them, where, let's say, I'm filling up the form on behalf of a customer. And eventually, I'll give you an example also. Let's say it's a life insurance again. I don't want to fill the form. I'm a user who's unable to use WhatsApp to even chat with a business. An agent comes to my home and says that, okay, I can help you, take a term insurance. I need 10 inputs. Now that partner can log into WhatsApp, authenticate himself as an agent, and then do the assisted journey for this user. Then a point may come that, let's say he has to fill up 10 questions on health, and he may not want to give that information to the agent, for example. He just enters the mobile number of that user, the lead, and then your bot pings that user on WhatsApp to say, hey, you've reached step 3 or 4 of your term insurance. Now answer these 5 health questions to complete your insurance purchase. So you can have a dual kind of an experience designed WhatsApp as a platform allows all of it. It is up to the business to then conceptualize that, okay, this journey makes more sense for me in my context versus, let's say, a completely self-serve experience on WhatsApp. And you can do a mix of both. I'm happy to take questions. Yeah. On the native versus a platform like WhatsApp. Awesome question. Unfortunately, no answer. It's end-to-end encrypted, so WhatsApp doesn't know what kind of conversions the businesses are getting. However, in a few conversations that I've had, all that I can tell you, and this is the only information which we as WhatsApp share with businesses, is in terms of how many messages got delivered and read. So usually we've seen at least 6x to 7x read rates versus any other digital channel that is out there. So on read rates itself, if your conversion is so high, your click-to rates also accordingly improve. And the click-through rate is completely up to you as a business on how effective the campaign it was. Because I have consumed it, I have read it, but I have not clicked is not something WhatsApp can help you with. It is to do with the quality of the campaign itself. But that amount of information we do share, and hence it is more effective only in the conversations I have had offline. But as such, there is no database we can publish to say that, hey, WhatsApp knows that what kind of conversions is happening because it's end-to-end encrypted.
So is that blocking is the one of the criteria, or how that goes? Mm-hmm. Correct. Okay. So that will be the criteria so that that business will not be allowed to send more messages. Okay. Thank you.
Thank you, everyone. Happy to take questions offline.
Thank you.
ती बोलते बघ बघ बघते माईक इकडचा माईक दे ना घेऊन आले दोन माईक दे म्हणतात
Check. Well, thank you so much, Mr. Gaurav, for this insightful and a very interactive session. I'm sure there are too many questions and interactions can happen offline now. And quickly, a short break, and we'll resume back in next 5 minutes. Hello and welcome back to Global Fintech Fest. Up next, ladies and gentlemen, is going to be a special address, and it's been quite an insightful and interactive day so far, and we definitely look forward to the same as we are running long in the process. Well, up next, may I please have our moderator, Mr. Chaitanya Bal. He is the in charge State Government Relationships, NPCI. He'd be moderating a very special session for you all. And the topic of discussion is digitization of transport in BST Mumbai, NCMC, a case study. And to make it even more interesting, we have somebody really special with us today. Joining in, we have Sri Lokesh Chandra, General Manager, BST. And without any further ado, for this case study, may I please request Mr. Bal to take over the proceedings, please.
Thank you. Good afternoon, everyone. I'm here to introduce you today to someone who has over 30 years of experience in the Indian Administrative Service. Throughout his tenure, he's held prominent positions in the central government of India as well as the state government of Maharashtra. He's been the chairman and managing director of CIDCO, the municipal commissioner and collector of Nagpur. He's also been the chairman of Nagpur Improvement Trust. Also, from 2008 to 2015, he's worked as a joint secretary in the Ministry of Steel and Ministry of Power. He's currently heading an organization that is the lifeline of Mumbai transport. In a short span of time, he has revolutionized transport in Mumbai through his vision for digitization, improving processes in innovative ways to reduce the carbon footprint and make best truly the best. Please give a warm welcome to Shri Lokesh Chandra, General Manager of Bruhan Mumbai Electricity Supply and Transport.
बैंड्रा ईस्ट से शिवाजी पार्क, मेरा रोज का रूट। आचरेकर सर के लिए प्रैक्टिस पे टाइम पे आना बहुत इंपॉर्टेंट था। अगर बीएसटी टाइम पे नहीं पहुंचाती तो मैं शायद आगे ही नहीं बढ़ पाता। और आज बीएसटी आगे बढ़ रही है, अच्छा लग रहा है, एकदम मस्त।
अब बेस्ट चलो ऐप के साथ आपकी बस कहाँ है देखो, भीड़ कितनी है जानो, और मोबाइल या कार्ड से टिकट खरीदो।
पुढे चला बीएसटी, पुढे चला।
वक्त के साथ पुरानी यादें ताज़ा हो जाती हैं। वो डबल डेकर की सीढ़ी, वो फ्रंट वाली सीट, क्या दिन थे। फिर बड़े हुए, ऐसे वैसे तो थे नहीं, पर अपनी बस तभी भी थी। कितने ऑडिशन तक ले गई, कितने स्टूडियो तक, चमूर की चौल से जूह के घर तक। कभी सोचा भी नहीं था इतनी दूर आ जाऊंगा, और आज बीएसटी खुद आगे बढ़ रही है, अच्छा लग रहा है यार।
अब बेस्ट चलो ऐप के साथ आपकी बस कहाँ है देखो, भीड़ कितनी है जानो, और मोबाइल या कार्ड से टिकट खरीदो।
पुढे चला बीएसटी, पुढे चला।
A very good afternoon, ladies and gentlemen. BEST is on the path of transformation, modernization, and digitization. The city of Mumbai is the financial capital of India, the city that never sleeps. The organization which keeps it up and running is the BST, BEST. I'm heading this 150-year-old organization, which is providing electric supply in the main island city and transportation to the Mumbai and suburb area. We are having a fleet size of 3,700 buses, having a daily ridership of 3.5 million, and we are taking care of 1.6 crore Mumbaikars. We started our journey in 1874 with the horse-driven trams, and we had been always ahead of time for adoption of new technologies for making safe and comfortable journey for our commuters. We started the first electric tram in city of Mumbai in 1907. We started the double-decker tram in 1920. And we started the first ICE bus in city of Mumbai in 1926. And exactly after 100 years, we are again going back to electric vehicles. Our whole fleet will be electric by 2026. Now, in the present day scenario, in any city, the air quality is directly dependent on the air pollution. And from that perspective, the public transport, efficient and good quality public transport plays a major role in this. As in any metro city, around 25% of the air pollution is from the vehicular pollution. And in absence of any good quality transport system, people are forced to use their own vehicles, which creates this pollution. If we see the global standards, for a population of 1 lakh, we need around 60 buses when we are talking about the public bus transport system. And in the context of Indian cities, most of the cities have 1/3 to 1/5 of this requirement. Now, if we see the urban population in the metros or cities, which will be around 530 million by the year 2025, if we want to shift these people to the public transport, what does it mean? We need to add 1,50,000 more buses. At present, we have only 45,000 by the year 2025. Now, if we do that, what it will result into? This will save 47 million of fuel. This will save 4 trillion rupees of the public money, because public transport is always cheaper than 63% than a private mode of transport. We will be saving 65 million tons of the CO2 emissions, and it will also save at least 85,000 lives. So there is a need for a efficient, reliable, passenger-friendly, at the same time environment-friendly public transport system in Indian cities. And in the BST, in the city of Mumbai, as we are mandated with the public transport, public city bus transport, we are working with the vision of shared, clean and connected mobility. Any public transport has two major issues, especially the bus public transport system: the reliability and the quality. Now, reliability is directly related to the information available with the commuters, and quality is directly related to the adequate or efficient public fleet, bus fleet. Now, if we have to improve the reliability, we have to provide some kind of medium through which the commuters are aware when their bus is coming to the bus stop. This also reduces the effective waiting time, which helps in wasting their productive man hours or man days. Now, with this, what we have done in the BST, I like to share with all of you. We have tried to make the public transport system reliable by providing a app which gives the information in real time to the commuters. At the same time, we are also working to provide these public information systems on our bus stops. Then we have also redone with our routes or trips, because we have realized that around 85% of the commuters, the average trip length is only 7 kilometers. So we were running around 490 routes or more than that, which were having route length of 50 or more kilometers. And the trip frequency was ranging from 20 minutes to 1 hour. And most of these long trip length routes were having frequency of 45 to 1 hour. So we have done the route rationalization, where we have reduced this frequency time from 45 minutes to 1 hour to 15 to 20 minutes. So that has resulted in efficiency improvement. At the same time, it has also given a confidence to the passengers or commuters that if I miss one bus, the next bus will be available within next 10 to 15 minutes. Now, when we were looking at the options for the fleet augmentation, now luckily at this moment, everybody is talking about the electric vehicles. So for city bus transport, we have realized that if we are going for the electric buses, it is not only cheaper but also environment friendly, because per kilometer cost of running, if we see the diesel buses, is around 50 rupees per kilometer. In the case of the CNG is 30 rupees, and in case of the electric, it is 10 rupees. So it's at the 1/5 the cost of fuel or operation. Over a period of 12 years, if we take the life cycle of that bus, it is much more economical for us to go for the electric vehicles. And hence, as a policy decision, we are going only for electric vehicles henceforth. And by end of next year, our 50% of the fleet will be electric buses. As of now, I am happy to share with you that Mumbai is having the largest fleet of electric buses running. As on today, we are running around 400 electric buses in the city of Mumbai. And as we are reducing the cost of operation, we are also making these operations self-sustainable, because most of these public bus transport systems are running in losses, and same is the case with us. But by introducing the electric buses, we are reducing the cost of operation, and we are sure that next 3 years, from the loss-making entity, we will turn out to be profit-making entity. And at the same time, with this use of technology and information technology, we are trying to make our services passenger friendly. We have started with our introduction of ITMS, that is the Intelligent Traffic Management System, where we have modernized our operations, may it be the crew operations or crew scheduling, route scheduling, maintenance of the vehicles, then providing the information to the passengers. So with this, we created the environment which helped us in rolling out of the digital ticketing system in city of Mumbai. Now, what is this NCMC compliant digital ticketing system? When we look at, everybody is talking for cashless transaction and more digital payments. And when we talk about the bus transport system, in fact, when I took over last year in May, I was surprised to know that in the city like Mumbai, though we have the ticketing system, but it's simply you are printing out the ticket. So the machine is, there is no option of digital payments. So we started working on this, how we can make it a kind of where people can make the digital payments. At the same time, they need not to stand in the queues. And the hassle of having the change, because most of the time there is a quarrel between the conductor and the passenger for getting the change. So we worked for this, and within a period of 4 months, we rolled out our mobile app, which is Best Chalo app. Now, this comprises the ETIM machines, which is the touch screen machines, latest version. Then we also have the app. Now, app, it has 3 distinct features. One is the live tracking of the buses. So in the real time, you can see any route when the bus is coming to the bus stop. The second important feature is the crowdedness in the bus. So this also gives you an option whether you need to wait for the next bus where you can comfortably sit, or whether you want to take this earlier bus where there is no sitting available, but you can take that bus. And third thing is regarding the ticketing. Now, you must have seen during the peak hours, maybe the morning and the evening, In Mumbai, it's a very common scene. On most of the bus stops, you find a long queue. And they are basically waiting in the queue for getting the ticket and boarding the bus. Now, with this app and this card, which we have rolled out, you can buy the ticket while sitting in your office or home. And you can plan your trip accordingly. So that it not only provides convenience to the commuters, but it also saves a lot of waiting time at the bus stops. So, along with that, as all of you are aware, that when we are talking about Digital India 2.0, our Honorable Prime Minister's vision of one nation, one card means you can travel with this one particular card throughout the India in different modes of transport, made with a metro, made with a mono, made with a city bus service, or made with a other bus service. So for that, one nation, one card is basically, with the help of the NPCI, is the National Common Mobility Card. Now, what are the features of this card? Basically, it's a RuPay debit card, where you can take your journey in any bus service or any metro or any other mode of transport where the ticketing system is NCMC compliant. Now, with the bus service, what is the main issue? It is basically the connectivity. When the bus is moving, most of the time you don't have the connected network. So, this NCMC card which we have designed for the city bus service is basically, it can work in the, if the network is not there. So, offline mode it can work, and then you can use this card anywhere, made with the Starbucks, made with the payment of the toll, made with your petrol pump, whatever, as a debit card. So you need not to have different cards in your pocket when you are having this NCMC card. Now, other issue is, you must be aware, when we talk of any kind of debit card or credit card, you have to fill up so many forms, complete the paper formalities when you get the card, and that too also maybe after a fortnight or whenever, whatever the time they take to courier you the card. So in the kind of passenger commuters, bus commuters, we can't have this kind of system. So what we have done, we have devised the whole system in such a way that there is no paper is required. It's a zero paper work. And the conductor in the bus can, on the spot, can issue this NCMC card. How it is being done? We are asking only for the Aadhaar number or your PAN number. You get a OTP. The moment you give the OTP to the conductor, he validates that card. And if you want to recharge it, it can be spontaneously done on the spot, 100 rupees, 200, whatever you want. And then later on you can recharge it on the online basis. You can also take the tickets by using this card, and you can also store the monthly passes. So that's how, once you get this, now even if you're traveling to Delhi or Bangalore or Hyderabad, any metro system which is NCMC compliant, you can use the same card. In Mumbai also very soon, now this Mumbai metro line number 1, they are in the process of putting in this NCMC compliant system, ticketing system, and metro line 2A and 7, which has been recently opened up by MMRDA, they will also be having their ticketing system which will be NCMC compliant. We are also talking with the railways to introduce this ticketing system in the Southern Railway. So once this is done, then may it be the Southern Railway, made with the metro, made with the monorail, and made with the best buses, you can use any mode of transport by this NCMC card. Now, you need not to even have my card only. See, this is the card which we have, I'll just, this same card which we have introduced in the city of Mumbai from the best. It's basically issued by the Yes Bank. But any bank which has issued this NCMC card, or you have taken from any city or any bank, you can use the same card for my ticketing system. So it's very, very flexible. It is very, very commuter friendly, and at the same time, it gives a lot of flexibility in use of this card. And few commuters which are like, sometimes they have in the back of mind that if I connect this with the my account and all, there may be some kind of fraud. But in this, alone basis, you can recharge it by paying to the conductor or online recharge. So there is no that kind of, because this is not working in the online mode, so there is no kind of possibility of this kind of fraud or somebody can steal your money. So when we have done this, what we have done, this automated fare collection system, we have gone for a kind of, instead of doing the whole thing on ourselves, basically investing the capital in this system design or making the system for us, we have now outsourced this whole activity, which is basically based on the per ticket use basis. So as far as we are concerned, without having the lot of investment upfront, we are having the world-class ticketing facility, and at the same time, we are also having the comfort of, initially we were paying per ticket around 17 paisa, now we are paying 11 paisa only. So it's not only economic, but it was also very, very user-friendly system which we have introduced. So again, the same thing which we were discussing here, it is also having, yeah. No, it is basically the ridership basis, because the system, automated fare collection system, takes care of all the ticketing. Now, when we talk about only for the digital part, that is something different. But as far as we are concerned, because we have to have a common ticketing system where the accounting and everything is done through that system. So the platform provides all kind of solution. If somebody is not comfortable, he want to use the cash transaction only, this system provides that flexibility also. But ultimately, what we are looking at, more and more people should shift for the digital payment, and they can do it without any hassle of standing in the queue. So as we are moving ahead, I'll discuss with what kind of, and in this, as we have done it on the basically contract model, so without any upfront investment, we have done this. Now, what has this done in the city of Mumbai? In last 6 months, out of 35 lakh commuters, daily commuters, more than 25 lakhs are using this app. This is also resulted in digital ticketing. Now, per day, 5 lakh commuters are using the digital ticketing. Previously, it was 0. And as we are moving ahead, we are expecting that slowly and slowly this should go up to more than 50%. Now, why this is one side is ease to the commuters, ease of like getting the tickets. But another side is how this started, because when I looked at the expenditure side from our transport division, I got stuck at one point where we had the cash handling charges. So previously what we were doing, we were engaging with the banks for taking out our daily collection from all the depots and our electric collection centers. And it was a huge amount. It was around 7 crores per year we were spending just for collecting this. And then these banks stopped collecting the coins. So as a result, after spending 7 crores of rupees also, my problem was what to do with these coins, because they say we don't have any space in my branch. So we are distributing these coins as a salary to my employees, and every month everybody, including me, we are getting 1,000 rupees in terms of the coins. So if you are lucky, you are getting 10 or 20 rupees coins. Otherwise, if it is 5 rupees or 1 rupees, you can say it is a bag full of coins which you are getting in the salary. So that's how this is started. Why don't we have a system where we can reduce this cost of cash handling, at the same time providing much easier solution for the commuters. And then this NCMC card, in fact, we are the first one in India to roll out the NCMC card on such a scale. And now I am happy to share with you that a lot of other STUs also, they are excited to do the same thing, and they are in the process. Now, the third important thing, which is our ultimate goal, to go for the digital buses. Now, what is the reason for the digital buses? As I look at the cost of operation, out of this 150 rupees per kilometer cost, which I am having for my own buses, 90 rupees is the cost of the manpower. So in terms of the driver and the conductor. So if we see the ratio wise, it's almost 50-50. So around 40 rupees the conductor cost. Now if we have this digital ticketing solution, so I can reduce that cost of operation very easily. So as of now, we have 250 buses in Mumbai, which are having this tap-in, tap-out facility. And by end of the next year, we're looking for there's all 7,000 buses which we'll be putting by end of next year when the fleet size is going to double. All these buses will have the tap-in, tap-out system, and we can use this manpower for some meaningful work. Aside this, we are also trying to add some quality in our bus services. Now, most of you who are using the self-driven car, you know the hassle of driving these cars in the morning and the evening during the peak hours. And given a choice, nobody will like to do that because you are always in a hurry and you are stuck in the traffic. So instead of that, imagine a situation where it's a very, very economical solution where you can comfortably, in a luxury bus, you can sleep or you can work on your computer or mobile if you want to. And you can spend this 1.5 hour or 1 hour, which you are every day commuting in the morning and evening comfortably. So for that, we are in the process of launching this premium bus service, which is going to be operational by 26th or 27th of this month. We are providing an alternative for the people who are using their own car or using private mode of transport like the taxis or auto rickshaws. It will be basically app-based. Again, it's a kind of use of the technology where you can book these buses by the app and you can assure, you can reserve a seat. So no standing is allowed in this. And by getting this comfortable journey, you can stop using your own car unless you want for some personal or maybe for some kind of long drive kind of thing. And we are also introduced the double-decker AC electric buses recently. So they will be also functional by end of October because there's some testing and other certification process is going on. So by this, what we are trying to do, we are trying to improve the quality of bus service. And I'm happy to share with you that over a period of last 6 months, our ridership has already gone up. In fact, if you have seen some recent newspaper reports, pre-COVID, we have already surpassed. We are 10% plus ridership. We used to have 33 lakhs, now we are 35 plus. On the contrary, other mode of transport, even the Southern Railways, there is a decline in their ridership. So in BEST also, we were having a continuous decline in our ridership for so many years. So by innovative methods like route rationalization, then introducing this app-based information system and digital ticketing, and not last the least, the electric buses, which are all air conditioned. And another thing which we are doing, we are only procuring the electric buses which are air conditioned now because it is much more comfortable journey and with such a low cost. In fact, my cost of bus operation, if you see the ticketing, and if you go for a pass, now we have introduced a pass system which is not only on the point-to-point basis, it is based on the trips. As you have this mobile talking time, so you can buy based on your trip length, number of trips which you can take under 14 days or 28 days, and you can reduce your cost of traveling by 50%. So imagine a case where 5 kilometer journey in air-conditioned electric bus, you are taking at a cost of 3 rupees per kilometer. So it's a very 3 rupees for the whole trip. So it's a 60% only. And it's equivalent to the air-conditioned local trains. So we are working on that, how to make it more affordable and more people should use. And another thing which we are working on in the BST, it is one of the first in its kind. We may be one of the very few global cities where we are trying to introduce this in the integrated mobility solution. What we are doing, we are also introducing the first and last mile connectivity in the form of the e-scooters. We have already undertaken a pilot project which is having 60 e-scooters in Andheri, and it is very, very popular. So in next 4 to 5 months, we'll be introducing around 2,000 electric scooters. Again, it's an app-based operation where you can take the journey, and you unlock the e-scooter, make the digital payment. Another thing in the this premium bus, again, it's 100% digital payment. And in both the solutions like premium bus and e-scooter, it's a zero investment from our side. In the electric bus procurement also, we have moved to a new method of procurement, that is a gross cost contract, where it's a per kilometer basis we are paying to them. But in both e-scooter and the premium bus service, now we are not paying anything. We are sharing the net revenue. So it's a basically investment from the operator side. They are designing the routes, they are designing the ticketing system, means the fare, and we are sharing our depots and our bus stops with them for maintenance and putting up in the infra required for the charging, and also for whatever the day-to-day operation they need to be. So with this kind of thing, I think we will be the one of the few cities in the world where we will be having the integrated mobility solution. And I am very, very thankful to the NPCI for providing us this opportunity to showcase this. But also, I am thankful to them because this was the fastest rollout of the NCMC card, because we did it exactly in 2.5 months. When we rolled out our automated fare collection system, all the testing and whatever the certification was required to be done, that was done at a lightning speed. And we are also thankful to the NPCI team along with the bank and this Chalo team, which made it possible for us to provide this world-class solution to the Mumbaikars. Thank you very much. If you have any questions, I will be happy to. Yeah. Yeah, please. Yeah. So it is a like 100 rupees which the bank is charging. Basically, it's a kind of the first one-time cost, and after that, initial cost. Yeah. But now we are working with some of these payment gateway companies like Paytm is one of them. So they are coming with this idea that we'll give this card free of cost. So they are given us an offer last week that they want to roll out 2 lakh cards for the Mumbaikars. So it depends upon. Now it's a competition kind of thing, and any bank, as I mentioned, can issue these cards. Even when the banks are issuing the card, we are also talking to them that please issue this NCMC compliant card. Instead of the normal debit card, if you issue that, then this whole requirement has gone. Means you need not to ask for another card actually. Almost 4 months. We have both the cards. One that if you talk about the other card also, that is around 4 lakhs. So closed loop card, and the open loop NCMC is around 1 lakh. Yeah. No, it was initially when we started our automated fare collection system, it was only that we started with. But now we are going for the NCMC card only. As like for this, I mentioned the Paytm also, they are going for the NCMC card only. Because ultimately, you have to have one card only. So right now what is happening in city of Mumbai, Best is the only city bus service where you are using this. But slowly, as you open up this Mumbai Metro Line 1 and MMRDA Metro lines, where you have this NCMC compliant system, the people will find it much more useful to have this card, NCMC card. Yeah.
Can we also encourage the corporate world to also give away using their HR system so that people can start using the NCMC card? Is there any such plan?
Yes, we are in fact talking to a lot of corporates where we are encouraging them. See, it's a kind of economical solution to them, because when you are using this card, you can upload your passes very easily, monthly passes. So instead of individual day-to-day trip-based ticketing, you can ensure that your staff is using that pass. So you are reducing your cost of travel if you are reimbursing that by 50% straightway. And it is more kind of easier to use this card when we are also having the digital buses. So eventually we want to, you can use the app also. That is also zero kind of, if you don't want to even give the 100 rupees for the ticket, this initial card payment, you can use the app. Both have the same features. But sometimes some people feel that it's better to use this card, NCMC card. It's okay.
You said something on the elimination of bus conductors.
Yeah.
For issuing these cards, or let's say for recharging, will anyways.
So then I will not require that person to sit in the bus. So he can be engaged. Now another session we are talking about, we have already talked with the BBPS and the banking, with some banks, where we can convert these people as a banking correspondents. So this person who is either on the sitting, the ground staff as working as a ground staff, or even if he's sitting in the bus, he's not bothered to issue the tickets. He can do other work where, like, if you want to make other payments of any utility, you can make the payment to that. So he will become a mobile kind of correspondent, and you can convert these buses as a mobile ATMs actually. So see, it's very easy for the NCMC card. If you put suppose 5,000 rupees in that, if I allow that person to do this micro banking kind of thing, suppose someday you need 1,000 rupees. So instead of going to the bank, you just hand over this money one day, and then next day when you want, you can take it back from him. So while traveling, you can do your all payments online using this facility, and can do the cash transaction also through the conductor. So it will be a revenue generation opportunity for us also actually. We are already talking actually. So because this will require some kind of approvals from the RBI also, but everybody is very excited to whether we can, and now most of the banks, they have the business correspondent anyway. You can also ask that person to come to your home, take your money and deposit in your account. At the same time, you can ask him to withdraw the money from the bank and give it to you. The same thing. Yes.
So you pointed out that 7 crore you are paying as in cash collection.
We were paying, now we are not paying.
Now that is
we have
zero.
stopped. Yeah.
Okay.
Thank you.
Well, this summarizes the first half of the day. Thank you, Shri Lokesh Chandraji, for addressing the best plans and what the future holds as far as best is concerned. And we will break for a short lunch over the networking period, of course. So we'll take a lunch break and resume back for the second half of the session. Thank you. A very good morning and a warm welcome to one and all. It indeed is a beautiful day, and I am delighted to share it with one and all. My name is Drashti, and I'll be your host at the third edition of the world's largest Fintech Fest, Global Fintech Fest 2022 and 23. Of course, powered by National Payments Corporation of India, Payment Council of India, and Fintech Convergence Council, in association with Department of Economic Affairs, RBI, and IFSCA. To begin this insightful day, I would also request everyone to kindly keep it interactive. Well, moving on, and for the proceedings, firstly, we shall have a panel discussion, and the topic for the same is Business Correspondence Key to Uplifting Digital Quotient of Bharat, the Fintech Way. And we have our moderator, Mr. Sunil Kulkarni, CEO, Business Correspondent Federation of India, to join us today. Cool. Thank you. And come on. Hello and welcome back to Global Fintech Fest. We're resuming the day now, and we have yet another interesting session. And for the same, may I please have up on the stage So this is going to be yet another special address, and still I welcome people. So I request my audience to kindly take a seat and settle down before we actually welcome our speakers on board. Alright, so this special address is also going to be a product launch, and to present the same, I'm going to invite Ms. Juhi Bilani, Lead Product and Research, NBBL, alongside Mr. Subradeep, who's here with us, and they would be addressing Unified Presentment Management System, UPMS. So please put your hands together for Ms. Juhi and Mr. Subradeep.
Thank you and good afternoon, everyone. And thank you for attending this session on Unified Presentment Management Solutions. But before we dive into the entire presentation that we have in store for all of you, I would like to understand from the audience here, how many of y'all have ever used standing instructions in your life, whether it be to pay any of your utility bills or your loan EMIs, credit card bills, or even insurance premiums. So how many of us have used standing instructions even once? Okay, so that's most of us. Now, how many of us have all of the payments that I just mentioned, from loans to insurance to utility bills to credit cards and everything on standing instructions? That's no one. All right. So the aim of this workshop is to, really introduce this product, and it is such a customer-friendly product that we hope that by the end of this presentation, we would have encouraged all of you to start using UPMS for having all of your recurring payments on our standing instruction mode. So with that, we can start with the presentation.
Okay, so I think by now everyone is very interested to know what UPMS is. I think we have created a lot of excitement ourselves. So she's Juhi, myself Subradeep. We are part of the product team of Bharat Bill Pay, and we are here to present to you about UPMS. So before I go into what is UPMS, let me first explain that when you say that you have all the standing instructions on various payments, how it actually works. So right now, all the bank portals, the payment platforms and all that, when they offer you those SI mechanisms, so they are actually connected through Bharat Bill Pay and it's going to the biller. But what happened that all those platforms are doing it individually. So they all have their own algorithm, own logic to keep on, to keep on connecting with the biller platform to check when the bill is due, get it, and then give you a reminder, which is also part of an SI flow, or do an auto debit on your bank account. But what happened that when everyone is doing the same job, that leads to inefficiency, right? So because your bill, the same customer's bill, everyone is fetching. Like if you go to any one platform and has ever paid a bill, they start fetching your bill, which puts lot of load on the biller platform. Like it's a duplication of effort done by the whole ecosystem. Second is non-standardized, like when the bill will be fetched, how it will be presented to you, when your account will be debited, all are decided by those players individually. So you don't get a standardized experience throughout the payment platforms. That's the second. Third is non-universal, like maybe the top platforms, top apps, they have all the facilities of SI, your prominent billers. But not all platforms are offering this same service, or even if they're offering, they might not be having all the billers getting covered in the SI facility. So to close that market gap and give a more convenient, seamless experience to the customers, to people who are registering for SI. So we at Bharat Bill Pay has implemented and launched UPMS, Unified Presentment Management System. What it does. So now UPMS is the centralized platform, which on the one hand is getting the customer registrations from through the bank's portal, through the payment platforms. So we have the customer registration coming to one centralized platform now, and and then the UPMS platform doing like a common integration with the billers, the common fetch, where instead of individually everyone doing the same job, now we will as a common platform going to all the billers, getting the bills from them, and then presenting it to the all the payment platforms, the banks, the portals, the apps, and everyone. Correct. And now what?
So, Shubhriti, do we have a front end where customers can register their bills so that UPMS fetches their bills?
Very, very nice question. I think this question might be coming on the anyone's mind, that whether it's it's a portal, what it is. So UPMS is actually a set of APIs. It's a set of very efficient APIs which are exposed to the ecosystem, starting from registration to presentment to payment, everything. So it's all API based. The front end will be handled and developed by those payment platforms or the portals, which we call the customer operating units, COUs. So going forward, so the centralized platform, what it ensures. First, it's efficient. Okay, how exactly it's efficient? It's efficient because, as I explained, now instead of everyone doing the same job, we are doing that job, doing that heavy lifting of getting the billers based on the billers billing cycle, based on the customer's bill details. So it's, when you're talking about billers, there are a lot of complexities in everyone's billing system. So we as a centralized platform is doing that heavy lifting and doing the common integration with the biller to face that efficiently and presenting it to the all the payment app, all the COUs. Okay, moving forward, this whole platform is going to be real-time and API based. I think that's going to be a marvelous thing because there is no manual activity involved. There is no file upload, no file download, nothing. Everything is API based. Even if it's a bulk registration or whatever, it's completely real time and API based. Payment mode agnostic, which is also a USP of this platform. Like at the time of registration, customer can choose any of the payment methods, be it UPI, RuPay, net banking, whatever. And customer can even change the payment method after doing the registration. They can modify that. I think that's a very unique and friendly feature for the customers. Like, you want to change from card to UPI or whatever, you can do it very easily in UPMS. I think we'll explain this all thing in more detail in the further slides. No amount limit. Another, very great feature. Like when you're registering, there is no amount limit on the registration.
But don't most of the payment modes have an amount limit when standing instructions are registered? How do we ensure there's no amount limit in UPMS?
Yeah, very nice question. I think I will explain it. So what happens when you're doing a registration? So there are two modes of registration. One, what we call as a reminder facility. The customer is getting a reminder when a bill is getting generated for the customer, where the customer needs to authorize that payment. For that mode of payment, there is no amount limit because customer is authorizing it. The second method where it's an auto debit, the individual restrictions on the payment instruments stays there. But there also, if suppose there is a bill which has been present to the customer, which breaches that threshold of that max limit, then that auto debit automatically gets converted into a reminder. So it's not that SI will fail. Instead of an auto debit, the customer will be prompted to authorize that payment. So basically, at the end, there is no amount limit on while registering through UPMS. Hope it answers your question, Juhi. Moving forward, it's a highly configurable system. As I said, billers have various flows, various ways of integration, but UPMS supports every possible types of flows. For example, whether based on the biller's billing cycle, should we go and fetch the bill, or the biller will push the bills to us based on the customer's detail, or the customer can even register for an auto top up that, for a fixed amount, okay, you go and recharge my prepaid of 100 rupees, every fortnightly. So, different kinds of configurations are possible in system. This system is not that, it supports only one type of flow. It is highly configurable. And lastly, I think one more unique is the customer can register on multiple platforms. Like for your loan EMI. It's not that, it has to get debited from only one account always. And if the balance not there, it will fail. You can register on multi-platform, and this platform will ensure that, it's getting debited only from one account, or, your loan EMI will never fail. I think we'll cover all this in the further slides for details.
Wow, that's a lot of advantages for a single platform. I'm sure there are so many advantages. This platform has to be power-packed with a lot of product offering, a lot of functionalities. So let's start with some of the functionalities that UPMS has. So first step in every standing instruction is where customer registers for that standing instruction on any one of the platforms. So in UPMS, customer can choose to register in either an auto-debit mode, where his bills are auto-debited from his payment mode, or a view and pay mode, which is nothing but a reminder service. As and when bills are available, the customer is presented with the bills, and he can make a payment. This he can do on different platforms, so it could be any bank or a payment app platform, or customers can even do this on the biller platform directly. So let's look at what will be the user journey when he decides to register for a view and pay on a bank platform or a payment app platform. So first would be where customer visits the payment app and selects his biller category and his biller. Next, customer will put in his unique identification number. This could be his policy number, account number, and so on. And after that, if there are any payments due for the customer for that particular account, his bill details are shown to him. And on the bill page, he will be given an option to select for registration from the subsequent cycles. So he can select that checkbox with a reminder service and proceed to pay. Once he has paid the bill, his registration will be completed. In the same option, if he would have selected an auto pay mode, his user journey would look something like this. So after selecting auto pay, he would be giving his mandate details there and then on the bill page. This would include his maximum amount, his preferred debit date. This is another feature UPMS would be introducing in the standing instruction scenario, where he can select at exactly what date he wants the auto debit to happen, his frequency and validity of the mandate, after which he can proceed to select the payment mode he wants to select for processing his auto debits for the bills. After authentication, his registration will be complete and active without him doing any further steps. Next, on a biller platform, his journey would be very similar, where he can directly go to a biller platform app and fetch for his bill details, which are existingly due. On the bill details page itself, he can select for auto payment from his next bills onwards. He will provide all the details, similar mandate details on the biller platform. Over here, he will also be selecting a payment platform of his choice. This will be a UPMS-enabled payment platform. When he selects that, he will be redirected to the payment app, where he will authenticate his payment mode. After authentication, he will be redirected back to the biller app, and the redirection will completely be taken care by the UPMS platform centrally. So after his registration is completed, he can also go to his original touchpoint where he had registered and manage all his standing instructions in one place. He'll be able to view all his standing instructions, modify all his standing instructions, as well as cancel them as per his preferences.
Juhi, I think I would like to ask a question that what all fields I can modify, like what all things I can change after I complete my registration?
Right, so if he wants to modify his mandate, he will be able to modify all of the details that he provided, including his payment mode, his maximum amount, his validity and frequency, and all the fields that he basically provided, he will be able to modify from this option.
That's nice.
Right, so next is, once the registration is completed, the bills will have to be fetched and provided to these payment platform apps. So these will be done in two ways from the biller side. So one is where UPMS initiates a biller-wise fetch. This will be based on a logic on the bill cycle of each biller. So UPMS will initiate a fetch, and biller will revert back with the bill details that are available for the customer. The second mode is where the biller initiates the push to UPMS. So once biller initiates the push and sends the bills to UPMS, UPMS then has all the bills available for customers. UPMS will then ensure that these bills are given via APIs to the customer payment platform apps where the customer has registered.
So, Juhi, maybe here you can give some examples, like which all billers will be, where we will do the fetch and billers where the billers will push the bills to us.
Right, excellent. So yes, for the first mode where we have a biller-wise fetch logic configured in UPMS, that is more suited from biller where customer cycles are more standardized, where the bill cycle for each customer is more or less standard. So that is for the utility categories such as electricity, credit cards, water, gas. But the biller push is where, where if the biller is pushing the bills to UPMS, that is where the customer cycle is not so standardized. And also the customer cycles are best known to the biller. Hence, this model would be a lot more better fit.
I think that's what we mean by highly configurable when we, giving a
Yes.
feature list.
Yes. So last is where once the bills are presented to the payment platforms, UPMS enables that even if customer is registered on multiple platforms, his payments does not get debited duplicate times. So that is done via this feature of a payment skip intimation. So the first step where a payment platform initiates a payment to UPMS, and then UPMS initiates the payment to the biller. After this step, UPMS also lets the other platforms know that there is a payment completed for this customer for this cycle, and this is known as a skip payment notification, so that the other platforms do not initiate a payment again. Also, this reduces the unnecessary reminders that customer is given even after he's paid his bill on any one of the platforms.
So as I understand, Juhi, like it will stop all the duplicate debit, even if the customer is on multiple platforms. But the question comes over here that what if both the platforms are initiating the payment request at a similar time before even getting the skip notification? How UPMS is going to handle that?
Right, so UPMS does have a duplication check. So even before we have a skip intimation, that is to proactively let the customer platforms know, we will do a duplication check to ensure that no duplicate payment goes through UPMS.
That's nice.
Next, I want to look at the UPMS journey with you all of where we are today and where we plan to go. So in December 2021 is when UPMS was open for integration, and we reached out to all our partner entities, and we've been integrating with them. By October 2022, we will have 6 pilot entities going live on UPMS, and also we'll have a pilot bill fetch billers going live by October. By November, we'll have a couple of more entities going live, and we'll also have all our phase 1 bill fetch billers live by November 2022. And by December, we'll also have a pilot bill push billers going live on UPMS. By December, we'll also be launching a new flow, which is the registration where the customer can register directly onto the biller platform. So next, I want to look at, once UPMS goes live on all the entities, what effect will it have on our day-to-day lives for standing instructions? So let's take a look at FASTag. So you'll always be able to smoothly clear all your toll lines because your FASTags will be on auto top-up and not a fixed auto top-up. This will be triggered based on your minimum balance. So if your account reaches a minimum balance level, it will be auto topped up. Credit cards, you can just forget about paying ever late payment fees, because you can do a standing instruction not just for your full amount, but you can also do a standing instruction to auto pay your minimum amount due to credit cards, so as to ensure that your late payment fee is never levied. DTH, again, there are custom plans for DTH, and standing instructions right now don't really handle that. So with UPMS, we'll be able to handle all your custom plans, and your plans will be put for an auto renewal, so you can enjoy your entertainment seamlessly. And lastly, loan repayments. Very important, because your credit score gets affected if your loan repayment EMI gets skipped. So in this case with UPMS, since you can register on multiple platforms, you can ensure that at least any of the accounts that has a balance, your loan EMI will be paid from that account.
Yeah,
So
and I think those are few of the examples. I think after UPMS, getting integrated with all the billers, I think there will be many more use cases. Like a seamless customer journey that we are promising. So that's all will come to light. Yeah. With here we come to the end of the presentation, and I think we are now open for questions. We have 5 minutes left. Okay, we have 5 minutes. Yeah.
Yes, please.
banking transactions, where each bank, each account would have a certain limit, which is essentially controlled by the bank. Will this override that as well?
So for autopay, again, the bank limits will be in place, yes. But again, as net banking, as you mentioned, banks define that limit. But even for that, the customer can give that as the maximum amount. And if his bill comes above that amount, it won't go to an autopay mode, but it will be still considered as a view and pay instead of him completely missing out the bill.
So there would be a
it will be
reminder, or
converted
there
to
would be a nudge that UPMS would probably
So customer
send.
will be like will be asked to authenticate that transaction. Is that it's not that you don't know that there's a due and it failed. It will never fail. You'll just ask for your authentication.
I have one more question.
Please.
The other screenshot which was visible on the screen, I mean, in the customer payment journey, there was a checkbox which essentially required the end customer to choose to put a particular payment on autopay, or what do you say, an SI.
Yeah.
This is essentially going to be a select-only option, or PSPs are going to pre-check it. What
So it
what
will
would
be-
be the the
Even
line
if
of
it is-
action?
Right. So this kind of nuance will be taken care by the customer platform. But even if it is pre-checked, it will be prominently displayed, and customer will be able to disable it if he doesn't want to check it. So, customer will have that option to enable or disable.
Just to add to what he said, so we have given some guidelines to our partners that how it should be made, customer should be made aware that what they are going to do. Okay, so they should, but ultimate how the UI, it will be a checkbox or it will drop down. So those we have get our partners to decide, but we have guidelines. And further, like we also said that customers should be remind days, 3 days, 2 days, 1 days. So those kind of reminders. So everything, is we have published a guideline for our partners who are implementing UPMS.
Okay, thank you.
Yeah, it answers. Okay. Sure.
Yes.
Hi. Are there any, is there any plan to restrict any payment modes right now, or it's going to be open for all?
So there may be category-specific restrictions that we have right now as well. Like you can't use credit cards for certain, like loan amounts, something like that. But other than that, if it is allowed right now, then UPMS will not restrict the payment mode.
Okay, and is there like any plan to, UPI 1 to 3 is just coming up, right? So is there any plan to have like an autopay functionality on that as well?
Yes, so we are also like that's a recent feature, but of course, in future we'll have like a UPI connectivity with UPMS as well.
Okay, I have one more question. You had mentioned on the biller app, the customer will get to see a list of all the COU platforms that have been enabled, right?
Yes.
So this updation of this list would be like an API that UPMS would trigger. Is that how it would work?
Yes.
Because that
Yes,
information,
yes,
as
yes.
new and new platforms like get, so that would be an API push that the BOU essentially will have to update.
That's
I
right.
would say.
Yes.
Yes.
Okay, thanks.
We have time for one last question if there's any. Sure.
I think, yeah, maybe we can do it.
Yeah, please go on.
There was an option which is available to the end customer which says 7 days before the due date.
Yes.
Essentially, I understand that for newer categories, the due date is not something which is getting passed on from the biller, from the BOUs. So do you plan to make changes on that side of the ecosystem?
Okay, so there are certain categories where we are having the due dates. Okay, and those are primarily the categories, where we might be, having a bill fetch kind of a cycle, because we know that, when the bill is getting generated, when it is due and all that, there will be certain categories where the billers will push the bill to us. And in those cases, yeah, the biller needs to give a date, like when is the due date, whether it's a late amount that will be applicable after due date. So all those information, and even the expiry, like, by when it needs to be expired. It's not that, customer has been given the bill and, it can indefinite periods. It will open for indefinite periods. So there will be all the details being passed from the billers to our platform. Yeah. Okay. So I think we are done for the time, but we are around. We have a stall also on our third floor. So please feel free to walk in, and we are happy to answer all your questions on BBPS, UPMS, and everything. Okay.
Thank you, everyone.
Yeah. So for behalf of BillPay, thanks everyone for attending the workshop.
All right. Thank you, Shubhradeep, and thank you, Juhi, for addressing this lovely product presentation. And thank you, audience, for joining us today. Well, we also have one upcoming masterclass right next here for you all. So the ones who would like to stay back, we request you to take your seat. And if not, a quick mention for all our partners. Well, we have our communications partner, Kalera, banking partner, Standard Chartered Bank, Diamond Partners, PayU, AWS, Kia.ai, Infrasoft, and Paytm, and our networking partner, Buddy Loan. We shall resume right in 5 minutes as we present Masterclass, Become a Blockchain Developer in 2 hours. With my next announcement, ladies and gentlemen, we shall begin with the Masterclass. Thank you. Well, once again, a very good afternoon and a warm welcome to one and all. Welcome back to Global Fintech Fest. Proceeding in today's day, well, we have a masterclass for which we've gathered here, and we have Mr.
Yeah, so I think we are all set. So good afternoon, everyone. My name is Ashutosh, as you already know. I'm a senior developer evangelist at R3, and we generally take care of helping developers get more familiar with Coda and also make sure that they have a smooth journey while they have their Code apps or the applications built on top of Coda and take them to production eventually. So yeah, today's session we are going to focus on making sure that we understand what Coda is, and towards the later half, we will be basically going through some coding. So today, while we say we become a Coda developer in 2 hours, that's what we intend to do. We basically want you guys to understand Coda and then also learn how to build an application. So towards the second half of today's session, we'll take care of real hands-on, and we'll build a working application in front of you. We'll get it deployed and make sure that you know how to run it as well. Yeah, so without further delay, we'll get started. So yeah, before we do that, we are also offering free certifications. That's I think over here, we'll just get it sorted. You can take one of the cards here. So that will have a QR code you can scan, and you'll get the certifications. You can take the certifications for free, which is generally worth $150. Yeah. And before we start, I would also like to announce that we are now hiring across India. So if you basically want to work in the blockchain ecosystem and you have any interest in that, you can join one of our teams. We are actually hiring across teams, engineering, DevOps, and a lot of other, a lot of different positions open, specifically in India and Mumbai location. So feel free to go to our portal and apply for the openings. All right, so with that aside, we'll start with a little bit of high-level introduction to what Coda is, so that we can set up the background for today. Before we do that, we'll try to learn why exactly Coda was built. Now, as you know, Coda is a completely different platform from what the public blockchains are, right? So it's a permissioned blockchain rather than a public blockchain. But why did we go in that path? Why did we even try to develop something which was not there in the market, right? We could have used something to solve the problem which were there, so something like an Ethereum, or build on top of that something like a Bitcoin. But why did we try to build something completely different, and what was the problem that we were trying to solve? Now, in order to understand that, there are a few things that we need to understand that traditional blockchains have, which doesn't make them very suitable for business-oriented solutions, right? So I'll just cover a few of them. There are quite more, but these are sort of the most prominent ones, I would say. The first problem that you generally see with public blockchains is generally the problem of identity, right? You have a public key. All that you know about a counterparty is a key that belongs to him, right? You don't really know who that party is actually. You don't really know his name, his legal identity, or anything of that sort. So how do you trust someone whom you don't know who it is? So you think of this in a business scenario, right? How do you do business with someone you don't know, right? So that's where the problem of identity comes in. Now, the next problem is around finality. Now, since you guys are here and you're interested in blockchain, I assume most of you might have done some transactions in the blockchain space, right? Maybe a Bitcoin transaction or something. Now, have you noticed, just a second, have you noticed how much time does it take to do a transaction on the Bitcoin, particularly? Let's say there are different times for different platforms, but let's concentrate on Bitcoin. So generally, it takes an hour. That's the general sort of assumption, right? Why does it take an hour? Because there are one block created every 10 minutes at average, and you need 6 blocks for a confirmation. So 6 blocks, 10 minutes, that's 1 hour, right? But do you get your transaction confirmed in 1 hour? Sometimes it takes days, right? Sometimes it takes few hours, sometimes it takes days, sometimes it even gets confirmed before an hour. Now, this complete thing works on the phenomenon of how quickly a block is getting created. Now, that completely depends on basically the network speed and, and basically your network difficulty and stuff, which I'll not go into. But the idea that I'm trying to convey is for basically creating a block, there is a possibility that when the 6 blocks are getting created, one of those blocks is having your transaction, and it's probable that the block that is having your transaction is for some reason forged in some nature, right? So what would happen is basically that block containing your transaction will basically be rejected, and your transaction will go out into the unconfirmed pool. It will be mined again, and the transaction would become a part of a block subsequently in the future and get appended to the main chain. But here again, right, it doesn't guarantee that this time around your transaction would end up in a proper block, right? So it's probabilistic in nature. You don't know when your transaction is getting completed, which is not something businesses would want. They want a proper defined timeline, may it be an hour, may it be a day, but you need to know, right, that, well, after a day, my transaction is going to be completed. You don't say, well, probably after a day, maybe it might take 3 days, maybe it would take 6 months, you don't know that. So that's another problem which we are trying to solve, the problem of finality. The next thing is privacy, very important for businesses. As you know, blockchains, public blockchains for the matter, are transparent in nature, right? So anything you put in the blockchain becomes available to everyone. That's one of the perks you have in the public blockchain, but it's not always a perk when you think of this scenario in a business-oriented world, right? You have confidential information, say patented information or some sensitive pricing information. You want to put that on a blockchain and available for everyone, right? That's something not desirable. So there are a lot of different private information that you want to have, and you want only certain parties to know about that, even though you want to be in a blockchain, but you don't want your data to be public in nature. So that's another problem we try to solve. And finally, it's more related to developers, how easy a platform is to use. If you think of any public blockchain, one, obviously for a developer to get started working on it, he'll have to understand blockchain concepts, obviously. And then he'll have to learn a particular platform or platform's language, a particular protocol or a particular programming language. Like, for example, Ethereum has Solidity. Some other languages have some other platforms have some other languages, right? Which makes the learning curve a little steep. Why do you use something like a Solidity or some other new programming language, a new protocol, when there are tons of languages already available? Why not develop something that takes use of these well-proven technologies? And it also becomes easier for developers to adopt that technology and build on top of that using a language which is well known to them, right? So wanted to make using blockchain or developing on blockchain easier. Right, so what I'll do is, those were the problems that I talked about. I didn't talk about how we address those. So I'll go into the details of each and every point that I talk about, and I'll say what Corda is and how it basically tries and solve those problems. All right, permissioned node. So Corda is a permission network. It's not like your generic traditional blockchain where you just download the node and get started, right? So in order for you to be part of a Corda network, you will have to go through a particular process of KYC, which will enable the operator of that network to take all the required information during your KYC. So you will be required to give out your legal name so that others would be able to identify whom they are actually transacting with. You can't just be an anonymous person on the blockchain, on the Corda blockchain. So that solves the problem of identity. Now you know, since you have been onboarded by a particular network operator who is operating the network on your behalf. Now generally this network operator is just an entity who is sort of an entry point to the network. He will make sure that whoever is getting onboarded in the network go through the proper KYC process so that the identity of the network is managed properly. Right, so first problem solved. We do not have anonymous people in the network. You have proper well-defined identities whom when you transact, you know who they are. They have a legal name, and in case of issues, you can go to the court and take them to the court if any kind of conflict arises. Now, the second problem we talked about was, say, privacy, right? So you don't want to share all the information on the blockchain. Now, Corda is not, it doesn't do a global broadcast. It's not like the normal traditional blockchains where you do this normal broadcast of messages or the gossip protocol, which we generally know of. We do communication on point-to-point basis. So Corda makes sure that whenever you want to transact with any particular party or multiple parties, then those communication happen on a point-to-point basis. So for example, in this diagram, if you see there are three parties, basically. There is a notary pool, which we'll talk about later on. But say, for example, the Titan Technology partners want to communicate or do some transaction with BayTranscorp. Now, the transaction between these two parties is only known to both of them. Now, the vault that you see is nothing but the database of the node. So when this transaction is completed, this information about the particular asset they are transacting, a vehicle in this case, will only be known to the two parties involved. Now, third party, which is your Acme International, even though he is in the network, he will have no idea that there is an asset or there is a transaction which has happened involving that asset. It's completely unknown to him. Now, what we have done here is we have tried to make sure that the privacy is managed. Now, this particular asset is only known to people who need to know about it. Now, Coda as a platform will make sure that whoever knows about a particular asset, they always see the exact same copy. Now, for this vehicle, these two entities, basically your Titan Technology and BayTranscorp, will always see the exact same version of the vehicle that is in question here. All right, so that solves privacy. Now, finally, the problem of finality. Now, looking at this particular scenario where you have point-to-point communication, there is a very typical problem that might arise, the problem of double spending. So what double spending is, it's something through which you can basically spend the same asset or use the same asset at multiple different transactions. So basically, if you take an example here, if Titan Technology has already, for example, is selling this vehicle and he has already sold it to BayTranscorp, since Acme is not part of the transaction and Coda doesn't allow him to know anything about that vehicle. So if Titan again tries to sell this vehicle to Acme, who is going to stop him? He doesn't know that that has already been sold, right? So what does he do? How does he know? So that's where the notary comes into the picture. Now, notary is a pool of nodes who gives a final say on a transaction. So every transaction goes through this notary pool, and the notary pool is responsible for making sure that there are no double spending attempts happening in the platform. So how does this work? It basically, now the question that you might have is, where is privacy here? Notary is seeing everything that's going on, right? So that's not really the case. The way notary works, it doesn't look at the content of the transaction. What it really does is it just looks at the structure of the transaction. So we have a UTXO model, if you guys know about, and it looks at different nodes of the UTXO model and tries to identify if that's a case of double spend or not. Now, in a very simple language, it just looks at the structure of the transaction to identify if a double spend attack is occurring or not. So it's still private. Notary just is a component which takes care of a certain feature or a certain aspect of the transaction, which is to like timestamp the transaction, or as we say, notarize the transaction. Now, this also takes care of the fact that finality is not probabilistic in nature here. So basically, when you say a transaction has gone through the notary and the notary has given a go-ahead or notarized the transaction, that means that the transaction is final. There is no way you are going back, or there's no way you're reverting it. Reverting it in the sense, from a business perspective, you can always do a new transaction on top of a transaction to revert that, but that particular transaction, once has been done, cannot be reverted. Right. Now, the final piece is around ease of use. So the technologies that we use is Java, which is again used to build the platform. Actually, Kotlin, which is again a JVM-based language. But you could use Java or Kotlin to build any applications and deploy them on the Coda network. Now, we use general RDBMSs to store the data, no magical tools there. And ActiveMQ, again, normal message queue and message broker to do message passing. So if you see all these technologies that I'm mentioning, these are real common languages that is used across the industry. Any enterprise software that you think of would be using these technologies. So it not just makes life easier for developers, it also makes it easier for companies to hire talent, right? So you would easily get people who have experience in Java or RDBMS or message queues. So there is no real requirement of going out and finding out people who have experience in some niche technology, right? So it's a win-win for both of us, for the developers as well as for basically the organizations who are hiring them. So finally, we have been able to solve most of the problems that we talked about: identity and finality. We have for identity, basically you have to go through the doorman or the network manager. For finality, obviously there's the notary pool, which will take care of that. For privacy, we have point-to-point communication. And for ease of use, we use well-defined languages or well-known languages which has been there in the industry and has been proven for years now. All right, so moving on, that's pretty much about why Coda was developed as a different or a particularly completely different platform rather than adapting something which is already there. So that's why we say Coda is a third generation language or third generation blockchain for that matter. And it's more or less a business blockchain which is more focused on businesses. We're applicable for most industries, but generally as a company, this thing Vision, we are more focusing on fintech at this time, majorly trade finance, banking, and insurance. And we have a cross-industry ecosystem which is called as the Coda network, where multiple different parties can collaborate together and make sure that they are having an easier day-to-day transactions on the Coda network. Okay, so that's about it. And moving on, we'll learn a little bit about how a Coda network is structured, or more or less the topology of the network, right? So as I said, there is an identity manager, which we, in our terms, called as doorman, and it manages the entry into the network, right? It has something called as a network map, which basically it updates from time to time. Now what this is it's more like a directory where you can go ahead and access who all are part of the network. So for you to know who is the other party available, who are the other parties available in your network, you need to be able to see somewhere, right? So that's where the network map comes into the picture. It's the directory which allows you to see who all are available in the network and do transactions with them, basically. Now, there are notaries and there are normal Coda nodes, which will be run by different organizations. All right. How does a Coda workspace looks like from a developer point of view, right? So you have the Coda network, which is different nodes, and then for each node will be connected to a firewall. This firewall will have two components, the bridge and the float, which will manage the incoming and outgoing messages. So this is an added layer of security, which allows you to make sure that you do not mess up with your own internal firewall. So Coda network, you just have to, whatever configuration that you have to do for Coda nodes to work, you would do on the Coda firewall rather than your main firewall. So that makes life easier. And then you have the RPC client, which is generally your gateway to the node as a node operator. So it's a client which will, it's nothing but a simple Spring Boot application, which will expose certain APIs, which you can fire through end user application, which would more or less be a UI application. And through that APIs, you will in turn fire the node. So you're going to give any kind of commands to the node through this particular RPC client. So commands are more like starting a transaction, pulling out certain data, or anything that you want to do. So that all that functions can be taken care of by the Coda RPC client. Okay, so what is a Coda node, right? So when you say Coda node, it's for a general user, it's more like a black box. You don't have to know what's going on inside. All you do is you start a particular transaction. So generally in our term, we call it as flows. We'll try to understand what flows are later on. But for now, you can say that we are trying to start a transaction, and that goes to the node. And finally, when the transaction is completed, it updates the ledger. So different transactions that you could do, and finally, that will take care of updating your ledger. And all the low-level things like your messaging, your concurrency, your disaster recovery storage, or any kind of low-level things are taken care of by the node. You don't have to worry about how those things will be managed. As a node operator, all you have to do is go ahead, fire a command, and that will take care of the entire process of updating your transaction. So it will pull out all the keys and stuff required, it will do the messaging for you, and finally your transaction will be done, and the updates will be recorded on your ledgers. All right, so that's your node. Now coming to, that's about Corda. So basically that's more about the platform itself. I will come into how you build applications on this platform. So applications on Corda are called as Corda apps, or Corda distributed, decentralized applications for that matter. So what are they? Well, they are, in Ethereum terms, you can think of them as smart contracts. Right? So these are the applications which are developed by developers and deployed on the Corda node. So Corda as such doesn't do much. You can sort of compare it with something like an Android or an iOS, which you can think of as the platform. Now the applications are more like your Facebooks, your Instagrams, which you install on the Corda node. So without these, Corda itself is of no use, right? So applications are which makes Corda great. So each node will have multiple applications that you can deploy, and that's what you would basically use to communicate with different counterparties available on the network. So what are the different components that we have in a Corda network is, or in a Corda app is, so basically for any bare minimum Corda app that you build, you would have three different components: the state, the contract, and the flow. So what a state is, if you try to understand it, it's more like your data model. So anything that you want to put on the Corda ledger will be modeled as a state, right? So this is something which will get consumed, which will get updated and stored when you do transactions and stuff. Now these, there are certain sort of business rules for any transaction to be done. So these are written as contracts. So for any transaction to happen, these contracts must be fulfilled. These contract rules must be fulfilled. They're more like a business rules. Now also, if you think of business transactions, there are business processes which needs to be taken care of, right? So that is taken care by the flow. It helps you execute those business logic. We'll get into details of each of these, just giving you a broader overview of what are the different components available. So let's deep dive into the Corda state now. So state represents your on-ledger facts, which means anything that you want to put on the ledger is modeled as a state. So going back to the previous example of vehicle that we did, so this is something that you want to put on the ledger. So the vehicle, you can say it as vehicle state, and it would have multiple different properties like what's the make, what's the model, what's the variant, what's the fuel type, and a lot of other kind of things, right? So all these are different properties that could basically be written as a normal Java class, a simple Pojo class. So all these properties will be represented as different fields in your Corda or in your Corda state class, and that's, so if you look at, we'll go into more details of how this class is built when we go into the coding part, but that's how things are done. It's pretty simple. You define what are your different fields that you want to have in your Corda state, and just put them as a Pojo class. So each node will see a subset of these states available on the ledger. Now this is where your privacy model of Corda comes into the picture. So as I said, communications happens on a point-to-point basis, right? So states are distributed on a point-to-point basis. So only people who should know about a particular state are able to see that particular state. So for example, we have different parties. So bigger circles with names here are can be thought of as parties, and then the different numbers, smaller circles, can be thought of as your states or different assets you can think of. So if you look at this example, Bob and Alice only know about asset 1, while Bob and Carl know about 5 and 6, and similarly you can identify how different states are known to each other. So there is no global ledger as such, so you have each and every party only has a view of a subset of the global ledger you can think of. If you combine them all, well, it basically becomes a global ledger, and there's no single party who sees all of them, unless obviously your business requires you to do something of that sort. Then you model your application in that manner that he is able to do that. All right, coming to transactions. So states are stored on the ledger, as I said. Now with any normal blockchain, anything that you stored on the ledger becomes immutable. So does your state data. Once you create a state, you put it on the ledger, the state becomes immutable. Now how do you update this? You update this with the help of transactions. So what happens during a transaction is any transaction would have an input and it would have an output. Now, take an example here. If you see this particular state, which now belongs to Titan Tech, say the owner of the vehicle is Titan Tech, and he wants to transfer the vehicle to Acme International, for example. So what he would do is he would create a transaction, he'll use the state with him, he'll pull it out from his ledger and he'll put it as part of the input. And then he'll create a copy of that same state, he'll update the owner of the vehicle, and then he'll do the transaction. So once this transaction is completed, what would happen is this new output that is generated will be stored on the ledgers of these two counterparties now. Right, and the previous one will be marked as historic, which means this has already been used and you do not use it any subsequent transactions going forward. So anything that will be used is the most recent one that's available on the ledger. Right, so that's how transactions work. So this is where the UTXO model comes into the picture, right? Transactions output becomes input to subsequent transactions. So if you look at the examples here, well, basically the first transaction which has an output becomes an input of the next transaction. Now similarly, this middle transaction has output become the input of, again, the next two transactions that we are doing. So this is what the UTXO model looks like. So unspent transaction output, that's what the UTXO comes from. Now the different transactions that you could do, issue transaction which actually doesn't have an input, it only has an output, because there would be a time where basically you would have the very first transaction, right? You would be putting something on the ledger for the very first time, so no inputs because nothing to consume. This is a very first transaction. And then there are normal transactions, which is basically your move transaction or update transaction, whatever you might want to call them. Now these would have both inputs, both outputs. You are consuming something and you are creating new, so basically you're updating stuff on the ledger. And finally, there could also be transactions where there are inputs, but there are no outputs. This is the case of your burn transaction, right? Anything you want to put out of existence. Like, for example, say this vehicle goes out of existence in 20 years. You have to just put it, you have to just delete it for some way. So in Coda, how you do it is you use the most updated version, which is available on the ledger. Don't produce an output, which means the one that was there is consumed and there's nothing which is available. So you cannot use anything going forward, so it goes out of existence. Yeah, so that's states and transactions. Now coming to contracts. Contracts govern the evolution of state. What does that mean? Well, basically, any state cannot be updated just randomly. You will have to go through certain rules before updating them. So these rules are written as part of contract code. Right, so they are installed on each and every node, because obviously nobody trusts each other. So each and every node which are involved in a particular transaction will have to run that contract against the transaction to make sure that everything is going fine. Right, and only if all the nodes available in that transaction or involved in the transaction, they give a go-ahead to the transaction, only then this particular update of the ledger happens. Otherwise, even if one of them says something is wrong, well, this transaction will be rejected and you'll have to take corrective actions based on that. Right, this is how your contract would generally look like. Yes?
And what about the privacy? All the nodes have to sign that contract.
So all the nodes involved in the transaction.
Involved in that transaction?
Yeah. Right. So there is also a catch to that. I'll come to that. So basically, this is how your contract would look like. Simple statements checking different kind of scenarios. So this is more or less vague currently to you, but we'll get to that when we go into the coding part. You'll understand more what's going on here. Now, transactions can be ambiguous, which means, for example, I'm doing a transaction, but what exactly is the aim of the transaction? So this is a vehicle which is part of this transaction, but what is it doing? Is it a registration of the vehicle? Is it a insurance? Is it something else, right? How do you know what's the intent of the transaction, right? And depending on that intent, you would have to make sure what is the different validations rules that you're running through, right? So unless you know what is the intent, you cannot validate the transaction with the correct set of rules. So that's where there's something called as commands which come to the picture, right? So commands are something which define the intent of your transaction, and based on these commands, you would basically run the correct set of rules to validate the transaction, right? Um, there you go. So yeah, so instead of just verify, you could say verify uh, your registration or verify your service, and within those methods, you would write your different rules required to validate those transactions within your contract. Well, these commands also have signers attached to them. Now, to understand this scenario, say there is a case of a registration, right? You want to register your vehicle. So in this case, there are two parties involved: the owner of the vehicle and say the RTO or whoever is the registering authority. So in this case, it might be the case that only the registering authority is the one who should sign on the transaction, right? So it doesn't require a signature from the owner, because whatever the registering authority gives you, the number plate and all, whatever he says is the final say. You don't have a say on that, for example. Now let's take this an example, and you just accept whatever registration number you get from the authority. So you don't need to really sign on that transaction, because your signature is not really much of much importance in this particular case. But if you take the example of service, say for example you go to a service center and you want to service your vehicle, say you as an owner need to sign on the transaction to give a go ahead that, well, the service has been done properly, and also the service guy, whoever is doing the service, or the shop owner will basically give a signature saying that he has done the service properly. So this can be thought of as a scenario where you need signatures from both these parties. So there are different scenarios for different commands, which would require different set of signers. And what that means is basically there could be multiple parties to the transaction, and it's not really necessary that each and every individual party available in that transaction are required to sign. The signers are only a subset of that particular parties available in the transaction. And depending from case to case, it would depend. It might be all of them, it might be just one of them, it might be maybe a few of them, right? So it depends on what's the intent of your transaction and who are really required to sign on that transaction. That's a business case which you have to decide while you build your application. So it's pretty simple. What are contracts? Just certain rules. So you'd have, say, rule 1, 2, 3, 4, and if all of them are said to be valid, only then your transaction is valid. And even if one of them fail, your transaction is invalid. Now, to understand how important this is, you can see that if, for example, the rule 3 is omitted out from this particular transaction, what the transaction is doing is transferring cash from Alice to Bob, right? And the amount, if you see, is 3, and the amount on the other side, on the output, is close to $1 million, right? So if rule 3 is omitted out, what you're doing is you're just transferring an amount of 3, and the other guy is receiving close to $1 million. So that's how important your commands are, your contracts are. So it makes sure that the sanity is maintained within your network, right? So yeah, that's how commands work. Now, coming to the final part, which is the flow. Now we have learned. Yes, there's a question. Yeah, so basically for us, we will say that the entire application is your smart contract.
Okay, so I have been working on Ethereum-based or Solidity-based smart contracts.
Mhm.
So I just wanted to compare and understand how different Corda or Cordapps
Mhm.
work as a system when I compare with the Ethereum-based smart contracts.
So you build your smart contract, right, which becomes your application. So in your Ethereum. Now the smart contract is the combination of your state contract and flow here, right? Now, yeah, finally the flow part. Yeah.
Actually, I understand you're not a sales marketing person, but we use Ethereum, we use smart contract, we use R3 Corda and smart contract. So why would you pick R3 Corda over Ethereum? I mean, Ethereum's much more popular.
I initially mentioned what are the different sort of advantages of using it. What is the purpose of Corda, right? So it's built for businesses, things like privacy, your finality, and then ease of use, obviously, and your identity and stuff. So these are not provided by Ethereum. It's more of a public in nature. Now, if you have certain restrictions in all those areas, then basically you have to go with Corda. So that's where we differ from Ethereum in that manner.
No, but there are a lot more people on Ethereum. So would you be having interoperability between the two?
So there are work going on for interoperability. Yes, it is possible. It's not very seamless at this point, but yeah, it can be done. All right, so putting everything together will be our flow, the final part. So we have contracts and we have flows. So we now know how to model an asset, and we now know that how to write different rules to validate the transactions that we do on those assets. Now, how do we put them together? Now, let's take an example of a very simple trade, a two-party trade, doing a particular transaction of updating a particular asset, right? So different sort of, you would say, actions that they would take in a sequential manner, right? This is where your workflow comes into the picture. It could be much more complex depending on what are the different steps that you want to do. But for a very simple transaction, I think this would give you an idea of how things work. The first thing you do is propose a transaction. So at this point, it's just a proposal. It has not been finalized, so your ledger is intact. It has not been updated yet. So when I say propose your transaction, you create a transaction, you create your inputs and outputs, and verify the transaction, which is where you go ahead and run your part of the contract. So it's basically synonymous at different nodes, but still you have to go through and run this contract to make sure things are fine. So once you run this contract and everything is fine, the contract validation comes out to be valid, and then you put your signature to the transaction and pass it on to the counterparty. Now, depending on how many counterparties there are or how many signatories to the transaction there are, you send it out to that many number of participants. For our case, there is just one, for example. So it will go to the counterparty. Now, the counterparty at his end will also make sure that he runs the contract. He doesn't trust what is coming to him unless he runs his own contract and make sure that, yes, things are fine. So once he runs his contract, things are fine. He will also give his own signature and send it back to the initiator. Now at this point, you have a signed transaction, which is signed by you as well as your counterparty. Your transaction is complete. Your transaction is ready to be notarized. So this transaction now goes to the notary, and the notary will do the double spend check, timestamp it, and if the double spend check happens to be fine or there's no problem with double spend, so he'll timestamp it, he'll put his signature, and he'll send it back to the initiator, at which point he can then distribute this transaction to the related parties who are available in the network. Now, this might look like a lot happening, but from a developer point of view, you don't have to do any of this. This is just what happens in the backend. For you just to call a particular method or a particular class, you have to call that, and the network will take care of all the things, like I said. So you just have to build your transaction, and you have to tell who are the different signers to it, and then call certain methods and all those things. The signing will happen, the sending it to the counterparty will happen, and then all the notarization and stuff will happen automatically. Even when you're checking against the contract and stuff, all those things will happen in the background, and you don't have to worry about it. Finally, when this flow has ended, you will come out with a transaction and saying, with a transaction ID obviously, and saying that your transaction is successful or not successful. If it's successful, it would be updated. Right, so that's pretty much about how your code app really works. Next thing we are going to do is we're going to build a code app, and we'll see how easy it is to build a code app, and finally we'll also try to run it on a sort of local CODA network that will show you how to build that as well. Yeah, so I'll pass it on to Sneha to take it further from here.
Triple mic.
Hi, can you hear me now? Yeah. Yeah, just before I start coding, the question which we had from the audience, right? So there's a lot of work which is going on in the Ethereum and Corda integration space, okay? So we've been developing this bridge which actually connects Corda to Ethereum. And because of this now, what you will be able to do is you can now, let's say, move assets from Ethereum. You can, for example, you can move, let's say, ERC20 token from Ethereum, move these tokens, let's say, onto Corda, perform some processing, perform some trade, perform some, whatever logic you want to perform on Corda, again, with zero gas fees, because we really don't have the concept of gas fees in Corda because of the way it's architectured and all. There are a lot of details in that, but because of the way it's architectured, there aren't any gas fees. So you can do your trade, you can do the processing in Corda, and then the bridge also provides you a way to redeem these tokens back onto the Ethereum network. Yeah, having said so, let's get started off and let's do some coding together. So the next 1 hour, what we are going to do is, Ashutosh has explained you all the concepts within Corda. So for the next 1 hour, we'll be developing a simple Corda app. So I'll be doing a live coding over here, and I'll show you how easy it is to develop a Corda app. For developers who have their laptops, feel free to code with me, because it's going to be easy for you to code with me. So if anyone is, if they have your laptops, please feel free to open your laptops. You just really require Java and IntelliJ IDEA and Git. That's it. So if you have that, please open it and you can actually code with me. If you do not have your laptops, we'll also share you the recording of this link. So that is also fine. So for today's session, what we are going to do is we are going to code this Bootcamp Corda app. The link for it, as you can see, it's on GitHub. You can go to Corda's repo and you'll find the Bootcamp-Corda app project or Corda app available on the GitHub repo. Just go over here, clone the repo, and let's get started. So I've already cloned the repo over here. Now what we are going to do for today's session is, this is the Bootcamp Corda app. I've cloned so basically I've cloned this Corda app on my system. Now before even I start off with this Corda app, one important thing is, please feel free to join in the Corda Ledger Slack channel. So all of the developer audience, or you'll find our entire developer relations team on the Corda Ledger Slack channel. You'll also find the engineering team on the Corda Ledger Slack channel. So please feel free to join in the Corda Ledger Slack channel. And if you have any questions for today's bootcamp or any technical questions going forward, feel free to put in your questions over there as well. Now let's get started. Now, what do we plan to do for this bootcamp, right? What I'm going to do is, let's assume this scenario. Let's assume that there is a bank, okay? Let's call it the issuer. Let's assume that there is one particular bank, and then let's assume that there are several parties, or there are several, let's say, several entities, okay? Now, what we want to do is, the bank wants to, let's say, issue, let's say, a note worth rupees 10 to, let's say, entity ABC, okay? So what's the scenario? The scenario is there's a bank, and this bank is the issuer, and this bank wants to issue a note of some worth of some, let's say, 10 rupees, 100 rupees, 1,000 rupees to a particular entity. Now, what we want to do is we want to represent this particular scenario on the Corda blockchain. We want to make sure that what you see is what I see. We want to make sure that the bank and this particular entity, they both are aligned and they both know what has actually been issued, right? They both are in sync. We want to make sure that this is the scenario. So let's start off. So again, to represent this scenario on the Corda blockchain, what we are going to have is, we are going to have multiple parties, one party being the bank and one party being the entity who the bank will issue a note worth of some amount, okay? Now, Ashutosh already explained, to build any Corda app, you just require 3 things. You require the state, contract, and the flow. Now, if you look at the state, again, just a quick recap on what we discussed. Now, all the attributes or all the properties which, let's say, the bank and the owner of this particular note, right, all the attributes which both the parties want to make sure that what you see is what I see, right? All the attributes which the entities want to make sure that what you see is what I see will go as a part of state. Okay? So let's say in our scenario, let's say that the bank and the ABC entity, let's say both of them want to make sure that at any point of time, who actually the issuer was of this particular note, who actually the current owner is of this particular note, and how much amount was actually issued. Ideally, this would be something which all the entities would want to make sure that what you see is what I see, right? So all these attributes which you want to make sure what you see is what I see will go as a part of the state in Corda. Now, that's why to represent a state in Corda, we are going to use the token state class. And I'll show you how you can actually code and write a state in Corda. So that was it about from a state perspective. Now, this is usually a typical transaction in Corda. So Ashutosh already mentioned that this is how usually a typical transaction looks like. It will usually have some inputs, some outputs. For our particular scenario, it's an issuance transaction. That is, the bank is going to issue a note to some entity. And that's why, since it's an issuance transaction, it's going to issue the note for the very first time. And that's why we are assuming that it will not have any inputs. Okay, so it's not referencing any state from the ledger, from the blockchain. As of now, since it's an issuance transaction, we'll assume that it doesn't have any inputs. And we are saying that this is an issue command. Okay, and we are saying that this issuer will be issuing this particular state. Now, this particular state, again, as I mentioned, is going to have these kind of attributes, right? Now, Ashutosh already also mentioned that you also can specify the intent of the transaction by specifying the command. So for our particular scenario, the command is what? The command is an issue command. So the bank would really what it wants to do, it wants to issue, let's say, a token, a note. And that's why the command is issue command. So really, this is the kind of transaction which we are going to build, right? Now, how do we build this transaction? How do we actually execute this particular transaction? And that's where the flow comes into picture. So again, the flow again, just to revise what Ashutosh said, flow is what at the end of the day, it's a series of steps which we want to perform in order to achieve something, in order to perform this issuance of transaction, in order to perform this issuance of the note. So what we are going to do, we are going to follow a series of steps which will actually build this particular transaction. And this particular transaction will have this particular layout. It won't have any input. It will have one output. It will have an issue command. And this really is just a proposal at this point of time, right? At this point of time, the issuer is just creating this transaction. And at this point of time, it is still just a proposal. The transaction is not committed to the ledger yet. The transaction is not finalized yet. It's just a proposal. Now, once the issuer actually creates the proposal, it will pass this transaction to a contract. So we have seen that we saw something that we have something called as contract in Corda, right? So within this contract, we will add lot of rules. So to actually, to actually convert this proposal into an actual transaction, basically the issuer will actually send this proposal to this particular contract. And we'll be writing certain rules in the contract. And if all of the rules are satisfied by this particular transaction, the issuer will actually sign this transaction, sign this proposal, and then the issuer will send this signed transaction to the counterparty, which is, let's say, the owner, which will be the owner of the current note. And then the owner will also do the same thing. The owner will also take this particular proposal, this particular transaction, send it to the contract. The transaction will be again run against all the set of rules. And if everything is good, the owner will also sign the transaction, send it back to the issuer. The issuer will send this particular transaction, which is signed by both the parties. And this transaction will be sent to the notary for checking for double spend. If there is no double spend, the transaction will be finalized and the transaction will be recorded on both the parties' database, right? So at any point of time, basically, if you build a transaction, you usually pass it to this particular contract, and the contract is run against this particular transaction, and that's how you can actually do a state update. You can actually, that's how you can say the blockchain evolves, or that's how the states get added to the blockchain. That's how the states get added to the database, and that's how a ledger evolves, right? So these are the series of steps which are required to actually evolve the ledger, to actually evolve the blockchain. Now, what kind of rules we can add in the contract? As I said, this is an issuance transaction. So probably we could add, let's say we could say that I want to make sure that this particular transaction doesn't have any inputs. I could also add, let's say, I could say that I want to make sure that it has this particular contract or this particular transaction has one state, which is the output state, right? And I could probably also check the amount, because I want to make sure that the bank issues me a note whose amount, let's say, is positive. It's not negative, right? I could also check the signers in this particular contract. Who are the required signers? And all of these rules we are going to add now in the contract, right? So I think if we are clear with all of this, we'll move forward and let's code together. So we are going to code three things. We are going to code the state, which basically consists of all the properties which you want to make sure what you see is what I see. All these properties will go as part of the state. The contract will consist of all the rules which let's say so whenever we build the transaction, which is the transaction will be built in a flow, that we will pass this particular transaction to the contract. We will write all the rules within this contract. This transaction will be, or basically the state change will be governed by this particular contract rules. And if everything is successful, if there is no exception thrown by the contract, then the issuer will sign the transaction, send it to the owner. Owner will do the same thing. Owner will run the contract. If he's also happy, he will also sign the transaction, and the transaction is notarized, and then the transaction gets recorded on both the parties' database. Now, let's start off and let's start with, so if you look at the project, this code app, you can see there are two folders. So this is a contract folder and there's the workflow folder. So within the workflow, we have the tokens issuance flow. This is where we'll actually write our flow. This is the contract where we have the state class and the contract class. So we'll write a state in the token state class. Now, for Corda to understand that this particular class is a state class, you have to implement your class with the contract state interface. Now, this contract state interface, let me just comment this particular annotation at this point of time. So this contract state interface, this has one method. Let's implement that method. The method which is we have implemented is the get participants method. Now, if you go into the contract state, you would see that it consists of a field which is the participant. Now, at any point of time, right, what we are doing is we are creating this particular state. Now, at any point of time, whenever, let's say, at any point of time, let's say this state changes. Let's say this state gets created on the ledger, or let's say that this state gets updated on the ledger, right? At any point of time, whenever there are some state changes, all the parties which you want to make sure that should get notified of these state changes will go as a part of the participant fields. So now let's start. Let's start adding what we had discussed. Let's add the required fields to our state. So what we had discussed, we want to, let's say, add the issuer. So let's say that we want to add the issuer to the token state. Let's say that we also want to add who's the current owner of this particular note. And we also discussed that, let's say, we are also we might also be interested to know what the exact amount is, right? So these are the properties which I've added to token state. And as I mentioned that at any point of time, whenever this particular state changes, let's say that I say that I want the issuer and the owner to be notified of the state changes. And that's why the issuer and owner will go as a part of the participant list from the contract state interface. That's it. Now, what we are going to do today is we are going to follow a test-driven approach. So there are certain test cases which you can see in this particular Coda app. I'm going to uncomment each and every test case, and I'm going to accordingly change my code, and I want to make sure that all the test cases pass. So let me uncomment the first test case. It says that the token state has to have a constructor with all these fields. So let me do that. I'm going to do a control N in IntelliJ IDEA, select the constructor, select all the fields, and I hit enter. So let's see what the other test cases are saying. This says that the token state should have getters for all the fields. So again, I'm going to do a control N, select getter, select all the fields and hit enter. Now we have the getters for all the fields. Now next, what we want to do is we want to make sure that the token state implements contract state interface, and I think we've already done that. The next test case says that that we want to have issuer and owner as the participants field, and I think we've already spoken about it, why you require this to add in the participant field, and the issuer and owner has been added to the participant field. So I think that's really it. So let me run the test case and see if everything looks good. So now I'm running the test case and all the test cases are successful. So I think we are good with the token state. Again, quick revision, what we did for Coda to understand that this particular class is a state class, you have to implement it with the contract state interface. Contract state interface has just one method, which is the participant list. So all the parties which you want to make sure are notified of any state changes should go over here. We've added the relevant fields over here. So all the fields which you want to make sure what you see is what I see will go as part of the state. We added the constructor and then we added the getters. That's really it from a state perspective. Let's move on and look at the contract now. So this is the contract class. Again, for Coda to understand that this is the contract, you have to implement it with the contract interface. This contract interface has one method, which is the verify method. So when we actually build our transaction in the flow, we are going to call this particular method. And while we call this particular method, we are going to pass our transaction to this particular method in this particular input. Okay? So let's assume that we will, so when we go to the flow, what we are going to do is we are going to create a transaction. This particular transaction will have an issuance transaction. It will not have any inputs. It will have one output and it will have the required signers, right? So all of this we want to verify that whether we have actually created a correct transaction. So all of this we are going to check over here now. So again, quickly what we have discussed, we are going to add all these rules in the contract. We are going to make sure that the transaction doesn't have any inputs. It has one output. The output is of type token state. We want to make sure that the amount is greater than 0. And we also want to check whether there are required signers for this particular transaction, right? So we are going to test and write all of these rules now in the contract. Now again, for this we are going to follow a test-driven approach, and what we are going to do is we are going to uncomment each and every test case and accordingly make changes in the contract class. So this says that token contract implements contract. I've already done that. So let's move on and let's try to run the next test case. So what this test case says, this says that the token contract requires 0 inputs in the transaction. Okay. Now let me run this test case. Now what this test case is doing is, this test case is actually, when I run this test case, it failed. And it says that, so what is this test case doing? It is passing in an input to this particular contract, right? But what we had decided that for our transaction, we won't have any input. And if by mistake, someone passes an input to the transaction, ideally the contract should catch this exception, and ideally the contract should throw an exception. That's what we had discussed, right? but this contract is not implemented correctly, and this contract is not throwing an exception when you are actually supposed to throw an exception when, let's say, someone passes an input to this particular transaction, right? And that's why this test case is failing. Now we are going to correct that, and now what we are going to do is we are going to actually throw an exception if someone sends us a transaction. Let's say that if someone sends us a transaction, and let's say that the get input states, if its size, let's say it's greater than, let's say if it's not equal to 0, we should ideally throw an exception. So I'm going to say throw an illegal argument exception. Input state size has to be 0, right? So let me run the test case again. And now let's see if the test case passes. Yes, now the test case passes, because if we give such an input, if we give such a transaction which has one input, now the contract will actually throw an exception, right? So this particular test case says that if an input is given, the transaction should fail, and the transaction is actually failing. And that's why this test case passes. So similarly, there are all these test cases written, and let's move on to the next test case, which says that the transaction actually should have only one output, and if you pass two outputs, the contract will fail. So let's do that. Let's say that if the transaction dot get outputs, if the size is not equal to, let's say, 1, I'm going to throw an exception saying the output size, let's say, has to be always 1, right? So now let's run this test case and see if we've correctly written our rule. Yes, it passes. Let's move on to the next test case. This says that the token contract, it requires one command, which is the issuance command to the transaction. So let's check that. We want to make sure that the transaction dot get commands dot size, if it is not equal to 1, again we throw an exception saying that the command size always has to be 1. I'm going to run this and see if we've correctly written. The next test case says that the contract requires the output state should be of type token state, right? So what we want to do, we want to issue a token state. So let's check that. So we want to check that if transaction dot get outputs, let's say get of 0, transaction dot get output of 0, let's say that, so this is a contract state, and what I want to do is I want to check that if the contract state, if it's an instance of token state, then we are fine. If it is not, so if it is not an instance of token state, then let's throw an exception saying that the output has to be, let's say, a token state. So let's run this test case and see if we have correctly written. Yes. So we are good over here as well. Now what we want to make sure, we want to make sure that this token state which we have issued has amount which is positive. So we'll check that. So we'll say that if this particular contract state dot get amount, right, if it is less than, let's say, 1, then we throw an exception saying that the amount is, let's say, negative. Let's run this as well. Now the next test case says that yes, this is successful. This test case, now this says that what we want to check, we want to make sure that the command which we have is of type issue command. So So we want to check that if transaction dot get commands dot get of 0 dot this get value is instance of, let's say, an issue command. So if it is not an issue command, we should ideally throw an exception, right? So we'll say that not an issue command, or basically we can say that this has to be an issue command. So let's run this and see. So yeah, this is also successful. And now the last one, which is what we want to make sure. We want to make sure that both the issuer and the owner are signers for this particular transaction. So we'll say that if transaction.getCommands.get of 0 dot get signers, and let's say that if this contains so if let's say this contains the issuer's key, then we are good. If this doesn't contain the issuer's owning key, then we are going to throw an exception saying that both should sign. So let's run this and verify as well. So this is also successful. So I think we've run all our contract states and we've completed a contract, and these are the kind of set of rules which you can add in your contract class. Now again, one thing which we've missed to do is we have to uncomment this particular annotation. So this ties this particular token state with this particular contract which we wrote as of now. So at any point of time, whenever the ledger is updated, whenever this particular state is changed, created, evolved, updated, this will be run against this particular contract, right? So we are done with the state contract, and let's move on to the flow. Now in the flow, what we are going to do is this particular flow, again, as I mentioned, this is a series of steps, and we want to issue, let's say, a note from the bank to this particular entity. To do that, the bank or the issuer is going to run this particular flow from its terminal, from its node, right? So when we run this particular flow from the issuer side, we will put in who the owner should be of this particular note and what the amount should be for this particular note. Okay, we'll take that from the user. We'll take that from the bank himself. Now this is a typical flow which you can write. Again, to create a flow in Corda, you have to extend your class from the flow logic class. At any point of time, you require the notary to check for double spends. There are APIs available to readily get notary. So as a very first step, use Service Hub to get a reference to the notary. To get the issuer, basically the issuer in our case is going to be the person who actually runs this flow. The bank is going to run this flow. So get our identity will return the issuer. Now what we are going to do is we are going to create a new state of type token state, right? And then we are going to propose a transaction. We are going to create a transaction. And once we create the transaction, we are going to pass this transaction to the contract. And then this particular transaction will be run against the contract, the set of rules which we just wrote. And if an exception is not thrown, we'll move ahead and the issuer will sign the transaction. Once he signs the transaction, the issuer will simply send the signed transaction to the counterparty. The counterparty will also perform the same things. Internally, the counterparty also does the same thing. He will also verify the same transaction will be run against the contract. He will also sign if everything is good. And then finally, the issuer will call the finality flow to actually record the transaction on the database of both the issuer and the owner. So these are the kind of flows, inbuilt flows, which you can readily use in your Corda app. And yeah, so let's do that. Let's create the new, let's say, token state. The issuer we've got it from get our identity. The owner and amount is something which we will pass in from the command line. So this is our token state. Let's create the proposal. Let's create the transaction. Let's specify what notary we want to use. For transaction, as this is an issuance transaction, there won't be any input state. Let's add the output state, which is going to be the token state. Let's also add the command, which is going to be the issue command, and let's specify who the signers will be. Signers will be the issuer and the owner. That's really it. So this is the proposal. Let's pass this proposal to the contract, and then the contract will run all these rules which we just wrote, and if everything is successful, the flow should run successfully. So let's do one thing. Let's again run all the test cases. I'm going to uncomment all the test cases, and let me run these test cases and see if the flow is successful. Here again, if you see, these are the things which we've written. This checks if the correct notary is used. This checks if it has only one output state with the correct amount. This also checks if we are running it against the contract. This checks if we have an issue command, and also this checks whether we have the required signers. So the flow is running. Once the flow is successful, we are going to deploy a local Corda network on our system, and we are going to deploy this Corda app on all the nodes within our system, and then I'm going to fire. So the flow is successful. So I think we are good to go. So let me show you how you can actually deploy this Corda app on your local system. So go to the command prompt and go to the path of your Corda app and just fire the deploy nodes command. So this deploy node command, what internally it does is, it actually deploys a local Corda network on your system. So if you see over here that these are the directories which are getting created. We have party A, party B, party C, and the notary. So these are the participants of our Corda network. For this particular Corda network, we have one party, one notary for this particular Corda network, and these are the parties which are part of the Corda network. So once all of this is created, the network is deployed. We are going to issue, let's say party A is the bank. So we'll see how we can issue a token state from, let's say, party A to party B. So let's wait for the local Corda network to be deployed. Yes, so the build is successful. So if you actually go and look at your build/nodes directory, you will see that this is the local Corda network which is deployed. You have notary which is deployed, party A is deployed, party B is deployed, party C is deployed. The Corda.jar, which is the Corda platform, is deployed on each node. And this is a Corda app, which is the contracts jar and the workflows jar. This is also deployed on each and every node. So let's start off all the nodes. To do that, go into this particular directory, which is the build/nodes directory, and just do a /run nodes. So this will start off all the nodes on your system. So let's give it some seconds for the nodes to start off. Yes. So party B has started, party C has started, Notary has started. Let's start off party A as well. Yeah, so party A has also started, right? So let's do one thing. Let's do a flow list. And here you can see that this is our tokens issue flow. So let's start off that particular flow. Let's assume that party A is the bank. And let's say, issue a note to, let's say, party B. And let's say that I want to issue a note worth, let's say, 1,000 rupees. Party B is started, notary is also started. So when I hit enter, the flow is getting executed, if you see. And then the flow is completely successful. So if I hit on run, and now we'll actually go into the database of all the parties and see if we have our token state recorded on both the parties' database. So if you hit on vault query, you can specify the So if you do a run, let's say when you do a vault query, specify the contract state type. So what we are going to say, we are going to say that I'm interested in this token state. So copy the path to the token state and just hit enter. So as you can see, this is the token state which was created on the bank node on the party A node. The issuer was party A, the owner is party B. An amount of 1,000 has been issued from party A to party B, and this was the contract which was used. So let's again fire the same command on party B side as well. Now, if you see, the same state is being created on the party B side as well. Now, if you fire the same command on party C side, you should see that though party C is within the same network, though party C is a part of the same CODA network, party C is not even aware that such a transaction took place between party A and party B. Yes. So I think that's about it from a demo perspective, from a CODA perspective for today's session. Yeah, so again, as we wrap up, few things. Please do join in CODA Leisure channel. If you have any questions, feel free to ping us over there. And secondly, we are hiring a lot. So we want good developers. And so please visit r3.com/careers or get in touch with me, Ashutosh. There are a lot of openings over here in India. So yeah, please look out for the openings. Reach out to us for any questions as well. Yeah, thank you. Thank you so much. Thanks a lot. Certification drive. So if any one of you has not received this, I think most of you have received, right? Yeah, so please scan the QR code and you will be able to actually get certified, like there's CODA and Conclave certification over this. So yeah, you can use the QR code to get free certificates.
All right, thank you everybody for joining in. I hope your masterclass was a fab session, and we will also be looking forward to one more panel discussion towards the end of the day. We'll take a break, and this is going to be a longer break. So I request you all to please join us back at sharp at 6, where we have our one final panel discussion happening in this hall for today's schedule. Thank you very much for joining in today.
Stay with me if you want it. Stay with me if you want it. Stay with me if you want it. Stay with me.
Hello and welcome back to Global Fintech Fest. Well, before we conclude for the day, we have one last session for this hall, and we are about to begin yet another but very interesting panel discussion coming up right next for you all. Thank you for joining in for this last session. All our attendees, we'd request, if you have someone you know who would like to attend the session, we can invite them over. So the topic of discussion for this panel discussion is going to be omni-channel strategy in the payment aggregation business. And we have with us Mr. Gaurish Kurgaonkar. He'd be moderating the session. Well, he's the head of Fintech Relationships, National Payments Corporation of India, NPCI. Give it up for Mr. Gaurish Kurgaonkar as I invite him up here on stage. Alongside the panelists, I'll have a quick mention for all of them. We have with us Mr. Rahul Kothari, Chief Business Officer, Razorpay. We have with us Mr. Nakul Jain, CEO and MD, Payment Services Limited, Paytm. Mr. Karthik Ganpati, CTO, BillDesk. Ms. Tanya Naik, Head Online and Omnichannel Business, Pine Labs. And Mr. Vasant Jaipal, Chief Executive Officer, CampsPay. So may we please request Mr. Moderator and of course all our panelists to join up here on the stage, and we'd request Gaurish ji to begin the session.
No.
Depends on how much time we have. We have 45 minutes, right? Yeah. Very good evening to everyone present here. Thank you for attending the panel. I know there is far more interesting events happening side by side, and we're just concluding a lot of them. But many thanks for attending this one. I think we were just talking about this. This is one of a very interesting panel that a lot of people would have attended had it not coincided with one of crazy launches that we were doing. It is, and the more you talk about it, the more ideas come onto it. UPI on credit, we've just launched, and this is a moment that we at NPCI and the industry has been waiting for over the past 2 years. It was in action for a while now, but we had to solve a lot of other threads to get this going. So we have with UPI on credit, we have actually closed the last frontier, is what I feel. In the last 7 years of UPI, what we saw is 64% of digital transactions today are on UPI, and card transactions have moved from double digits to single digits on UPI. That's a sizable change. And what remained on UPI on cards was a large ticket transaction. With UPI on credit coming in, I think the large ticket transactions will also simultaneously move. So where does that leave us with cards? So value was largely on cards, and which I see now moving to UPI on credit. We have, what we have done is we have solved the problem, I believe, on the consumer side. Today, consumer has access to all the channels, and it's become omni-channel for him. But one device can do offline, one device can do online. You can scan QR, you can make the payments. But while we've solved the problem on the customer side, what about the problem on the merchant side? And I would like to invite views from all of you on how do you at your organization intend to solve this omni-channel payments in your space. So let me start with Karthik on this. Bringing his views in to start with, I think would be very, very interesting. So Karthik, here you go. The stage is all yours.
Thanks, Gaurish. So prima facie, this topic on omni-channel has been around for a long time, actually. You know, as I would say, it's the same customer who wants to buy something. It's the same merchant that is really selling the service or the product. It's normally always the same product that the merchant is selling. And in that context, there is really no reason why there is a distinction between an offline and an online kind of, you know, existence. Having said that, unconsciously, the way providers have worked, in the past it was primarily the banks that would service it, right? And they would create silos to say that for certain kind of merchants who are largely online, we will offer them online products. And for certain kind of merchants who are offline, we will have offline ways and means for them to collect payments. It's only now that what one is seeing a convergence of the two, because you want to mine the same data of the customer, you want to give probably the same user experience. The customer is demanding a experience which is similar to what he or she is experiencing on one world versus the other, and therefore a lot of innovation driving this convergence. So omni-channel is a very, very clear direction where all parties, all providers will have to evolve. But having said that, the way we would probably think about it is that it's not a compulsion for every entity to start thinking about omni-channel ASAP immediately. It finally boils down to my mind, also who's your customer?
Exactly.
What kind of expectation the customer currently has and is going to have in the future. And then depending on that, you could evolve a line of thinking or a product or an implementation strategy which precisely mirrors that. So I think that's the way it should probably go.
Right. Thank you for that. Nakul, you know, Paytm has always been, you know, one of the leading entities in omni-channel. You know, while you know we had that conversation and you said that we're still not there. Paytm is still not there. But you know, what would be your strategy going forward on this? You know?
So Gaurish, see, we are in interesting times. First of all, on the payment space, and we should feel proud, as in you know, each one of us, that you know we're one of the fastest payment markets across the world. Many developed countries also today take much longer than we do in the real-time payment space. And I think RBI, NPCI, and many payment companies like Paytm have a large role to play in it, and we should be happy about it. That's something that we've completely revolutionized the market. Now, what's in it for the merchant? I guess, like you know, we heard, things are changing. Consumer is the same, so it's you know, inevitable for the companies to start treating the merchant as one. You know, as the consumer walks in, and I'll give you a simple example, it'll make things easier. Now, a customer could be purchasing a white good, and you know, he or she could be browsing at home, and then deciding to just walk into you know, a store. You know, at that point of time, may find the product interesting, could purchase it from the store itself through a EDC or make an online payment, or decide that let me go back home, take a view from my people at home, and then come back and browse online, then make a payment online, or look at some deals that he or she can get, or order a COD, and when the product gets delivered, make a payment through a QR code. You know, so now in this entire journey that I spoke about is actually a real journey, and many of us have gone through. There is online to offline to online to offline.
Yeah.
And that's how seamless the payment companies will have to become eventually. I agree that there has to be intent. Of course, there has to be, you know, the stakeholders have to be aligned. But eventual goal has to be that the companies have to become omni over a period of time, because that's how the industry will evolve. Now, how do we see omni? At least in our context, I think on one side, we offer a full stack of offline products, which is QR, Soundbox, EDC. Yes. On the online side, we have the whole payment aggregation, and of course then
we have the unique advantage of our own app. You know, and that's where truly the Omni experience comes, because you know, so you have the entire payment options as the first stack. Over that, we give the entire affordability and the issued instruments. So whether it is BNPL, wallet, we offer. And over and above that, it's our app where you can, a merchant can come and actually target customers through, you know, it's the best way to target customers to do campaigns, do deals GV with us. I think that's where we really want to go as an, I think that's the way forward for each one of us if you really want to become omni-channel. So I guess that's the way, Gaurish, I look at it.
No, great. I agree with you completely. In fact, you touched upon your customer convenience, and I think your Soundbox is one of the game changers in terms of your customer convenience. You know, I think it's just brilliant to see that, and to see the adoption of it by the retailers. You know, it's just brilliant. Coming to Tanya, you know, obviously Pine has been extremely active in this space, and with the recent acquisition, and obviously with Setu coming in, how has your strategy evolved in this?
I mean, maybe a little bit of backstory about how that all began, right? Because, and Karthik touched upon it, we follow where the consumer goes. So in order for the most demanding consumer to give the best experience, merchants need to evolve as well. And as payment companies, all of us have that responsibility to provide for a seamless omni-channel experience. Now, maybe a few years ago, having a neighborhood grocer send you a message telling you that you can now pay through a payment link, and not just that, if you pay through a certain payment mode, I would give you a certain loyalty reward associated with it, in itself is a huge testament to the fact that omni-channel has actually proliferated to really nearby neighborhood grocery stores. And so in order for us to cater to that, the way to look at omni-channel is to actually revamp the way you're looking at not just payments, but the entire merchant life cycle and his experience associated with payment. And payment is, by the way, a byproduct of what you will be engaging with the merchant on. So whether it is the way you're onboarding your merchant today as payment companies, and you know, Nakul, you spoke about it, all of us have a certain online mode of operating, we have an offline mode of operating, but if the merchant is common and he wants you to offer all sorts of payment modes, then you need to onboard him seamlessly. Once you do that, how much more can you give him at point of sale? What all can you do with him, whether it is BNPL, whether it is checkout, whether it is maybe giving him PCI DSS compliant online web checkout, whether it is creating an online store for him. All of this is associated with creating that merchant experience. Finally, the settlement of it as well, right? I mean, most of our merchants, I can tell you, today struggle with the fact that they have so many disparate payment gateways, and they have so many disparate settlements coming to them. They have so many offline service providers who are, you know, contracting with them, and there really is no way for them to get a unified settlement and reconciliation done. And I think that even if we solve for it as one single payments provider, it's a huge bonus to our merchants. So whether it's in the form of unification of dashboards, whether it's in the form of unified settlements, onboarding, actual payment processing, there's a lot to be done there. And I think because consumers demand it, merchants demand it, and therefore payment companies like us have a lot to do.
Company's point of view. The second, I think, even when the company started evolving, offline was pretty big space even before the online came in. And for the companies offline, big space, they are focusing on that. For online, new companies came in, big opportunities in online, and therefore they kind of focused on that. So there's a second reason I think still a lot of companies did not focus a lot on omnichannel so far. Third is also the kind of stakeholders, and while you initially spoke about like it makes a lot of sense from the consumer perspective, why does not move from the merchant perspective? In merchant, stakeholders typically for offline and online are different. Historically, like offline, while for the offline payments, while experience was important, typically a customer would not walk away because his card did not work on the POS machine. Typically, the shopkeeper would say, okay, can you try again? Can you try a different card, or eventually pay cash? Whereas in online, it's very different. If say a transaction fails, the merchant loses the revenue. And therefore, the focus of the stakeholders at the merchant side has been very different for online versus offline. And the way we have seen that, typically for offline, typically the finance side of the business are the major stakeholders. For online, typically product side of things are the major stakeholders. And while these things happen, I think over last 3 or 4 years, things have worked in a way where all these barriers are breaking. For example, on tech side of things, while card rails might be different and still converging, for things like UPI, for things like BNPL, the tech rails for online, offline is pretty much same. So that the barrier is kind of, breaking there. Even if you think from, say, different companies' perspective, today, online in terms of volumes, almost like maybe not as big as offline. Offline is probably $75 billion per month and online probably $25 billion per month from a P2M payments perspective. Both the markets are significant enough where now companies need to look at the other side of business as well. So I think that's the second reason why companies are strategically thinking about omnichannel far more than what they were thinking earlier. Now when I think about the stakeholders from the merchant's perspective, the what I talked about. Now, in most of our discussions, we see both finance and product folks involved into both online and offline. And the way Tanya said, there are finance folks who now care about the experience of their own teams itself. Why do we need different settlement reports? Reconciliation is a problem. Why don't we solve for it? Similarly, a lot of offline payments also moving into different form factors other than POS, because experience becomes more and more important. So I think with all these barriers breaking, with consumers also now being far more conscious about their loyalty and rewards, and asking that not only payment instruments, but my point should also work in offline, online seamlessly. So I think all those things are kind of working very closely together, and I think it's right now is the inflection point where I think from where omnichannel should kind of scale very, very, very fast. Yeah.
Yeah, thank you so much for that. I think that is if we have those sort of thought processes, I think it will scale up much faster, and it has to be across the ecosystem. I think that will help this scale faster. Coming to the completely different and centered perspective on this from a sector point of view, I think Vasanji, what are your thoughts on this? How do you see this pan out for you?
Yeah, firstly, I agree with points that all the panelists made here. I think different perspective, different dimension. The space that I come from, I think it's a very long road when it comes to creating a omnichannel kind of an experience. Even though I can talk a little bit more about how this whole thing is evolving, definitely the proliferation of omnichannel is really happening. Have we really achieved what we want to achieve in terms of creating a seamless experience? I think two aspects to it. One is we look at it from a merchant point of view. Other thing is looking at it from a customer and the experience point of view, right? Simple thing, simple example like, Apple phone purchase today. I mean, many of us travel to other places and go and pick up a phone. You can, place a order online and then go and pick it up. That experience is seamless. But anything else beyond that is not. There are about hundreds of payment methods today. All are absolutely disconnected. There's no data symmetry in all of these things. A little bit of history. So how this all happened? So this payment platforms, the rails that we created, it all started with pretty much, like he's mentioned, offline a lot. Then slowly we are moving towards more and more online transaction today. All these ecosystems are run, maintained, managed by different entities, different platforms, banks involved, platforms like NPCI and so on and so forth. For all this to come together, it's going to be a real challenge we're going to face. It is going to be a very tough call. It is not that all players need to adapt an omni-channel strategy. At the same time, I see a lot of potential players getting together in the form of, even though there's competition and everything else, there is a bit of cooperation that is required, and we don't have to boil the ocean. I think there is a way to collaborate and then create a true experience to the end customers. That's a background I want to give later with you. Talking about our industry, there is very few payment methods that are being used today, okay? A lot of restrictions, a lot of constraints that we have, primarily coming through from a regulatory requirements. So we serve an ecosystem where there are about 30 trillion worth of transactions, pay in and payouts happen. And it's a large amount of number if you look at it. But what are the payment methods that we allow our customers, the investors, insured, especially the investors in this case? There are only two major payment methods that we look at. And again, when it comes to the recurring payments, there are only a few flavors that we do. Only the later years, the recent years, we have been able to introduce all of this and then trying to do this. Again, it's a long way for us to help an investor, for example, to switch between two payment methods. Okay, that is something that is a bit stated intent for a player like us. it's rather easier said than done. The reason again is that we need to get the ecosystem together. Today, I think everything works as a silo. Even between two banks, the method that is used to process the transaction is different. Okay, we talk about open banking, we talk about all of this. So at the end of the day, there is need for us to look at some sort of a guideline, policy, and the regulatory push as well. Okay, and coming together of all this thing, we do have the forums for us to take up those initiatives. IMA, PCI, we have a lot of good conversations today. I think that's a way to do it. To my mind, it's a long journey, but we will get it done.
Thank you so much for bringing that perspective. I think it was very important to understand how it looks from that, that sector point of view. But he lightly touched upon the regulatory input and regulatory push required to make this happen. And I think a common thing that came across was obviously the need for a layer which is common across all the different payment aggregators. Maybe the layer can be reconciliation, for that matter, to make it easy for your end customer. So coming to Nakul, what do you think is required more from a layer perspective that the regulator can look at, and how do you see that happening?
Koresh, I think among various things, I strongly believe that one place that we can really work on, and when I say we, I mean the entire fintech, PAs, banks. I think we all can work together is to create a kind of a repository. It can be a consortium. We can work on a negative repository. I think that's very, very critical because we were discussing in the room today that how a merchant can exit from one and can enter into another ecosystem, and of course there are different practices, and that brings me to the second point: can we have common risk practices being followed? I think there is a need there, and of course the overall governance structure around it. I think that's one piece which I definitely feel that can really help. The other piece is around the whole working together with the telecom companies. This whole piece of banks, again, fintechs, telecom companies working together, because frauds on social re-engineering that are happening. And of course, DIU guidelines have called it out that they want us to work together. So I think that these are two things I genuinely believe that it's happened, but it's not really happened at the length that can help the whole payment industry to grow. Yeah.
So coming to Karthik, I think you've been part of many cohorts where this has been discussed, this has been debated, and without really a structured outcome or outcome that not the industry expected. So where do you how do you think that we can make it happen? What is the push that is required? And Nakul lightly touched upon it. So how do you see it moving?
So prima facie, what you will see or what we've seen is regulation is already there in respect of the payment method. Right. So typically, whether it's offline or online, one set of regulation will be, let's say, and the networks also bring in their set of standards and regulation. Right. It is regulation. AMV co-compliance, acceptance of PIN in a certain manner, the way a QR standard should be. So from a payment acceptance perspective, depending on the payment method, and Vasantji kind of commented on the complexity of different payment instruments and methods, it's integral to innovation in that space. If you just had one rail, imagine, I would think UPI would have never happened. Yeah. So you have a rail, people experiment on it, then there are 2-3 more rails that happen, you work on that on top of it, and you will then have innovation. So traditionally there has been regulation on the payment rail, because the way the regulation also is there is to make sure that there is no fraud, rightly like Nakul pointed. He was also referring to a bad merchant, which is where there can be consortium and understanding and so on. But having said that, regulation in terms of safety of a transaction is where can be, we can want regulation to come in. But there are a lot of other things which is the convergence of online and offline. And I think those should be just left alone as opposed to regulation coming in. Like you could have innovation in reconciliation or in billing or in integration or in just a bunch of other offerings. But I don't think there should be any regulation because that it's best to evolve and see how it goes. One thing, however, what might be going forward very important, given the way the market is going and how everyone's looking at a convergence of omni-channel, is about the data. So what is likely to happen is more and more at the offline store, there will be players, merchants wanting to collect more data from customers. And we are we'll soon be 2 billion people, and it's very easy. There are, I think almost every place I go to, I refuse to give my mobile number because they all have an incentive to get your number, your data, and your name, and record it, and maybe create registrations. So there have to be some standards that are brought in, like how will that data be taken? How's the consent? Online, we've now got the consent-driven mechanism already in place.
Yes.
So I think offline consent and what data can be shared, how they will store it, how they can then in turn share it between providers, I think all that becomes a very, very important topic. And so that's where I think regulation could help.
Yeah, Tanya, as a as a fairly large offline player at this point of time, and Karthik touched upon the data, which is obviously being collected at point of sales largely in the large format stores. So, what are your views on this?
No, I think, he made a fantastic point. But the only thing there is that if the data is being collected by the company who today may have collected in an online or an offline format, A, can I keep it secure enough? And B, do I need to keep collecting it again and again? So the fact of the matter is, if I have a repository, and by the way, all of us, especially in the online payments world, are going through a huge regulatory change in the form of tokenization. I'm actually going to be tokenizing every single card in the online ecosystem, whoever transacts with me. Why should that not now be made available in the offline format as well? And why should I not be able to innovate on that? So what I would say is that when you have access to this data, which is obviously stored in the most secure form as defined by the regulator, it should have the capability to transcend into another card-present ecosystem also. So that also would mean that the same customer, therefore, has a much secure way of storing his credentials. And because there are players like us who are operating both in the online and offline world, we do have a much better way of managing their data and B, providing insights to merchants to better manage their customers. So from a regulatory standpoint, I would say that whilst there has been a certain impetus to making secure transactions happen online, maybe whilst offline anyways is card present, maybe the same impetus is given by leveraging the data already available online, be made available offline as well, whilst you're catering to, regulations. And as far as, Vasanji's point was concerned, it's a very interesting segment because it has predominantly been a bank-to-bank transfer ecosystem. It has also been an ecosystem where SEBI has defined how certain transactions need to happen. And then RBI, because it has banking ecosystem underneath it, has been defining how those transactions should happen. Right. So obviously, now that you want more digitization of those transactions to happen, you need to be able to proliferate the security associated with that bank transaction in the card world also. So I think as all of us, we should be innovating in that space. Okay, fine, if I need a third-party validation to happen on every account, I should be able to do it even in a debit card. So I think all of us have that responsibility, and maybe the regulation needs to be able to provide for such kind of innovation even in traditional market capital market segments. That's what I would say.
That's a great point, Tanya. Rahul, obviously, so obviously Razorpay, operates in similar segment. So largely in the online space. So just want to hear your views on how this can come in.
Yeah. So first, I think from a regulatory perspective, in general, we are seeing far more action on the online side than on the offline side, and I think for the right reasons, because of online has been growing very fast, and while offline frameworks from regulation perspective are pretty strong, in online, how this translate and how those kind of get applicable is seeing some action. But definitely I agree with Tanya's point, like as we go forward, those two frameworks should converge for online, offline, for omni-channel. Now, this is from the regulations from, say, the payments perspective, but if we really think about omni-channel, I think we are seeing only a part of, when we look only at payments, it's only a part of the entire solution. If you think from merchant's perspective, omni-channel is not just payments. Omni-channel is about also, say, how does he manage his inventory in offline, online world together? How does he solve for, say, the logistics issues in online, offline work together? How does he think about acceptance of payment in, say, cash on delivery versus payment on store together? So when we just think about payments, I think it's in some ways relatively narrow view. If we really want to create that impact for the merchant where they start thinking about omnichannel far more holistically, I think as of now, even if you think about, say, the companies like the search engines, or even, say, some of the companies like narrow companies like shopping carts, none of are kind of actually looking at end-to-end solution of this omnichannel problem. And I think the reason is because because this problem is fairly broad. Different companies are focusing on their sectors and really trying to solve for those. But if we really want to take it a level up and solve for it, and I think maybe one of the ways is to have some kind of standardization where all these different things can come together, single framework, single APIs kind of thing. Like, for example, through single integrations, you are able to take variables for payments as well, for inventory as well, for something specific logistics as well. And I think that standardization is something probably at some point regulators can enable. Because ultimately, when we go from omnichannel phase 1 to phase 2, it will not be just a payments problem, but it will be far broader problem for the merchants. And that's what I think about it.
Vasanji, your views on this? I mean, from you touched upon regulatory briefly, but what are the radical changes that you think would help the ecosystem in general, the ecosystem that you cater to?
Yeah, firstly, I think the regulators are looking at the payment, the overall ecosystem in the right way today. I think we heard about this EMV and all those kind of standards. Typically, those are borrowed terms. I personally have been hearing this right from year 2000, okay? The real implementation of all of this happened somewhere in the late 2000s, let's say 2008 and 9. It would happen in sporadic, zones, let's say, only the point of sale location, not on the ATM, okay? So a lot of these gaps that are there. Today, the regulator is looking at very, very differently, okay? What is very important for the ecosystem here? And there is a sense of people coming together. That is something that is a very encouraging thing that you're looking at. Two is, I don't call for any strict regulation or anything. It's more to do with creating the right kind of guidelines. That is the important point. I think Tanya rightly pointed out. It's a pity that we have close to 1 billion cards in this country. We are not able to exploit that payment method to serve one of the most matured ecosystem. Okay, investors are the most educated lot, the literate lot. They are not allowed to do a card-based transaction, which otherwise could be the easiest ways to solve. Early on, in my own way, I think in banks, we have the way we have implemented the systems. There is a very clear correlation between card and the account number. That linkage is still available. Just that all of us to go back and see what is being created on the rails and reactivate some of these things. Like again, I'm a major fan of saying that let's all get together and make it happen. That's the only way to do. I think regulators are going to be very happy about our suggestions and recommendations. And that will take us a long way when it comes to making this omni-channel strategy of payments a reality.
Right. So, due to positive time, one thing I wanted to get, and that came out again and again, Rahul spoke about it. I think on the standards, and obviously AMVCO is a standard, on aggregation, do you think that there is scope? And I know it's like moving a mountain, but Karthik, do you think that there is a play for creating this, and how do you think that it will aid the ecosystem?
So I think there's no need to kind of over-engineer a standard, to my mind, because in pocket standards are already getting created.
Yeah.
Like for credit, you have standards for, like the point that Rahul said, ONDC will come with its own set of standards because buyer-seller apps will be part of an ecosystem.
Exactly.
They will push in data in a certain way. Discovery will happen in another way.
Yeah.
Then account aggregation will help with data sharing kind of standards. Payment already we have standards. So that works. Maybe what might be useful is because all these entities are developing their own standards.
Correct.
What we could look at is, and this I'm just picking a leaf from some other conference where people had discussed this. We could have good technology people and policy people think of what could be platform-led, layer-led standards. So, for instance, a framework, right? So the ISO 20022, whatever for payments, is one such standard, but it's not typically been adopted in various implementations. People use XML, people use ISO 8583, then there is REST in different ways, then there are just plain HTTP. So all of that kind of creates what I would term as a khichdi. So maybe data exchange standards at a very superior level, and it always helps. The cost of reinventing is then much lower. So different entities could pick from that standard and say, look, that framework, apply it and then move forward. So it's like the benefit that if you as one entity are creating a set of interfaces and you want to give another set of interfaces to the same external client, sometimes it's very easy to say, hey, look, apply the same thing, everything will be the same, and you just have to connect using these different, let's say, interface spec. So that might be useful.
Awesome. Thank you so much for that. And I think Vasanji, requested that he has some serious views on this. So let's hear it from him.
Sure. So I'll just take away from what Karthik said. So there are two things that we need to keep in mind. We are talking about tokenization today. This is going to cover only one piece of the, this payment method, which is cards.
Yeah.
Why can't we create this tokenization across the payment method? It's an easy way to think, but it's a very logical way also to think. We can think about creating references for all the transactions, irrespective of which channel the payment transaction happens. It is not very difficult. I'll give a very useful, meaningful reference point. Today, account aggregation, the promise of account aggregation today is to be able to aggregate all the data which is coming through 18 different sources. And then with a consent layer kicking in every level of our conversation, it's easy for us to think even the transaction logs, transaction reference points, all of that can be combined, aggregated. That will be a very powerful way to look at it. Again, I go back to my original point. All this can happen provided we have create standards is what we're talking about.
Yes.
I would say that we have to create common standards. That is extremely important. And that's my final word. Thanks.
Thank you so much for that. Tanya, your thoughts on this?
I mean, if I were to summarize this, the one network which actually can standardize commerce in general is ONDC. I truly believe it.
Absolutely.
Whether it is from the point of view of discovery for the buyer, whether it is management of the seller's inventory, whether it is connectivity in terms of payments, whether it's reconciliation and settlements, they're literally disputes and dispute resolution management. I believe if it is implemented in the manner that it is expected to, it will truly create the gold standard for managing omni-channel commerce as a whole. And from what I understand is that beyond just retail and quick commerce, there will be use cases which will include capital market transactions, in some time, bill payments. I mean, multiple such use cases which are in the offing. So I would think that in terms of standardization when it comes to Omni, it would be ONDC in my view.
Awesome. Nakul?
No, I agree with Tanya. I think ONDC is an interesting case, and it has to see how it evolves over a period of time. Yeah. But everything that she spoke about, I guess, we just have to see how it plays through and how it has a large play in the ecosystem. I'm only worried about how the margins will be for the players. Let me be very, let me use little interesting business stuff also over here. But I guess that's, I just hope only the courier guys don't end up making money then.
Thank you so much for that. Lastly, coming to you, Rahul, your views on how this would help.
No, so I think agree with everyone's views, and but while I agree with it, I think the just thought comes in mind: be very careful for what you wish for; it might come true. Like the way Nakul said, right? The margins might get impacted, but also I think standardization has its use when you are really trying to get a flywheel going. And there has to be a right time where those standardization is okay, you can follow, but you don't need to, otherwise innovation gets curtailed. And I think that's the only thing kind of, that I think beyond that, but otherwise definitely aligned with we should do something on standardization.
Thank you so much for that. And then, pretty awesome to just hear these views, and, hopefully someone is listening, and, we'll obviously get some action on all these things. Right now, what we are doing is basically we're standing between the audience and the Sundowner. So all of you are please invited to the Sundowner, which is happening for us. NPCI is holding a Sundowner. Please, everybody's welcome. I'll open it up for a couple of questions from the audience. Anybody would like to, have a couple of questions that we can pose to the panel today?
Hi, and that was a very insightful session. But just one question: how do you see you guys are on the ground and acquiring merchants day in day out? So how do you see the acceptance on the merchant side on the the omni-channel strategy as we speak? So any thoughts around that? How are they taking it? Open to anyone, like.
Yeah, Rahul.
So there are I think I would say there are only very few very tech-centric companies from where we see a pull for omni-channel. For most of other businesses, whether traditional businesses or whether those are slightly, say, smaller businesses, as of now, I do not see a strong demand for it. And I think this is also a bit of a kind of letting the merchants know what are the benefits out of it and how do they kind of really make the best of it. I think it's also a function of some of the, how business operates a bit different for online and offline. They were saying earlier, like the stakeholders are different, probably finance versus product. And also, I think in general, the GTM strategies for the companies are very different in online, offline world. Online world for the smaller merchants typically is a marketing-led strategy, whereas for the offline world, it's more of a feet-on-street-led strategy. And therefore, I think it will take probably companies to combine the two strategies at scale and get the right kind of pull from the ecosystem.
Yeah, sure.
I think, a lot of it has to do with also how, as payment companies, we make the whole process easier, okay? At the end of the day, the merchant wants to accept payments and wants to see a unified process of accepting payments. Now, as he rightfully said, by the way, every merchant who is a tech-savvy merchant and who is, by the way, already present online, offline, wants an omni-channel strategy because he does want to see data in one place. He does go to orchestration partners to collate data in one place. So the demand is there, however, in enterprise-heavy merchants. As far as the long tail is concerned, and by the way, you just look at the proliferation of startups who are enabling these stores to go online, the demand is definitely there. Now, how it is that payment companies enable a better seamless experience, it's really up to us. So I would say right now, it is predominantly held at the enterprise layer, but it is up to us to proliferate this to the mid-market and SMB layer.
I would like to hear from Nakul on this.
So I have a point here, and I'm just adding on to what Rahul and Tanya said. See, also you have to be moving around with the customer in their life cycle. So a merchant may start off as a physical store and may over a period of time evolve into a full-fledged online merchant. And it can happen the other way around, that a merchant may start off as like a quick ice cream app on Instagram, and as it becomes bigger, may have multiple stores across Bombay, Delhi, and then they want offline solutions. So can, as a payment company, you catch the full leg of the merchant and move around with them in their life cycle? I think that's critical. So it's very hard to say today whether this merchant will evolve or not, but you have to be around the merchant and provide the solution along their life cycle. I think that's critical.
Thank you so much for that. I think there we have it, guys. Largely from the points that I would like to bring forward, hearing all the speakers, is that yes, there is, omni-channel is definitely the way forward in terms of strategy. But yes, you have to look at what your customer wants and deliver to that. Not necessarily that everybody goes omni-channel, but yes, I mean, if you have the customer, I mean, and if there is a need for it, I think it needs to be addressed. Otherwise, the customer might end up, moving. Also, there is obviously, a larger need to combine resources at this point of time, creating a unified layer maybe on, solving some of the end customer problems. Yes, there is also a case for creating standards. I think that would take away a lot of pain from the ecosystem. Last closing remarks from you.
Okay, just on a follow point on this, from a merchant point of view, right? It makes sense. Let's say the example for a mature merchant. It makes a lot of sense for them to go with omni-channel strategy with a partner who can provide all types of payments under one umbrella. Okay, the reason for that is the number of integration that you do, right? The time it takes to go live to the market, right? All those can be cut back, and you get one view. Today, majority, unless in some very developed retailer kind of a scenario, they don't get one view at all about their customer. There are a lot of research study available. Harvard Business Review published a report on this. Going by an omni-channel strategy, not just for payments, even otherwise, their ability to convert sales, it's about 10% over more when it comes to omni-channel as compared to a silo-based kind of approach. There are many ways that you need to look at it. I take the point. The merchant needs to be matured. They have a tech savvy. They should be able to, first of all, zero down to the right kind of partner. That is very, very critical. Then the rest is the play.
All right, that's about it, folks. Thank you so much to all the panelists for giving your time and sharing your point of views. It was great.
Well, thank you, and I request our panelists to please stand up for a group picture, a picture-perfect moment to summarize this session and also the day. It's been quite a productive day for each one of us. And without any further ado, ladies and gentlemen, we would like to conclude today's productive day here. And I'm sure a lot of networking can happen one-on-one post all the sessions. And day 2 awaits you all. So once again, on behalf of Global Fintech Fest, this is your host Drashti signing off. May you have a very great evening ahead. Thank you.